In view of the various developments in financial markets and market infrastructure over the past few years, we shall be setting up a working group with representation from various stakeholders to undertake a comprehensive review of trading and settlement timing of markets regulated by the Reserve Bank. There are some 5 such markets which have different timings. The group shall submit its report by 30th April this year. To conclude, considering the existing growth inflation dynamics, the MPC, as I mentioned earlier, while continuing with the neutral stance, felt that a less restrictive monetary policy is more appropriate at this current juncture. The MPC will take a decision in each of its future meetings based on a fresh assessment of the macroeconomic outlook. We are committed to conduct monetary policy and take such measures as appropriate, which are timely, carefully calibrated, and clearly communicated to facilitate conducive macroeconomic conditions that reinforce price stability, sustained economic growth, and financial stability. Thank you, Namaskar, and Jai Hind.
All right, that was the first speech from Governor Malhotra after taking charge, and of course the 25 basis point rate cut came, of course a tweak in rates as expected, but Neeraj, no poem, no quote in the end, just to see what the new governor's style is. I would say very to the point, very business-like, very, very specific. Said Q3 numbers have come in, and business as usual, and means business.
So 25 on expected lines. I thought, reasonably dovish, if you will, maybe not as much, but I think our guess will be better placed. But 25 basis points was the need of the Arthamana, so I think that's done. And let's see if there are any other non-policy measures taken in the run-up to March.
I would not call it dovish. I don't know, but we'll ask Katrina L. I will ask Katrina L joining us, Director Economic Research, Moody's Analytics, and it's so great to have you on the show, Katrina, as we break down what the monetary policy is talking about. Neeraj and I, since this morning, have been debating on whether this will be dovish commentary or not, because the 25 basis point rate cut was largely expected. Would love to know your take on that and your first reactions.
Yes, I think it's a positive development that the RBI has finally decided to cut rates and deliver that 25 basis point reduction. I think what's clear is that, there's a really difficult balance that they've got at the moment. On the one hand, they do have, domestic demand, which does need that additional support. But on the other hand, they do have that really weak rupee that they're balancing as well. And it seems through today's decision that they are prioritizing strengthening and working towards improving domestic demand over the next couple of months. So in terms of forward guidance, I'm not sure at this point we can be really clear of whether this was a dovish or not, because let's remember that this decision was largely anticipated by markets. And I think that the RBI is treading really carefully about any forward guidance, just because there's a whole lot of uncertainty in the external environment, particularly around tariffs and how inflationary or not they will be, and also the potential implications of that weak rupee and how that's going to feed through to domestic inflation in India. So I think they're continuing to tread really carefully and will be guided by the data, in particular the inflation data and also the growth related data as well, to see how quickly they need to continue with this easing cycle.
Some calls to banks as well, by the way, so that was the interesting piece and watch out for. But Aditi Nair is here. Aditi, what did you make of the policy statement? 25 basis points on expected lines. Would you call this a dovish policy, a neutral policy with a rate cut? How would you classify it? And what stood out from the statement for you?
So I definitely won't call it dovish. He did mention upside risks to inflation. I think there was a very hopeful note which was struck in a sense, talking about resilience amidst global uncertainties, etc. But it was a very pragmatic policy, and I think overall very much in line with what we were expecting, that we'll get a rate cut. without any change in stance. And even towards the end, the mention that we're going to look at the outlook every single time to decide what we're going to do. I think that's absolutely the right approach. In any case, this rate cut cycle is expected to be very shallow. We're not expecting more than one more rate cut. So there's very little point actually to change the stance to accommodative. So I think it's much better that we've retained it at neutral. And this gives all the flexibility to the MPC to decide policy after policy what looks best for the Indian economy. And a couple of more points, 4.2% CPI inflation for next year, that's in line with our own estimate. And what's that's basically suggesting is that neither are the tax cuts expected to be very inflationary. And while, of course, the upside risks to inflation were mentioned, but again, similar to our own view, that the exchange rate depreciation will have a much bigger impact on the WPI and a smaller and more lagged and delayed impact on the CPI. So while upside risks were mentioned, the CPI inflation projection actually for FY26 has been mentioned at 4.2%, which is in line with our own extant projection as well.
Aditi, hi, Tamanna here. Just wondering on what you made of the GDP forecast and the inflation forecast. They've stuck to the inflation forecast. I think GDP second quarter has been tweaked down a little. Just your reading into where Governor Malhotra thinks growth will go.
So actually, the GDP growth forecast, I think, is a little bit on the higher side. We are at 6.5% each for FY25 and FY26. I suppose the MPC has just taken the NSO first advanced estimate of 6.4% instead of giving a new estimate now.
Aditi, you will have to excuse me. So sorry, I just want you to complete your statement, but we have Mr. K.K. Mistry on the phone line, so I'll have to go to him for a minute and get his view first, and then we'll continue the conversation. Mr. Mistry, thanks for joining in and taking the time out. What did you make of this? Not dovish seems to be a consensus.
I think completely along expected lines. That given the global economic uncertainty, the trade wars going on, and all of that, the stance remains unchanged, and a 0.25% reduction in interest rates will help, hopefully help boost growth further. That coupled with the fact that existing home loan customers will get the benefit of the 25 basis points cut in rates, particularly, obviously customers who are linked to the repo rate, which is the bulk of the customers. So all in all, as expected, good policy. The stance continues unchanged, and I think we will now start seeing the growth pick up in the system.
Mr. Mistry, hi, Tamanna here. In terms of the outlook we saw from the governor, and I'm asking you this because the 25 basis point rate cut was widely expected, priced in by the market and everyone who watches this event very closely. But on the outlook of whether we will see another 25 or another 50 basis point this calendar year, what sense did you get from what Governor Malhotra was saying? And of course, his first speech was being watched very, very closely.
I think the governor said that growth is picking up in the system. He also said that the outlook on inflation is neutral. I don't think he seemed to be very worried about inflation. And if we had good monsoons next year, then I think you would see 2 more rate cuts of 25 bips each. If you don't see good monsoons, my expectation is about 25. So anything between 50 and 75 for the year would be my expectation, depending on data, depending on how things work out.
Are you in agreement with the growth outlook? Just before we came to you, sir, Aditi Nair was giving her view that she thinks that the growth outlook is a little on the optimistic side. Are you seeing yourself signs that there would be this kind of a recovery in growth?
I think there will be a recovery. I personally think, and I may be differing from the earlier view, I think you may see even a pickup in growth beyond the 6.7% that RBI talked about for next year. You could see 6.7 probably getting closer to 6.8, or if you're lucky, maybe a little more than that. Obviously, depending upon good monsoons and the macroeconomic environment in the rest of the world not getting completely beaten down.
Mistry, would you have, considering that March is around the corner and liquidity conditions, though RBI has done enough measures, but would you have hoped for some more measures around liquidity specifically to be announced, or can they be done beyond the policy as well?
We've seen that liquidity measures are always usually announced beyond the policy. The only liquidity measure really announced in the policy is a cut in the CRR rate. We saw a cut in the CRR rate in the last policy. and therefore I don't think one would have expected a CRR cut this time. But you saw that a couple of weeks ago, not even a couple of weeks ago, about 8-10 days ago, RBI, through these OMO operations, has injected or will be injecting a lot of liquidity into the system. This quarter also important because this is the fourth quarter and you will see the largest installment of advance tax being paid in the current quarter.
Got it. Mr. Mistry, just one last question from mine. In the two instances that you spoke about your constructive opinion on growth, you mentioned domestic factors completely. Could global growth worries bring a question mark to even the RBI's estimate? Forget your assessment that it could be higher as well.
Look, I think globally we are living in a world of complete uncertainty. No one knows what's going to happen 3 months, 4 months from now. We've never seen this kind of global uncertainty any time in the near future.
Right.
So global factors will affect our growth all over the world. India will be least affected. I repeat, least affected compared to any other big country, simply because our domestic economy is very strong. And the measures taken in the budget in terms of leaving money in the hands of people will push consumption. If consumption picks up, local consumption picks up, then that itself will create need for more capacity, more products being produced, and therefore more investment. So whilst there will be an effect, I still think that despite the global environment, we should still be looking at a growth maybe marginally higher than what RBI has said. Unless there is a very major global catastrophe, which we can't predict, or oil prices shoot up beyond what we are expecting.
Just one last point, Mr. Mistry. Are you expecting a fair enough pass-through of this rate cut? Because that always becomes a question.
I would think so. I mean, the rates, the repo rate, most of the loans are now linked to repo rate, particularly the housing loans. So there it is absolutely automatic.
Okay. Thank you so much. KK Mistry there on his first view on the policy. Let me come back to Aditi Nair. And Aditi, sorry we had to interrupt you there because we just had that 2 minutes with Mr. Mistry. But do complete your point. And I think it's an important one to underscore why you think that the RBI is maybe being a little optimistic on the growth outlook.
So just to kind of go back a step, certainly we expect growth is going to rebound from the lows that we saw in Q2. There's no doubt about that. For FY25, the NSO has placed the advanced estimate at 6.4%, which the MPC has probably taken as a given right now. And that's what they normally do. Then they don't give a fresh estimate of their own for the current year once the advanced estimate is there. So on 6.4%, they've indicated a 6.7% growth for next year. Our house view at ICRA baseline view is 6.5% each for both these years. So that's why I'm saying they're a tad higher than where we are. And at 6.7%, they're actually quite close to the upper end of the Eco Survey's 6.3 to 6.8% range as well. Domestic demand is recovering. Rural is expected to be better, much steadier this year. Urban demand should also recover, particularly the unevenness that we saw at the middle and the bottom of the pyramid. That should recover post the budget based on both the tax cuts, which will help part of the urban economy, and all the other measures as well, which we think will also be supportive. But it will mainly be domestic demand and the government Capex, which is going to drive growth. We hope private Capex will come back stronger in FY26. But that really remains to be seen. Does it continue at the modest sort of pace that we're seeing right now, or does it amp up substantially, given the kind of global uncertainties that we have that are going to have an impact on merchandise exports? How soon will we really know what is the exact tariff implication on India vis-a-vis other countries? That's very important. Do we end up getting bucketed with the BRICS? Do we escape that? Do we have any tariffs imposed on Indian exports at all? Are they less or more or equal to other countries? There are too many unknowns. So we don't really expect merchandise exports to be a driver of growth. As of now, services exports are still doing very well. So that is something that will continue to be supportive.
Got it. Okay. Well, Katrina, Aditi, please stay on. We've got a battery of other guests joining in as well. And two people who got it absolutely right. Jaideepa had spoken about this way back, that maybe some liquidity measures first and then a rate cut in February. It's come out. Jayesh Mehta 3 days ago joined us, spoke about the crossing fingers of a rate cut coming through, and that has come true. So both of you would be happy. Jayesh, I'll start with you. Is this coming exactly with what you anticipated, or would you have hoped for something more in the policy?
No, that's exactly as anticipated. And in fact, one more change, I would say, if you really look at the MPC policy, when we said flexible inflation targeting policy, that was supposed to be flexible. That doesn't mean that we have to go to 4. If your real rate is too high, even at 5%, if the real rate is too high and the growth is struggling, you have room to cut rate, and which is what they have done this time around. And that's why I actually look at it, there is more scope, because if you look at their, and one more thing he also said is forward looking, right? So if you look at their inflation projection for the next year, and if nothing changes in April policies, we can actually see, further rate cut because even at 6th quarter, and if you look at the projection of around 4.2, we are at 2%, almost 2% real rate, right? And therefore, there is enough room to cut that rate and no need to wait for 4% to come through.
Got it.
So that's a big challenge.
Yeah, well, it certainly is. Okay, so that's as Jayesh's take, and I'm sure, more questions for our panelists, but quickly getting a take from Vishwanath Nair, our banking editor, who's right there at the RBI headquarters. Wish you got the chance to read the whole statement as well. Quick takeaways.
Quick takeaway, the last bit that the RBI governor said right before he left the room was a less restrictive monetary policy was warranted. That's what the MPC felt. And while he said that for future policies, we will take a fresh look at data and then decide what we want to do in the upcoming policies. But this was a clear indication, according to me, that there is a likelihood of a sort of a dovish stance coming in from the Reserve Bank governor on future rate actions. Another important point, and this is something that I want to ask Jaideep Iyer at RBL Bank as well. He's pointing out specifically to banks, saying that you're parking too much money with the RBI passively, and that you should use that, participate in the call money market and on-lend it to other lenders. I want to ask Jaideep, is that in your view a significant problem at this point in time, and maybe some of the liquidity issues that the banking system is facing could be resolved partly through the system itself redistributing that liquidity?
Hi, morning everyone. Thanks, Vishwanath. I think honestly, I don't think call money is a big issue from a banking sector standpoint. I think generally we've seen very less demand in call money, because it is generally not being considered good for banks to borrow in call money, and therefore there is no demand, and therefore even the lending doesn't really happen. So at one point in time, several years back, the call money market was a fairly large market, and I think it's now fairly insignificant and irrelevant, because it's also associated with a little bit of let's say negative liquidity scenario at a specific bank level, and therefore banks have generally avoided taking access to call money markets in general.
Okay. Okay.
This is a big deal.
Yeah. Okay. We'll come back to Vishy for more on this. Alok Singh also joining in Treasury Head, CSB Bank. Mr. Singh, thank you so much for speaking with us. Just your first take on the policy and the outlook. Before the policy announcement, everyone was very sure about 25 basis points, and then there was a varied view on whether 50 to 75 this calendar year. Just wondering if you have rejigged your assessment for rate cuts as a total this calendar year after listening to the governor.
Yeah, good morning and thank you. So I believe my outlook on policy is that it was a very balanced view given the conditions prevailing, especially in the dollar-rupee market. So dollar-rupee, if you see, has depreciated by more than 3%, I think, in the last couple of months, which is a significant move. And that is inflationary as well. So 25 was factored in, and I believe that the statements hinge towards the dovish, and we believe in the policy stance for the economy. We believe that the liquidity and the rates work hand in hand. You cannot. So RBI has already started addressing the liquidity conditions. You have seen the announcements in last couple of weeks, and they have given the cut now. But having said that, I still believe that going forward, the rates cut are embedded. They will come. But looking at US scenario, how the rate scenario is panning out, where it's believed that they will hold for some more time. And similarly, even the Bank of England spoke yesterday. So we will have to look at a global perspective as well. And looking at that, keeping the neutral stance, and then probably taking a better call in April would be more prudent. And I believe that at least 2 rate cuts are more there in the policy stance in next 1 year.
Okay, Katrina, coming on this, I mean, BOE sounding a bit dovish, Bank of Mexico sounding dovish. The government has given that 4.4% fiscal deficit target as well. Does it embolden the RBI to do more? Let's say a couple of rate cuts more. And where are you on the growth argument here? Mr. KK Mistry said that he believes that the RBI's number may be a bit conservative. Aditi disagrees, of course, and with her reasons. What is your reason? Or what is your assessment?
So our expectation is that we will see growth actually not pick up as optimistically as what the RBI is expecting. We're looking at about a 6.4% GDP growth rate. I think it's going to be like quite a difficult operating environment. We know the challenges about exports, but of course, exports aren't that key economic driver for India. It's more about what's happening domestically. And I think 125 basis point cut doesn't materially change the game at this point. I mean, sure, we do have a bit more fiscal support coming on board, particularly from April, around those adjustments for middle income households. But I think it's still going to be a challenging environment as well. And I think one thing and one area that, we don't pay enough attention to as we should is that, labor supply overseas and that flow through to remittances and then that impact on private consumption. I mean, if we do see a material pullback in labor supply of overseas workers in the US, then that could actually flow through to a weaker consumption picture as well in India. And of course, consumption is such a critical driver of the economy. So I think that's a risk that is quite frankly, flying under the radar at this point that we need to pay really close attention to. And I think in terms of how much more the RBI is going to move, I don't think we're going to see as much movement as what we've seen from other central banks like the ECB, the Fed, the Bank of England. I think they're going to tread a lot more carefully because the one complicating factor for the RBI when it comes to easing policy that these other central banks don't have as much is around the currency. And because we do have such a weak rupee, that potential flow through to imported inflation is a concern. And I think one thing as well that we need to keep a close watch on is, energy prices are low at the moment, but if we do get a resurgence at the same time that the rupee is extremely weak, then that's going to be particularly troublesome for an economy like India. So I think we're not going to see much more cuts. I think it's going to be a shallow easing cycle this year, which really does limit the revival in domestic demand that we will see as a consequence of that.
I want to get Aditi's view on this. What next? Because even from a market's perspective, we're now looking at what is the quantum of rate cuts that can be expected. And I agree with you when you say that the governor was very clear in pointing out potential trouble on the horizon, whether it's geopolitical or otherwise. Are you still penciling in, or are you penciling in 2 more rate cuts? And what is the quantum you're seeing this year?
We're penciling in 1 more rate cut.
Okay.
That's what we were penciling in before today as well. Quite frankly, if we were to be looking at 2 more rate cuts, then I think they would have changed the stance to accommodative. I'm not sure they would have continued with the neutral stance if they were going to be considering 2 rate cuts going forward. And that's why I think sticking with a neutral stance makes sense in this situation where if you're only going to cut rates 1 more time, why would you have moved to accommodative? And I know I said it before, I'm going to say it again, the focus on the upside risk to inflation, I think that's another hint that they're not looking at too many rate cuts going ahead.
But Jayesh, come in please. On that, the RBI unequivocally saying that we will take every quarter, assess the data, so on and so forth. If the monsoons are good, so and food inflation does get under control, does it open up the door, or are you also of the camp that it's probably just at best 1 more rate cut? Plus, couple that up, Jayesh, with what do you think is the bond yield trajectory for the near term? How do money markets see this policy and the upcoming belief about the policy?
So I think firstly answering the same as Aditi said, neutral means maybe one more rate cut. That's what the bond market thinks. Of course, I do have a slightly different view. In this uncertainty world, right, you can't give any directional stance on the policy, and that's why it's neutral. You want to be flexible within 15 days, even before next policy, if something happens, they want that flexibility. And that's why I would emphasize that neutral means something which is the global uncertainty. That's why it's a neutral stance and not on either way. Coming back to further rate cut trajectory, I do believe there is room to go, maybe more than one rate cut, maybe two rate cut. Assuming, see, as of today, we are looking at as of today, and even RBI is looking at as of today. That's why the neutral stance, because we don't know what happens in 15 days or next 30 days. So much of uncertainty in the world. But assuming their projection, which is there, nothing changes dramatically in next policy or next two policies, we will see rate cuts because if you really look at the growth projection has been reduced, inflation at 4.2 for next year gives almost 200 basis point real rate. Like, when your growth is lower, you can't have such a high real rate. Like there was a time we were focused on 1% real rate, and right now we are, last 1 year we have been at 2% real rate. So I think when the growth slows down, how to make sure the real rate also comes down. And that's where I see more room for them to cut, assuming that their inflation trajectory and their inflation projection pans out the way they have projected. Maybe 10, 15 basis point doesn't matter, but along that lines, it should not be that 4.2 becomes like, in next policy, the projection becomes maybe 5% or 5.5%. That is a different situation. So looking at the current scenario, there is enough room for a rate cut further.
Mr. Mehta, I just wanted to get your take on the governor's comments on the currency. And he started by saying that there is a lot of commentary on the RBI's positioning on the currency. He goes and he took pains to say that we don't take any steps to intervene on the rupee vis-a-vis any other particular currency. What is your take on what you made of his comments on the currency and any cues from there on what the RBI's approach is going to be to a weakening rupee?
So I would say this is going back to the old RBI. There was some difference in the last couple of years, but it's the old RBI where currency, they were never targeting a rate, but it was more like targeting the volatility, right? If there's a large move, definitely they need to come in and intervene, and that's what they were doing. I think last 1 month, they've changed that situation, and even volatility is relative, right? Like, if the world has moved only by, say, I'm giving a very hypothetical number just to give an example. If the world has moved by 2% and if we move by 2%, that's fine. But if the world has moved by 0.2% and we are moving by 2%, that's excessive volatility. So that's how, as compared to the global currency movement, if we move in the same similar trajectory, they should be okay with that volatility. It's only when our currency has a dramatic difference as compared to the volatility of the world, they definitely intervene. So they are not targeting. Say earlier, the market was very sure there was this 84 buffer, then 84.50 break, 85.50 break. So there was this number. I never understood why that number thing, right? But there was always this number, 87, 87.50. So people were trying to do that. Now they are, beyond that, it's just compared to how the global currencies move, and then if that moves dramatically, we are okay to move dramatically. So that's the way I would look at it.
Yeah, well, maybe if the Chinese yuan is depreciating consistently, how can maybe the rupee not? But interesting point, Jayesh. Jaideep Iyer, we asked you a specific question around liquidity, but the overall budget, overall policy view, Jaideep, what do you make of the statements coming out, and do you reckon that again, a view around whether it's 2 or 1 or none?
Honestly, Neeraj, more than I think future rate cuts, as we discussed earlier, I was at least happy that the liquidity measures came first and then we've had a rate cut. In a normal environment, I would have expected and wished for more liquidity measures, more durable liquidity measures before rate cuts, because everybody would know that this is the first time where we have an externally benchmarked loan book for banks, largely on repo. And we have seen the first down cycle in rates. This is the first time after the regime change of externally benchmarked rates. So it's and we've not seen deposit rates materially come down. So it's from a pure banking standpoint, we would really prefer easy liquidity and therefore deposit rates at least directionally coming down before there are multiple rate cuts. So right now, given the circumstances of a relatively challenging macroeconomic environment, dollar rupee issues, uncertain geopolitical environment, I think this is the best we could get. But in a more stable environment, my wish would have been higher. So that's one. The second interesting point that I noticed was that the governor did mention the cost of stability, the cost of regulations. And I think this is the first time, at least I would want to interpret this statement positively from a banking standpoint, that that the regulator does, the RBI does recognize that there are significant costs attached to high regulations which the banks have seen over the last few years, and maybe optimistically one could therefore expect some moderation in the pace at which regulations have come.
Okay. Thank you so much to all of you for joining us today on our wrap-up and our assessment of the policy. No harm done. I think that's one big takeaway. 25 basis point rate cut as expected. A careful and very nuanced commentary on the outlook from Governor Malhotra, and also sets the stage of what to expect, that this RBI, the Reserve Bank, will be completely open to all kind of headwinds and threats on the horizon, if any, quick to react as and when they need to, but nothing to be alarmed about right now.
Yep, that's the long and short of it. With that, it's a wrap on this coverage of the RBI Monetary Policy Committee decision. Of course, the presser comes in at 12, and you might want to tune in for that as well. But up next, we get some of your queries answered with regards to the markets, which are doing okay.
Sources telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal onwards.
Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hi, thanks so much for joining in. You're watching NDTV Profit. This is Ask Profit. My name is Alex Matthew and with me is Mahima Vajrajani. And we've got lots to talk about because just a short while back you had the first presentation of the RBI monetary policy by the new governor, Mr. Malhotra. And it was along expected lines. There was a cut in the policy repo rate by 25 basis points. Most people had anticipated this. And let's see how the market has reacted. It's, I guess you can say that it was in the price and to a certain extent that has played out because the Nifty 50 is absolutely flat at this juncture. It wobbled a little bit, but it has recovered and it's a very narrow range if you think about it from the start to finish. Remember, we closed at 23,603 yesterday and it's more or less where we were yesterday as well. Let's talk about the broader markets, and you have the mid-cap index that's just about flat at this juncture and the small cap index which is down about 0.5% or thereabouts at this point, or 0.33% or thereabouts. Let's talk about banks though, and the Nifty bank is currently trading with cuts of just about 0.2% or thereabouts, and it's going to be interesting to watch how some of these names react over the course of today and of course in the coming days as the liquidity scenario is something that is developing. It's still in deficit, remember, and the RBI is going to take all of the measures that it expects it will need to in order to maintain durable liquidity, is what the Reserve Bank of India Governor Sanjay Malhotra had to say in his first address as Reserve Bank Governor. We're joined today by Sameer Dalal of Natvarlal and Sons Stockbrokers, as well as Kushal Gandhi, who's technical analyst at Stocksbox. Thank you so much, gentlemen, for taking the time as always. Sameer, you were probably anticipating this, as were a lot of other people. Do you have any specific banks that you're looking at that will immediately look to benefit from this rate cut? I know a lot of them have been going a little slow on the unsecured side, which is where the real credit growth has been over the last year. So what are you looking for in the banking space?
So, the banking space, the stocks that we've identified and we discussed on your channel don't change. So we continue to like the likes of HDFC Bank, IndusInd Bank, IDFC First Bank in the private side, and on the PSU side, Bank of Baroda. Even though they didn't have the best of numbers, I mean, if you look at it, the pain points are over. We believe the growth opportunity will arise, and they are working on that. And that valuation comparatively are quite reasonable, so that remains our topic. So that doesn't change anything. Yes, it was expected, I think, to a large extent that the rate cut would come. And government is already working on the liquidity. Before the rate cut, they already announced 150,000 crores of liquidity, which is slowly getting infused into the system. So as that continues to happen, hopefully the rate transmissions will happen. It's not going to happen immediately. But when the governor cuts, one thing everyone got to remember, that when the governor is indicating of a cut in the interest rates, he wants that transmission to eventually happen. So he will ensure that there's enough liquidity in the system. Does it change anything for the banking stocks right away? No, it doesn't. But yes, what we can hope is that the growth momentum, because lower interest rates heading down probably can drive some amount of growth momentum from companies who want to put in Capex, thinking that, look, if interest rates are headed down, this is the time to start investing because growth will come back in a stronger way. So maybe from all those points of view, hopefully the growth picks up for the banking space as well.
Right, Sameer, just to add to that, IIFL Capital did come out with its first cut with respect to what impact this repo rate cut will bring on banks. Their analysis shows that NIMs will be impacted by 5 to 10 basis points, and they see relatively lower impact on the PSU banks, and they believe that impact of 25 basis points rate cut is already built in. So nothing much with respect to Alex, the stock performance is what IIFL Capital builds in. Let's move on to our first query for the day. Then we have this query is from Madan, who's from Hyderabad. He's holding Vatek, Vabag, 200 shares at 1550 a piece, and he's sitting at a loss of if you can pull up the number, there you go, 31,000, so 32,000 odd rupees, and he wants to know whether he should hold for the next 3 months to see some profits at least. Kushal, is that the right reading on the charts right now for Vatek Vabak?
Well, yes, it's a positive view on Wabak. I think the declines, they're showing some now minimal resilience. So I think that's a positive development. And over the last couple of trading sessions, you'll see, it's undergoing some nice accumulation phase. So the risk reward is also quite favoring, just in case he wants to average at the current market price. So I'm positive on the stock, hold it with a stop loss near 1292. And my target on the upside is 1683.
Okay, 1683 is the call on Vatek Vabak. Our first caller of the day, Asad, is calling us from Bengaluru. Hi, Asad. How can we help you today? Morning.
Yeah, hi, good morning. Yeah, actually I have this Amara Raja Batteries share for 1081. I have 50 shares. So basically want some insight on that, whether I need to hold, because results are on tomorrow. So I just wanted to check whether I need to hold or I need to exit.
What was the thesis when you bought it, Asad? Did you buy it for the long-term prospects?
Yeah, my insight is for long-term. The reason for buying is basically the PE has come down. I mean, comparatively when compared to Excite batteries, and considering the EV battery future, right? So I thought maybe I'll go with it.
Okay. All right. I'll come to you, Samir, on this one, on the valuations, and of course, awaiting the numbers that Asad is talking about. What do you make of this company?
We are positive on the entire battery space, and especially even on Amara, right? We believe the entire EV space, and which is going to see traction, will see companies which are setting up these huge factories of lithium-ion batteries benefiting from that. Amara is one of them. Yes, valuations are not at all compelling. They're trading at 20 times trailing earnings, which is not expensive. Growth in the near term may be a little subdued, given the fact that we've seen a bit of a slowdown, and not slowdown, but the growth has not been great for the automobile sector, right, in the current year. So growth for the battery segment also, we believe, will be a little subdued. So maybe this year we won't get, but once we see the pickup happening in the electric vehicle sales, and they have the battery up and running, which is going to take another year at least, I think. I'm not sure of the timeline exactly at this point, but it's going to take at least another year. So maybe in the future, you will see the earnings uptick coming quite strong. We have a buy recommendation on it, and one should hold on to it. I wouldn't worry if you're a long-term investor. One result doesn't change anything, whether it's up or down. If it corrects, I would say add on to it from a longer-term perspective.
There is, in fact, a sharp reaction in the bond yield. From what I can see, there is a 15 basis point increase from the previous close on the 10-year. What you're seeing on the screen is the 7.1 coupon 2034, and there is an increase. It's currently at 6.75 or thereabouts, so it's cooled off maybe a tad bit. And maybe my feed on my phone is a little delayed, but there is no doubt a sharp spike in the bond yield. Perhaps to a certain extent, pricing in what will happen in the rest of the year, and also certain measures that the governor has announced that could have a bearing on how yields function. Of course, there was widely expected to be this rate cut. Maybe the projection on what is anticipated in the next year based on the projection for inflation is something that the street is looking at. And I'm talking about Mint Street here, not Dalal Street. And so bear that in mind. We will try and get you a sense of why the bond yields have spiked as they did. Of course, the rupee has not moved too much from where it was before the policy, but certainly the bond yields are going to be something that you should watch out for. Generally, you would say that if during a quarter there is a spike in bond yields, it has a bearing on treasuries for the banks, because a lot of these banks have a significant amount of a hold to maturity bonds. So the actual impact is not very significant, but they have to have mark-to-market addressing of these changes in the yields. When the yields spike, you generally see a fall in the face value or the price of the bonds, and that has a bearing on treasury performance during a quarter. So certainly something to watch. We'll get you a view on how that is. For now, let's turn to SBI for an intraday trade. Of course, you saw the results earlier in the week. In fact, yesterday, right? We had SBI results yesterday.
Yes.
The stock is down about 1% or so. I'll come to you, Kushal, on the charts. It's an intraday view that is being sought. What would you do here?
Pessimistic view from an intraday point as well. I mean, the stock has been trading with below the shorter term moving averages, and they're acting as constant supply. So my sense is, even if you want to place an intraday bet, it has to be about 752 on a closing basis on a 15-minute chart. Until then, it's an avoid.
All right, so that's the view coming in on SBI with respect to the charts. GE Shipping is the next counter. Sunita from Hyderabad is holding 20 shares bought at 1160 a piece. She wants to know whether she should book losses or buy some more stocks to average out at the current levels. What's the outlook with respect to this stock from a longer term perspective, Samir, if you have a view on this one?
Unfortunately, GE Shipping is something we don't cover, so I'll toss it over to you.
Okay, Kushal, with respect to the charts, how does the charts fare for GE Shipping? Okay, I believe we have an audio issue with Kushal right now. Let's move on to the next query. Then LIC is the counter. Praveen has accumulated 200 shares at a price of 1010 for LIC. His question is whether he can accumulate more or wait for some time for correction at the present levels. What's the view with respect to this, Samir, then?
We've already seen quite a bit of correction, right? He's already down 20% from where he bought it. So I think it's time to add on. Look, we remain positive on the entire life insurance space, and LIC is the largest player in the space with greatest reach. They have a lot of value in their investments, which they will keep unlocking over a period of time. Profitability will grow as we believe the markets will keep expanding in India over the next many years. They will stand to benefit from all of that intrinsic value that they hold in all their investments. Plus, like I said, look, India is a very underpenetrated market. We've discussed this in the past. I think we are at about 4 or 5% in terms of value when it comes to life insurance, whereas internationally that goes up closer to 80-90% also. So the scope to grow is great, and given their reach and their brand value, I think they will be able to do that. They're coming up with the right products over a period. They keep coming up with different things. Of course, the government has taken away a little bit of the incentive of these ULIPs and all these investment themes. But as the dust on that settles, I think people will continue to make these investments, because at the end of the day, everyone's looking at, if I'm putting in X, Y, Z, what am I getting back? And LIC has some of the best products for that. So I think it will do well, and you can add on.
All right, add-on is the view coming in on LIC from Samir. We have our next caller, Pradeep from Kerala is calling in. Pradeep, a very good morning to you. How can we help you?
Hello.
Hi, Pradeep. Go ahead with your query, Pradeep. I can hear you. Okay.
Hello.
Yes, Pradeep, I can hear you. Go ahead with your query.
Hello.
Okay, I think there is some problem with his audio, but I believe he's holding NCC 2000 shares bought at 309 a piece, and he's sitting on a loss of roughly 1.9 lakhs. Samir, your view on NCC, whether he should keep holding it and whether his losses will reverse, or should he exit and book the losses?
I think you can continue to hold on. Look, the entire infrastructure space in India is yet going to see a lot of momentum. NCC is doing the road projects, doing certain other construction activity projects, which they have a decent order book. They've, of course, the last quarter results. Today the stock is down because the quarterly results were not the best in the sense that the growth was not that great. The profitability and margins took a bit of an impact. We believe all of that will reverse over time. Look, we've also had a year where the government has been a little slow in generating orders for the infra space. And that we believe will also start reversing in the month of March. And then when we have the next year coming on. So overall, as long as the order book continues to go, which we believe they are competitive with, the stock will continue to do well. It's trading at 18 times earnings. I will not say it's cheap for a construction company, given they work on thin margins, but given the growth opportunity and given the quality of the balance sheet, I think one can hold on. If it comes down a little further, again, closer to about, say, 180, you can buy some more and average up a bit.
All right, so hold on and average out at 180 levels is the view coming in for NCC. The next counter that we're talking about is NMDC. Robin from Bengaluru has bought in some quantities in this particular counter. He wants to know what will be the movement with respect to this counter on the charts. Kushal, I'll come to you. NMDC, what are the support and resistance levels that you're watching out for?
Yes. In NDTV, the immediate support comes near 63.05. Immediate resistance is 68.93. So I think a decisive closing about 68.93, will confirm a double bottom pattern that is evolving. And also 69 levels is where you find the 50 DMA. So I think that zone holds a very critical resistance. So a close above that would attract further bullish momentum.
So that's the view coming in on NMDC. We have our next caller. Rajan from Mumbai is calling us. Rajan, a very good morning to you. I believe you have a query on Zinka Logistics.
Good morning, madam. Yeah, I am Zinka Logistics. I was allotted in IPO in November 2024. I would like to have the views of both the analysts in case one of them is not having the IPO view. I am a long-term investor ready to hold for 3 years. Kindly explain me the prospects of this company.
Got it. Rajan, I don't think we'll have enough data on the charts for Zinka Logistics yet because it's just newly listed. But Sameer, if you have a view on Zinka Logistics as well as the entire space, if you can give a perspective.
So sadly, the Zinka Logistics, we don't have a view, and I'm not even sure what part of the business they follow. So I don't know which part of the logistics are part of the business you want me to address.
So Zinka Logistics is basically into digital trucking platform. So they give telematics, load marketplace, vehicle financing for trucks specifically.
So, a similar company which does some of that is Tata Technologies. I mean, they have these apps and softwares which can help you track some of this. So that is a counter we do cover. We remain positive on that. The stock has seen a very significant correction, and the correction has rightfully come because, growth has been subdued. Again, I've been talking about the fact that it's not only the logistics are part of it that they do, but they also have other parts of the businesses, right, which cater to car sales, the automation and the electronics and all of that go into the car. So once we see auto sales picking up, we believe that is one of the counters that will do well, but it's again very small, the percentage of the part of the business of Zinka probably that is doing. So it's not a direct comparison on that one.
All right, Sameer. The next query that we have is on MobiKwik. Do we have the name of the, yes, Varun. Varun is from Karnataka, is holding 650 shares of MobiKwik, bought at 540 a piece. He's sitting on a loss of more than 90,000 is what he's saying, because the current market price is around 393. When can he expect a recovery in this stock is his question. Sameer, by any chance, do you have a view on this one?
These platform companies will gain more traction. So I think, look, the results were not the best again in this quarter. I think once the entire space sees more and more traction happening and more of these payment systems getting on, we will see the operating leverage play through. So if you want to be invested in a company like this, I think you got to be invested from a 3 to 5 year perspective, minimum of 3 and on the upper side 5. So if you do have that kind of timeline, yes, you could recover your money in the short term. I think pain will probably still persist.
Got it. The next query that we have is on ONGC. The viewer's name is Sharwani Reddy. She wants to know whether she can keep holding ONGC for the next 3 months. Kushal, on the charts, ONGC, how does it fare? Okay, I think Kushal, we are having problem connecting him.
I believe we've got Ajay Manglunia who is logged in and who's joined us on the phone line, I believe, Managing Director and Head Fixed Income at Incred Capital. Ajay, just trying to understand the reaction in the bond markets. I may have read it wrong in terms of the increase in the bond yield. So can you clarify which, so there is an increase in the bond yield. So what are you reading in terms of the immediate reaction, Ajay, and how do you explain it?
So market was kind of expecting a token rate cut, which was delivered in the today's MPC meeting outcome. 25 basis point rate cut is something largely was expecting by the market, and it's after a very long time, 5 years later, there is a rate cut in Indian environment. What market was disappointed was some answer to the liquidity. Market was expecting that there could be some kind of a delivery on the liquidity front, which was kind of kept silent, and we have seen that RBI has kind of been doing enough in terms of providing liquidity. Market might be expecting a longer durable liquidity, since we see a lot of liquidity deficit in the market, and that's what is kind of disappointed in the yields in the government securities has gone up by 4 to 5 basis points. It's a knee-jerk reaction which we can say, and over a period of time we will see the moderation in the yields.
I just want to clarify, because I'm looking perhaps at the what is not the benchmark, what we have on the screen. What is the coupon on the benchmark right now, Ajay? Because we don't look at this very often. The 10-year benchmark, you're looking at 6.79?
6.79 is the new benchmark right now. Earlier it was 7.10.
Yeah.
So both are traded, but I think more volume is in the 6.69.
6.79. And do you anticipate that this will be something that eases over the course of the next few weeks as liquidity conditions improve?
Yeah, definitely. As we see the market in this security was trading in the range of 6.65 or around 2-3 basis points up and down, and today with the knee-jerk reaction with kind of no mention about the liquidity measures in the policy has disappointed a few traders, and they kind of book profit. It may kind of be somewhere about say 660 to 670 range for some time before it settles down at its own levels. I think 665, 663 is the level where we could see this being traded. February is the month where probably there is no major government borrowings, and as we enter into the next financial year, the borrowing will recommence from the next financial year in April onwards. So we could see some rally in this paper going forward.
Last point, Ajay, and a quick one. Right now, we've got a rate cut as was anticipated, but as you've pointed out, the street is reacting to liquidity. The base case assumption, as I understand it, is for another rate cut sometime this year. And would you say that once the liquidity scenario eases out, you could see a move down to the in the 10-year bonds, in the long-term bond yields? And when do you see that playing out?
Bond yields, as we have been talking about, is more of a stable. The immediate impact of the rate cut will be on the shorter tenor papers like CP, CDs, money market instruments will immediately have a transition for this rate cut. The next rate cut probably people might be expecting in the April, which is the next policy time, and by then we will see the new financial year borrowing will also commence. So we don't see huge rally in the 10-year. The rates might be stable. The more comforting factor with the market is likely to be the stability. Stability in terms of liquidity, stability in terms of rate trajectory, stability in terms of currency, and all of these are basically points to watch out.
Fantastic. Thanks so much, Ajay, for joining us, for giving us that quick view. Just a small clarification. These are not bonds that you look at on a daily basis, as a result of which there would have been a little bit of a confusion. What you see on your screen, or you saw on your screen, was actually a 7.1% coupon, the earlier benchmark. Right now it is 6.79. That's where most of the trades are taking place. And the current yield on that paper is at 6.69, and it has moved up very sharply. You can call it sharply because it is a substantial move. 3 and 4 basis points in a day is actually pretty sharp, but it is likely to stay range bound, is what Ajay has just pointed out. Let's go to the next one.
Right. The next counter that we have is, Zentech is the next counter. Dhanush from Karnataka wants to acquire Zen Technology from a longer term perspective, that is 5 years, and he wants your opinion on this, Samir. Zen Technology is the counter, if you've studied the company.
Zen is something in our coverage universe that's not there, but I can tell you about the IT sector, where we believe that the entire space is very richly valued at this point of time. We've been saying that, look, everyone's factoring in a recovery in the US markets and growth will come back, and because of which the strong cash flows will start improving. But we are not as constructive on the recovery in the US market, especially in the IT side. We believe that if the US market goes through a bit of slowdown because of the impacts that Donald Trump is taking of cutting spendings in a lot of places, putting in certain amount of taxes, if H-1B visas rules change, all of those could affect, and valuations are fully priced. So no coverage on Zen, but a slightly cautious view on IT.
Okay, we have our next caller, Ricky from Mumbai is calling in. Ricky, a very good morning to you. I believe you have a question on Trent.
Yeah. Hi, very good morning.
Good morning.
Actually, I have 25 shares of Trent with an average price of 5,500.
Okay.
And yesterday there was a result of Trent.
Correct.
It has missed the estimate. Yeah, but there was very deep correction. So is it a time to accumulate more shares, or should I wait more for further corrections?
Correct. Samir, I'll come to you.
And I even
quickly.
want to know the technical view.
Sure.
I even want the technical view of
I'll take one fundamental view from Samir. Samir, Trent, he's bought it at 5,500. Should he accumulate more at the current levels? Because quite a bit of correction has taken place on this counter.
So yes, I agree, a lot of correction has taken place, but you also got to realize that the stock ran up all the way from 2,000 to 8,000, right? So we are just seeing a correction, but if you look at it from a year and a half ago, it's still up quite significantly. Okay, so why was there a correction in the stock price after a result where they delivered a 35% top line growth? Okay, so I'll try to answer it the way I understand it. One of the disappointments that we saw in the numbers, at least that I saw in the numbers, was that same store sales growth was a bit muted. It was in the single digits. For retail businesses, especially like the ones where Trent, where you're renting out space, the higher SSSG that you get leads to a huge jump in the operating leverage, which was missing. Secondly, the growth that has come from new store additions. New stores, when you add, yes, the top line may grow, but these stores take time to stabilize and become profitable, of at least anywhere between 3 to 6 months before they start breaking even. So you've probably seen a lot of growth in the top line because of that, not as much growth coming from the SSSG, the same store sales growth. And till the urban consumption sees a bigger uptick, I think that is that is the big concern, that if SSSG does not go up, then how do you justify these 80 times forward valuation multiples? So I think that is the reason we saw a correction. Should I continue to add on to the stock? I think yes, you can buy onto the stock. Look, the product that they have, the expansion that they have, and the different verticals. So Zudio is doing extremely well at the low end. You have Westside, which is fashionable but still very reasonably priced, and then you have the Star Bazaar, which is the FMCG part of their business, where they are also launching their own brands,
right,
which will continue to do well. So we think it's a great 3-year play. One can add on from a 3-year, but expect it to be sideways for the near future.
Okay, fantastic. Thanks so much for that view. And Samir, Kushal, thanks so much for joining in. And that brings us to the end of this edition of Ask Profit. Completely out of time. Do stay tuned. Lots more coming up on NDTV Profit.
entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in?
Hello and welcome. You're watching Markets at 12 here on NDTV Profit, and this is Harsh Saita. Let's take a look at how markets are currently doing. Well, the Nifty now just off the day's high, so positivity starting to creep through, it seems. A fifth of a percent higher on the Nifty, and we're just about at the 23,650 mark. The top is just below 23,700, so that's something you may want to keep your eye out on. Let's also look at what the Nifty Bank is doing, because it's a rather big announcement with regard to where the Nifty Bank is concerned. Plenty of choppiness in that index while the policy statement was on, and you can see that choppiness on the graph in front of you. But a tenth of a percent lower is where the Nifty Bank is currently settling in at. So a muted kind of response from the Nifty Bank. Within the PSU banking pack though, the response is even lower, 0.6% lower on the Nifty PSU bank. The private banking index doing relatively okay in that sense, absolute flat line where the private banking index is concerned. Let's look at some other indices in focus. The Nifty Auto is up around 1% thereabouts. You're also seeing very good traction on the Nifty Metal, 2.5% higher on the Nifty Metal in fact, and 1.5% up on the Nifty Consumer Durables Index as well. So those are some indices which are doing decently okay in trade today. What's not doing well, the FMCG index, we spoke about the PSU banking index and the IT index, kind of a muted move on that one. The FMCG index is down around 1% thereabouts. What are broader markets doing? Let's pull up the advanced decline first off to start off with. Thereafter, let's look at the Nifty mid cap. And while we are at it, we'll also have live visuals for you very, very shortly on the press conference post the RBI MPC. Those live visuals on your screen as we speak. But the Nifty mid cap up around 0.5% thereabouts. The Nifty small cap index also absolutely at the flat line. Okay, let's go across. So maybe another minute or so before we cut across to the post MPC press conference, and of course the first press conference which will be presided by the new RBI governor, and let's cut across to that.
You may please exit from the right hand side, please. Thank you.
Okay, would be curious to know, is there a possible second rate cut, and how quickly will that happen? What are the liquidity measures that the RBI is poised to take? And all of that and more, of course, as part of all this, all the Q&A that will go around over the next hour or so.
Hello,
interesting one.
Good afternoon. Welcome to this post-monetary policy conference, first of this calendar year 2025. Friends, we have with us Governor Reserve Bank of India, Shri Sanjay Malhotra, Deputy Governors, Shri M. Rajeshwar Rao, Shri T. Ravi Shankar, and Shri Swaminathan J. We also have with us Executive Directors, Dr. O.P. Mal and Dr. Rajiv Ranjan, and other colleagues from the Reserve Bank. To begin with, as is the practice, I'll request Governor to make his opening remarks. After that, we'll have the question answers. Governor, sir.
Well, good morning, good afternoon, and welcome to this press conference. I already made my statement, which we have also uploaded, and I'm sure you would have already gone through it. I do not have anything more to add. The MPC resolution, the rationale for it, and some of the other additional measures that we have brought in are very clearly communicated over there. So I think we can directly move towards the Q&A. I think that will give more time for all of you to ask additional questions. So we can begin, I think, with the Q&A directly.
Thank you, sir. Just before we begin, a couple of announcements as always. I'll request you all to please wait for your turn and restrict to one question per person. And if time permits, we can always go back for the other one. So you can see my colleagues on the aisle with mics in their hands, so they will give the mics to you. So please speak in the mic so that people outside can also hear you. So there are 27 participants from the media today, and with your permission, I'll call out their names. I'll request Lata from CNBC to ask her question.
Thank you, Governor and Deputy Governors. So I just want to first clarify a language part and then my question. Because in para 7, where you are announcing the rate cut, you say that the MPC remains unambiguously focused on durable alignment of inflation while supporting growth. So inflation first, then growth. In the immediate next paragraph, you are saying the growth inflation dynamics open up policy space for the MPC to support growth while remaining focused on aligning inflation. So should we read this as deliberate or casual? And the question I have is, rate cuts normally get passed on when liquidity is surplus. So would your stated policy be to keep liquidity surplus in the interbank system or just adequate? Thank you.
So let me come to your second question first. I think that was attempted in the statement also that we made. And you would have observed in the last couple of months and even before that, that it has been the endeavor of Reserve Bank to provide as much liquidity as is required. And when we say liquidity, as I also mentioned in my statement, it is both, overnight as well as durable liquidity. We have taken a number of steps. You are aware, that we introduced, perhaps for the first time, a regular pre-announced every day overnight repo rate operation. So this was primarily to give confidence to everyone that this window is always available insofar as the transient or the overnight liquidity is concerned. Even for the longer term durable liquidity, we have announced steps of about 1.5 lakh crore, some of it which have already been put into operation. 20,000 crore of OMOs have already been done, another 40,000 crore later on. Today, we are going to have a 56-day VRR for 50,000 crore. We are always watchful. We'll be nimble. I want to assure that we'll be very, very proactive in providing whatever liquidity requirements are needed. That's one of our jobs, and we will do it. Coming to your first question, I really did not, understand as to what you are. Everything, every statement, every word that is mentioned in the MPC statement, and especially, the resolution, because you were pointing at the resolution, is very, very well crafted, thought out, and deliberate.
Thank you, sir.
Thank you.
Thank you, sir. Next will be Swati from Reuters.
Thank you so much, sir. So your growth forecast for next year is at 6.7%. This is yet again at the upper end of the government's range. They've given us a 6.3 to 6.8. And as we saw last year as well, RBI had to lower their projection towards the end. What gives you so much optimism on growth, especially when you're saying that, you remain neutral purely because inflation risks could come up again with the heat waves, etc. So what gives you the optimism on growth, sir? Thank you.
See, all the parameters we analyze very regularly, the high frequency indicators that we have. And whether one looks at agriculture with good reservoir levels, and I've made detailed assessments even in my MPC statement. You can go through them as to what are the reasons. Actually, they are all given over there. So in interest of time, I am just shortly, very briefly indicating them. So whether it is in terms of agriculture, whether it is in terms of consumption. Now, you also, recently had the Nielsen survey, the consumption numbers over there, at 7% plus, augur very well. And this is the kind or the range, of projections that we too have for personal consumption. And similarly, the manufacturing activity, is also kind of picking up. The PMI levels that we got were very comfortable over there. So all this gives us the optimism that we will have what the numbers we have projected. I also mentioned in my statement that we will continue to improve, our macroeconomic models, our nowcasts and forecasts, so as to be able to give as precise a number as possible. Please bear in mind that these are just forecasts. Every day, situations change, and as people say, as your facts change, your opinions also change. So those, it's subject to that. Thank you.
Thank you, sir. We'll move to Mr. Manojit from Business Standard.
Thank you, Governor. Thank you, Pulji. Is it fair to say that at this point in time, the priority is growth over inflation? And what could be the real rate at this juncture of growth inflation dynamics?
See, the RBI Act has given us a very, very clear mandate. Our primary objective, see, for some countries, you are aware, it's a dual objective, where very explicit dual objective to have both price stability and growth. In our case, the primary objective, that is not to say, the other objective is not important. The primary objective is inflation, is price stability, keeping in view the growth objective. So we will continuously, focus on that, trying to meet, these objectives. we will try to align the inflation with the target that has been given to us, at the same time supporting growth. At present, as the resolution also says, we felt that time has come that we can be more supportive of growth because inflation is coming down. It is expected to go down. However, it also says that we will maintain a neutral stance so that we are able to proactively respond to the evolving macroeconomic conditions. Thank you.
Sir,
Thank you.
Real rate. What could be the real rate according to you, given the current growth inflation dynamics? The real interest rate.
See, today we are at 6.25%, and the inflation is 5.2%. That is the CPI inflation. The WPI is lower, so that would give you, a real rate of about, let's say, 1.5% or so. That's what it is at present.
Thank you, sir. Moving on, we'll have Mr. Anup from Bloomberg.
Sir, coming back to the inflation forecast, inflation target again. We have 2 to 6% inflation band. You have that convenience of that band also. You mentioned that of the flexible inflation targeting, and at the same time, your original target is 4% for the medium term. So, just wondering, will you be comfortable if inflation remains within the 2 to 6% range, or you will want to see inflation durably settling around 4%?
Sorry, what did you say your name is?
Anup Roy from Bloomberg.
Anup Roy. I'll ask you, when you go to an exam, in that exam, the maximum marks are 800, let's say 100. The passing marks are 40. What do you aspire for? Do you aspire to pass, or do you aspire, to do extremely well? Well, some may, like to just pass. In RBI, we like to we like to be on top of everything.
Thank you, sir. May I have Mr. Ankur from ET Now?
Hello, Ankur Mishra from ET Now. While economic survey says that 6.3 to 6.8% is the growth forecast for the next financial year, and you have taken the upper end. When I asked this question to CEA, that is there a possibility of 7% plus growth, he said yes, it is possible. I want to ask you now, as per your assessment, is there an optimistic possibility of that? And one more question, sir. Regarding the ECL provisioning and project financing norms, you have mentioned in the statement right at the front, but you also said phased implementation. Now, these implementations are as soon as from next month or 1st of April. As per the draft norms, of course, the final norms are yet to come. In project financing norms, it was mentioned that it should be 2% in the current financial year, and then in FY26 and FY27. Similarly, for LCR norms also, 1st April 2025 was the tentative date which was given. I want to understand, where do we stand here? Is there going to be a deferment, or these will be implemented? Thank you.
Your first question, whether 7% is achievable. See, these are difficult questions to answer, but nevertheless, I would like to stick my neck out and say that certainly India can, achieve 7% and plus growth rate. We should certainly, aspire for that. Coming to your second question, which is related to some of the guidelines, that we have issued, LCR, ECL, project financing norms, etc., etc. I made it very, very clear, that we will be doing a balancing act. It is not only about stability. It comes with a cost. We will be very, very conscious of the costs that it brings in, so that, we make efficient use of our resources. I want to also clarify, because you asked specifically about LCR, and we did make a mention over there that we will give sufficient time. I do not think 31/3/2025 is giving sufficient time. So certainly they will not be implemented, before at least, before 31/3/2026. That's the kind of timeline that is needed at the minimum. The draft regulations were circulated. We have got comments. We are examining them. It will take time for us to examine. You see, liquidity is important for everyone. Let's please, try to appreciate that why we are doing this. We are doing this primarily, so that there is no run, on the banks. You would have witnessed it, in 2023, there was a run on some of the US banks because they do not have, such kind of regulations. Now we have those regulations, but whether the liquidity that we have, provisions that we have, whether they are sufficient or not, that and they need to be always, continuously need to be improved. So that's why, we had provided for certain more liquidity to be kept vis-a-vis some of the deposits which we felt, would perhaps, have a higher runoff. That has been provided in these draft regulations. At the same time, we have got now comments from other stakeholders that there may be lower liquidity requirements for some of the other deposits. So we are examining that also. As soon as we are able to examine all the suggestions. And I'm very happy, to note, having come here to the Reserve Bank, that we do, an impact analysis over here. So that impact analysis will be done, has been done to some extent, but come, with the suggestions that have now come in, we are revising our estimates, our impact analysis, and we will give, a time frame as to when one can expect LCR. Similarly, the other guidelines also we will give sufficient time frame. You can rest assured, that they will certainly not be implemented as quickly as 31/3/2025 because that will certainly not be sufficient time. We do not want to cause, any disruption. We will ensure a smooth transition.
So LCR,
thank you.
You said not until March 26.
Yes.
Thank you, sir. Please, let's go with the flow.
Let him ask a clarificatory question only with regard to this.
Please speak in the mic.
26. It will not be before 25.
Be very, very clear. It's more than 1 year. 2 months, less than 2 months is too short a window for the banks. We realize that. And so, we will give at least 31, at least. Doesn't mean it has to be 31/3/2026. We'll aspire for that. But we want to make it very smooth. And it will also be phased. It will not be, that all the regulations, all the norms kick in from day one, which will be at the earliest 31/3/2026.
Thank you, sir. Next is Hamsini from Money Control.
Hi, sir. I'll stay put on this part around regulations. Your language also today seemed to indicate that there will be a lot more consultative process in the way that you would go about building regulations. You did clarify on LCR, but what we've also seen, especially in the last 4 years, and more so in the last 1.5 years, is certain banks and NBFCs facing ban on businesses, certain aspects of businesses. There are 2 large banks still waiting to come out of restrictive business policies. Would you rethink your approach on how you would want to target banks or work with them to rectify some of the follies? And as a clarification, you did mention about LCR, but what about on project finance and investment guidelines that banks are permitted to take in subsidiaries, etc.? Would you want to defer, or there has been request for a deferment on that as well? Would you want to consider those proposed policies also favorably, sir?
See, ECL was only a discussion paper. Even the draft is not out. So there is no time frame for implementation of ECL guidelines. Similarly, project finance, you can rest assured, I think they will need more time. 31/3/2026 is the earliest. Moreover, they need to be seen in conjunction with each other. There is a certain amount of overlap between ECL and project finance. So we are examining, because for project finance, the draft regulations were certainly
published, comments have been received, suggestions have been received. We are examining them, and we'll come out with something, I want to assure all of you, that which balances the interests of the public, the depositors, the financial stability, which is very, very important for our country, and at the same time, the concerns of the banks, keeping in mind the efficient use of resources. And what was your second question? Sorry, is on, two banks, where we have cease and desist measures. See, these measures are taken after great consideration, after great thought, after giving opportunity to these entities, whether it is these banks or others. I'm not, making reference to any particular entity. And these are measures actually, of last resort. We would not like to use them, too often. This is a measure of last resort to be used in the rarest of the rare circumstances, when all other measures have actually failed. And they are again, in the interest of the public. And we'll keep, this policy going forward as well. Thank you.
Thank you, sir. Next will be Ms. Gopika from the Mint.
Thank you, Puneet. Thank you, Governor. My question is on inflation forecast. You've retained the inflation forecast for this year and next year. But have you taken into account the impact of rupee depreciation while accounting, or have you factored in the impact of rupee depreciation while calculating or looking at the forecast? And my second question is on the new Deputy Governor. For monetary policy, when can we expect the appointment?
Second question you have to ask the government, it's not for me. Your first question, yes. The latest rupee to dollar rate was taken into account while making, all our projections. So, and we also do, various sensitivity analysis. So yes, a brief answer to your question is yes, that was certainly considered while making our projections.
थैंक यू सर. अब मैं जी बिजनेस से एकता सूरी को आमंत्रित करूंगा.
गुड आफ्टरनून सर. सर, हमने आपकी स्पीच में सुना कि आपने फ्रॉड्स के ऊपर बात की कि .in होगा बैंकों का डोमेन नेम, लेकिन बहुत सारे इश्यूज हैं जो कस्टमर्स फेस करते हैं फ्रॉड्स की. अगर हम बात करें, सबसे पहले कोई रिपोर्ट करता है फ्रॉड तो उसे पैसा जल्दी वापस नहीं मिलता. दूसरा, पेस्की कॉल्स बहुत ज़्यादा आते हैं नॉर्मल मोबाइल नंबर से. बहुत बार आपने बोला है कि आप टॉपअप लोन्स जो होम टॉपअप लोन्स है उसे पर्सनल लोन्स की तरह एडवर्टाइज मत करें. अभी भी वो हो रहा है. 1600-140 नंबर्स भी आपने बोला है ट्रांजैक्शंस और मार्केटिंग के लिए होंगे, लेकिन वो भी कोई नहीं सुन रहा. तो ऐसे सिनेरियो में क्या आरबीआई कोई स्ट्रिक्ट एक्शन लेगा बैंकों के ऊपर ताकि ये कस्टमर का बचाव हो इन सब सिनेरियोज में?
निश्चित रूप से हमारा पूरा प्रयास रहेगा कि जो भी हमारे ग्राहक हैं, जो जनता है, उनको अधिक से अधिक सुविधाजनक तरीके से बैंकिंग की समस्त सेवाएं उपलब्ध हों. चाहे वो बैंकिंग फ्रॉड से संबंधित हो, जैसा कि आपने कहा, या आपने कहा पेस्की कॉल्स उनको आते हैं, उसमें किस प्रकार से जो है हमें उसमें कार्य करना चाहिए, किस प्रकार से हमें उन्हें हिदायत देनी चाहिए और क्या हमें उसके खिलाफ एक्शन लेना चाहिए, वो निश्चित रूप से इस संदर्भ में लिया जाएगा. और अधिक आपने कई सारी छोटी छोटी चीज़ें पूछी हैं. विस्तृत जानकारी के लिए मैं अनुरोध करूंगा हमारे डीजीज को कि वो आपको इसके बारे में कुछ और, क्योंकि हमने कई कदम इसके बारे में ऑलरेडी लिए हैं, तो संक्षेप में मैं रिक्वेस्ट करूंगा स्वामीनाथन जी को और राजेश्वर राव को कि वो इसके बारे में बताएं. और आप यू कैन स्पीक इन.
Yeah, thank you, sir. Thank you. I think I'll take the liberty of responding in English.
I know you
to avoid any ambiguity.
Yes.
To avoid any ambiguity. Thank you, sir. I think just to supplement on that, yes, you also mentioned about the steps that we have already taken. So as far as the regulated entities are concerned, instructions are already in place to use certain series of 140 or 1600. We also do a lot of awareness campaigns to educate the consumers how to stay away from pesky or fraudulent calls. it is also put in place from a regulation perspective, limiting the liability of customers in unauthorized electronic banking transactions is in place. The provision to give us shadow credit pending full investigation is also kept in place. And adherence to this is also examined when we do the on-site supervision. But oftentimes there are also pesky calls that emanate from unregulated entities and apps and platforms. This is something which only an active collaboration of the government, regulator and the law enforcement we will be able to work on. But this is something which we are conscious of, and we will take every possible step to ensure that the consumer's interest is protected. And wherever there has been a loss, it is our endeavor to work towards an early redressal.
Sir, I know you've mentioned a lot of things that are already in place, but since banks, even if RBI continuously keeps on saying that you have to do this, banks do not listen. Till the date, banks have advertised home top-up loans as personal loans, saying take the loan, use it for your marriage, use it for travel. Or, when you go for a loan, they insist on taking, you have to take an insurance or a credit card. Mis-selling is on rampant. So on these issues, any supervisory action?
See, there are 2-3 issues that you mentioned. Each of them, of course, the framework is certainly in place. Oftentimes, as Governor also mentioned, many of this behavior which is not consistent with the regulations, we resolve through dialogue. A supervisory action which gets publicized is only in the rarest of the rare cases where there are egregious violation or the most outlier behavior. Otherwise, oftentimes, the supervisors engage with the entities on a bilateral basis and ensure that the regulatory guidelines are adhered to. So that shall be our endeavor. You may not get to read them in the media, but wherever there is a non-compliance, on an annual basis and also on an ongoing basis, we deal with the entities, and oftentimes they all are complied with over the course of time.
Just to add to DG Swaminathan, the guidelines are already in place regarding top-up loans, what are the end use, etc. If it is given for unauthorized different purposes, it would be taken as an unsecured lending and will have to be dealt with accordingly by the bank. That is one point. As regards this mis-selling and forced insurance, RBI guidelines are already in place regarding this mis-selling issues, and we are also looking at comprehensively reviewing these guidelines. We should be trying to come out with some guidelines shortly on this area also, on the conduct of the banks in various areas.
Thank you, sirs. अब मैं अनुराग शाह से आग्रह करूंगा कि वो अपना प्रश्न पूछें.
थैंक यू पुनीत सर, थैंक यू गवर्नर. सर, जिस तरह से आरबीआई ने भी कहा था कि जो बैंकों के द्वारा इंश्योरेंस कंपनियों में निवेश किया जाता है या फिर जो दूसरी सब्सिडरीज में निवेश किया जाता है, उसके निवेश से जुड़ी हुई गाइडलाइन जो है वो आरबीआई की तरफ से कब तक आ जाएगी, और क्या उसमें हम ये भी देख सकते हैं कि जो बड़ी इंश्योरेंस कंपनी है, कोई बैंक के अंदर मेजॉरिटी हिस्सा खरीदने का भी उस तरह का प्रावधान होगा? और सर, अभी जब जिस तरह से कुछ वक्त पहले वित्त मंत्री ने भी बैंकिंग प्लेटफॉर्म के जरिए मिस सेलिंग की चिंता जताई थी, चीफ आईआरडीए के चेयरमैन के द्वारा भी चिंता जताई गई थी, स्पेशली इंश्योरेंस के संदर्भ में, तो क्या आरबीआई का डेटा भी उसको सपोर्ट करता है या फिर आरबीआई का क्या कहना है?
नहीं, देखिए, जैसा कि अभी आपको स्वामीनाथन डीजी ने बताया कि मिस सेलिंग के हम लोग बिल्कुल सख्त खिलाफ हैं. कोई भी इस प्रकार का यदि वाकया होता है, इस प्रकार का कोई भी इंस्टेंस हमारे ध्यान में आता है, तो निश्चित रूप से उसके विरुद्ध सख्त से सख्त कार्रवाई की जाएगी. आप इस बात के बारे में बिल्कुल 100% निश्चिंत रहें कि किसी भी ग्राहक के विरुद्ध यदि मिस सेलिंग की कोई भी शिकायत है तो रिजर्व बैंक उसके लिए उसके साथ में नहीं है और उसके विरुद्ध में उस बैंक या रेगुलेटेड एंटिटी के विरुद्ध में कार्रवाई होगी. कार्रवाई किस प्रकार से होगी, जैसा कि टीजी स्वामीनाथन जी ने भी आपको बताया, वो हमारे को उसके लिए ऐसा नहीं है कि हम उसको बैंक को बोलें कि हम आपका रजिस्ट्रेशन ही बंद कर देते हैं, लाइसेंस बंद कर देते हैं. ऐसा तो नहीं किया जा सकता, आप भी ये समझेंगे. लेकिन हम इसके लिए बहुत ज़्यादा गंभीर हैं और इस प्रकार की अगर कोई घटनाएं होती हैं तो उनको गंभीरता से लिया जाएगा। पहला आपका जो प्रश्न था वो था कि किस स्वरूप में जो बैंकिंग कंपनियां हैं और उन्होंने कई सारी अपनी सब्सिडरीज वगैरह बनाई हुई हैं, NBFCs हैं, इंश्योरेंस कंपनीज हैं, उसके बारे में एक मसौदा जो नियम का है, रेगुलेशंस का, वो हमने प्रकाशित किया है और उसके बारे में कई सारे सुझाव हमारे पास में, टिप्पणियां, सुझाव हमारे पास में आए हुए हैं, उनका हम अध्ययन कर रहे हैं। देखिए, जैसे मैंने आपको बताया, ये सब चीज़ों को हम ध्यान में रखते हुए उनके सुझावों को पूरा से गहनता से अध्ययन करने के बाद में ही कोई निर्णय लेंगे। मैं इतना ही इसके ऊपर मैं आपको बताना चाहूँगा कि अगर कोई कंपनी या बैंक एक और सब्सिडरी के मार्फत से वही बिजनेस, वही व्यापार करती है तो उससे जो है दो प्रकार की हमारे को समस्याएं सामने आती हैं। एक कॉन्फ्लिक्ट ऑफ इंटरेस्ट रहेगा, क्योंकि वो सेम कंपनी है तो इस कंपनी में व्यापार हो या उसमें हो तो एक कॉन्फ्लिक्ट ऑफ इंटरेस्ट है। दूसरा जो इसके अंदर में समस्या है वो ये है कि एक रेगुलेटरी आर्बिट्राज है। बैंक्स एक अलग कानून के ढांचे में कार्य करते हैं, NBFCs एक अलग कानून के ढांचे में करते हैं, तो उसकी वजह से जो रिस्क्स हैं NBFCs के वो बैंक्स के ऊपर में न आए, इसके पीछे में ये जो हमने जो मसौदा प्रकाशित किया है उसके पीछे में ये है, ये उसके पीछे में विचार है। ये बात भी हमें ध्यान है कि कई सारी कंपनियां, कई सारे बैंक्स ऑलरेडी इसमें लेगेसी इश्यूज हैं, तो वो ऑलरेडी जो हैं उन्होंने इस प्रकार की कई सारे NBFCs कंपनियां, सब्सिडरीज स्थापित की हुई हैं। तो उनके बारे में अब हमें क्या करना होगा, क्योंकि हमने ही उनको इस प्रकार की पहले अनुमति दी। तो अब इन सब चीज़ों को सोच करके और विचार करके किस प्रकार से हम आगे इसमें एक सब मिलजुल करके, ताकि लोगों के जो डिपॉजिटर्स हैं उनके भी ध्यान को, हित को ऊपर रखते हुए, और साथ ही साथ जो हमारे अन्य जो हितधारक हैं जिनमें बैंक भी सम्मिलित हैं, बैंक के ओनर्स सम्मिलित हैं, तो उनको सबको ध्यान में रखते हुए ही हम कोई कदम इसके बारे में लेंगे।
धन्यवाद सर। अब नेक्स्ट विल बी मिस्टर विश्वनाथ फ्रॉम NDTV Profit.
Good afternoon, Governor. Thank you so much, Puneet sir. Governor Vishwanath Nair from NDTV Profit. Two things that made sort of a debut in your speech. First was the less restrictive monetary policy, which I think a lot of people expected a rate cut but weren't sure how long this is going to last. So I just want to understand from you, when you say that the MPC feels a less restrictive monetary policy is appropriate in the current juncture, is it limited to this policy or are we talking about the next few quarters? And the other, the second part which made a debut, and that's in continuation with these regulatory moves, is the cost of regulation, which I've never heard the RBI talk about. At least the RBI always talks about the need for regulation, not so much the cost for regulation. Yes. I just wanted to understand from you, so far a lot of my colleagues here have written about how the RBI is a no-nonsense regulator, you know, sort of an iron fist type of regulator. Are we changing that face at all?
No, I can't talk, about the past. It will not be correct on my part, to sit on judgment. But I would certainly say that RBI as an institution has been able to, over the years, carry out the mandate that has been given to it. And I would also like to say that I do think that the cost of regulation, may not have heard of it, is a different thing. But I think back, consciously or unconsciously, I think consciously, this would certainly have been a factor in determining what, they are going to do. You may not have heard it, that's a different thing. So I can't say about that. But what one can see, having been outside the RBI and having interacted with the RBI, been on board of the RBI, is that certainly, all these factors are certainly, considered while making any regulation. So it's not only, about financial stability, it is also, about the cost at which, these things come in. I only made it very, very clear so that everyone is, assured about that. So this is one. And second, you said, whether this is policy only for this. Well, obviously, when we are keeping a neutral stance, and as was mentioned, the rationale for that is the tremendous uncertainties, that we are facing today. That does not call us, to change our stance. So our stance remains neutral. This less restrictive policy is only, for this particular MPC meeting, and not, going forward. This stance continues to be neutral. Thank you.
Thank you, sir. Next, we'll have Mr. Chris from FT.
Hi there. Thank you very much. I was wondering how concerned you are about the recent pressure on the rupee going forwards, and are you also worried about imported inflation?
Well, the rupee is the rate, that the rupee settles at is a function, of the demand and supply, number one. Number two, I would also like to say, that we should really, not be looking at, but that's, perhaps our job, and so we do it. We should not really be looking at, a day-to-day kind of a volatility. It is, more the long-term rate, that we should be looking at. And when I say this, I say this, not only for the rupee, but also for other asset classes, whether it is the Sensex or the Nifty, or whether, it is the gold prices or the asset prices. Day-to-day movements may not be, all that, important. As I mentioned, this was certainly factored in while deciding on the rate cut and the stance that we are maintaining. It was certainly factored in. That's one thing I would like to say. And the second thing is, of course, as you are aware, that a higher or a lower, or depreciated rupee certainly, puts pressure on inflation. But at the same time, global uncertainties are also, I think a higher worry, for us would be the global uncertainties as to how, that pans out. So global uncertainties, even if, the trade wars, the tariff trade wars were not to carry out, but just the uncertainty in itself is something, which is worrisome. And that, because, that has direct impact on growth, that has direct impact on investment decisions, that has direct impact on consumption expenditure decisions, which get deferred. So let's keep in mind, that and a lot of, the appreciation of the dollar and the depreciation of the rupee is actually linked, to this uncertainty. So this uncertainty being the underlying cause, to a great extent, of the dollar strengthening, rupee depreciation, is not good for growth, and it's not good for imported inflation. So that is something, which we all need to be cognizant about.
So that's the governor clearly indicating that with regards to where the rate cut cycle goes, the stance remains absolutely neutral. So in line with market expectations, to sum it up all, we have the MPC which has gone ahead and cut the repo rate by 25 basis points, and this is for the first time in nearly 5 years. In fact, the SDF rate shall be at 6%, and the marginal standing facility rate, that is the bank rate as well, that be at 6.5%. The previous one is at 6%. In terms of the press conference, the primary objective of the RBI Act is to focus on inflation. Secondly, the new liquidity coverage ratio that we're talking about, the norms that were announced, that will not be implemented before the 31st of March 2026. So that's an important one to watch out for. And clearly, with regards to where the rupee move goes, the governor is indicating that you should look at the long-term movement of the rupee. In fact, in terms of the key takeaways as well, if you see, the loans are expected to also get cheaper, and this is on the back of the 25 basis points rate cut. The stance has remained flexible, and RBI is cautious, watching global headwinds, and they've said inflation is easing, and they're acknowledging the slowing growth as well. So that's to sum up the overall. But how many more cuts are we going to see in the current financial year is going to be a key question from here on, because a lot of expectations are there could be another one, which is of a 25 basis points. If that happens, an overall 50 is what we should be watching out for in FY26 as a whole. But let's quickly slip into a short break. Lots more lined up on the other side on Profit Buzzers. Please stay tuned to NDTV Profit.
And the reason for the success of the restaurant this magnitude, because people felt भाई का जिगर है, business नहीं है इसमें. This is our time to not bend down to their accents and their foods and glorify it. It is our time to lift our own cuisine, our own culture.
1, 2, 3, 4.
Toughest person to cater for, to cook for, President Trump, Prime Minister Modi, या शाहरुख खान?
मेरा दिल जिसके पास है, शाहरुख खान.
You tweeted recently after President Trump won the election that can I make something for you?
So एक तरह की खिचड़ी है जिसमें आप
Welcome back. Here watching Profit Buzzers. Let's quickly just look at what markets are doing as we speak. If we could just pull up Nifty 50 as well as Bank Nifty on the screens. You are seeing some bit of pressure that's coming in. 23,576 is where Nifty 50 is trading at. From the day's highest levels, we have seen some bit of profit booking that has come in. So clearly, it seems that the 25 basis points cut is something that the markets had already priced in as well to an extent. In terms of banking majors as well, let's just pull up Bank Nifty on the screens and then the PSU Bank Index very quickly. There you go. You have Bank Nifty as well, which is trading at the day's lowest levels. And you have the Nifty PSU Bank Index pretty much near there with cuts of almost 1% coming in there. So that's the overall market landscape that we are watching out for. But one stock that is in focus is a Cummins India on the back of earnings. Let's just quickly pull up the stock on the screens. You have the revenue and the profit numbers that have actually gone ahead and beat street estimates. In fact, the management is first speaking to NDTV. 2.7% is the kind of cut that we are seeing in terms of the stock price. But let's first welcome in Shweta Arya, Managing Director at Cummins India, to talk to us about what's worked, what's not worked. Shweta, good afternoon and welcome to the show. My first question coming to you is, in terms of the estimates, the revenue pad absolutely beat what the street was estimating. There has been a slight miss in terms of where the EBITDA margins are concerned, and what I understand is it's on the back of the product mix change that has happened. if you have to look at the numbers internally, is it in line with what you were expecting, or are there any deviations?
Line with what we were expecting. We were backed by strong domestic demand, and we were able to execute really well. So our power gen segment, industrial segment, aftermarket, in all of those spaces in which we operate in, we were able to execute well along with strong demand. We were able to see positive demand in the export segment as well. So this was in line with our expectations.
That's in the domestic market. How are you looking at the exports? Because the commentary does tell us that there was some bit of uncertainty with regards to global markets. And how soon are you expecting a recovery to come in on that front, and what's the growth expectation?
The export markets continue to be a mixed bag. We provide our products to various markets around the world. And since we operate in so many markets around the world, the geopolitical situation in different markets is different. We have seen positive moves in certain markets. However, with the new tariff changes that are expected to come in, we are now evaluating how they will impact each of these different regions globally. So at this point in time, we are evaluating. It's a wait and watch stage.
And with regards to your outlook on the on the revenue and margin guidance, where does it stand for the fourth quarter as well as for FY26?
For the fourth quarter, for the full financial year this year, we maintain that we will see double-digit growth in our revenue. And for the next financial year, we see positive domestic demand. We see our exports also showing some positive moves, although it is a wait-and-watch situation because of the tariffs. Our endeavor will be to maintain double-digit growth in the next financial year as well.
Okay. And with regards to the pricing dynamics, that is something that the street was watching out for as well on the CPCB 4+ engine market, right? What would you have to add?
We are watching the pricing in the market. All the competition has launched their products. Our product is very well accepted in the market. It's a big technological shift for the market, and our product has been very well received. There's a lot of reliability we have been able to demonstrate. We continue to watch the price. Our belief is that it will take a quarter or two for the pricing to settle in the market because the content for the product has changed, and this is a big technology shift. It will take some time for the price to settle.
And which segment, Shweta, are going to be growth drivers? Because a lot of chatter that's happening that this power generation demand is going to be led from data centers as well, of the big tech majors that are coming up. How big a segment is this going to be from here on?
For our power generation segment, data centers continues to be a demand driver. So does the mission critical power segment, the segment which requires power for applications which are like hospitals and others. So that demand continues. Commercial reality as a segment in the power generation space continues to show steady demand. On the other hand, our industrial market as well, where mining or rail with infrastructure spent in the country, capital expenditure that happens in these spaces, we will continue to see demand.
And what is the kind of outlook with regards to where capacity addition goes?
So the capacity addition for us, we have our projects lined up. We continue to invest in manufacturing capability to upgrade our manufacturing facilities, to get a new technology in our plants. We have scale from where we provide products for the domestic market as well as export. And as I mentioned, we will continue to see domestic demand grow. So to fulfill the demand, as well as to continuously upgrade our manufacturing facility, we have outlaid projects and we will see Capex coming in for those projects and for helping us fulfill our demand for our consumers.
And what's the kind of Capex that you're lining up, if you could quantify that for us?
This is mostly sustenance Capex for our plants. There are a variety of projects that are getting launched. I won't be able to give you a number, but with a large number of projects that are coming up. Okay.
That we are with the Capex aspect of it, Shweta. From the recent budget announcement on the Capex plans, do you think the government Capex spend that is going to come in is a welcome move according to you? And in tandem to that, do you think private Capex will then pick up as well?
So the government has laid out 11.2 lakh crores investment. And we see that is a positive move towards the infrastructure growth that the government has been talking about towards building a Viksit Bharat. We believe that also the push towards clean technology manufacturing, the national manufacturing mission launch, and then the credit guarantees to the MSMEs that have been laid out in the budget. These will bolster demand in the market. So our belief is that it will be positive for boosting domestic demand in the market.
Right. And when you talk about the US policy as well, how big an impact are you expecting in terms of business?
So the US policy and the tariff changes that have been announced globally do impact the supply chain for Cummins Inc. Relatively for Cummins India business, the impact is lesser because our supply chain is largely localized. And we also serve a large variety of segments. So while I say that, the tariff changes, we will have to evaluate the impact because they can lead to higher inflation, they can lead to higher regulatory scrutiny, and that can impact demand as well as margins. On the other hand, it can also be positive for exports out of India. So it needs to be evaluated further. We need to wait and watch. We believe that with a very strong local supply chain, the diverse segments that we serve in domestic markets as well as exports, we will be able to navigate these challenges. The challenges do remain, however.
Right. So, Shweta, my question coming to you is, we're talking about a double-digit growth coming in at least in terms of this year, as well as that's the ambition for FY26 as well. Take into consideration probably things don't work in our favor, right? Then what's the bare minimum that you could see? Because I think even Cummins Inc. has clearly categorically come out and said that they are projecting total revenue, including the JVs, to increase 10% in 2020 for them itself. So overall, with all the challenges, if they come in, is 10% the bare minimum? And if everything goes well, you could outmaster that number? Or is that how are you looking at that 10% number?
Our endeavor is to maintain the double-digit growth outlook. And with the segments in which we operate, the power gen, the industrial, the aftermarket, based on what we see from a demand perspective and the infrastructure spend in the country, we maintain the outlook on double-digit growth.
Right. All right, Shweta. Thank you so much for speaking to us at NDTV Profit. So that's the management of Cummins India, clearly categorically maintaining that endeavor of a 10% double-digit growth that even the global management also indicated with regards to where the India goes. The stock has recovered slightly from the day's lowest levels, but the pressure does continue. Cuts of around 2.8% coming in there. But shifting focus and coming back to the MPC, the post-presser policy, my colleague Vishwanathan Nair asked the governor about the regulator's less restrictive stance as well as the cost of regulation. Here's what he had to say. Please listen in.
Two things that made sort of a debut in your speech. First was the less restrictive monetary policy, which I think a lot of people expected a rate cut but weren't sure how long this is going to last. So I just want to understand from you, when you say that the MPC feels a less restrictive monetary policy is appropriate in the current juncture, is it limited to this policy, or are we talking about the next few quarters? And the other, the second part which made a debut, and that's in continuation with these regulatory moves, is the cost of regulation, which I've never heard the RBI talk about. At least the RBI always talks about the need for regulation, not so much the cost for regulation. Yes. I just wanted to understand from you, so far a lot of my colleagues here have written about how the RBI is a no-nonsense regulator, sort of an iron fist type of regulator. Are we changing that face at all?
No, I can't talk, about the past. It will not be correct on my part, to sit on judgment. But I would certainly say that RBI as an institution has been able to, over the years, carry out the mandate that has been given to it. And I would also like to say that I do think that the cost of regulation may not have heard of it is a different thing. But I think back, consciously or unconsciously, I think consciously, this would certainly have been a factor in determining what they are going to do. You may not have heard it; that's a different thing. So I can't say about that. But what one can see, having been outside the RBI and having interacted with the RBI, been on board of the RBI, is that certainly all these factors are certainly considered while making any regulation. So it's not only about financial stability; it is also about the cost at which these things come in. I only made it very, very clear so that everyone is assured about that. So this is one. And second, you said whether this is policy only for this. Well, obviously when we are keeping a neutral stance, and as was mentioned, the rationale for that is the tremendous uncertainties that we are facing today. That does not call us to change our stance. So our stance remains neutral. This less restrictive policy is only for this particular MPC meeting, and not going forward. This stance continues to be neutral.
Right, so that's the RBI governor. But let's just also get in Vishwanath, who's our banking editor, to actually give us a sum up of the key highlights of the policy. Vishy, over to you.
All right, so policy as expected, but still resulted in a lot of smiles. Of course, the RBI governor, in his maiden monetary policy speech, Sanjay Malhotra, has delivered a 25 basis point rate cut. This was widely expected by most economists who were polled across the country. 25 basis point rate cut, while this is an initial sort of a move towards an easing cycle, what stood out was more important, the statement that he made towards the end of his speech, where he said that the MPC felt that there was a need for a less restrictive monetary policy because that is what the economy needed. As far as the growth and inflation outlook are concerned, largely the same, but says some minor changes. Your GDP growth for FY26 is pegged at 6.7%. This is on the upper end of the government's own sort of estimate of 6.3 to 6.8% GDP growth for the next financial year. Similarly, on inflation, yes, it is coming within the 4% band. It's not still below 4%, but those are all healthy signs. According to the RBI governor, food inflation is showing signs of moderation, and unless there is some kind of major sort of supply side issue, food inflation will likely continue to moderate. It is important, of course, to also look at how the RBI governor is playing up the issues with respect to global uncertainty. So yes, there is a global macroeconomic uncertainty. Secondly, trade policies are uncertain at this point in time, and material weather changes. These are all key risks which could affect future monetary policy, growth and inflation outlook. So that's something that the RBI governor is keen to point out to the rest of the system. Overall, while he maintained what was widely expected in the monetary policy, one statement that he made apart from this also caught my eye, which was when he said that regulations are not devoid of costs. So that was an important sort of message that is coming in. That the RBI governor is recognizing that yes, for financial stability and for orderly functioning of the financial system, good regulations are essential, but regulations are not devoid of cost, and therefore the RBI will keep that factor in mind for future drafting of regulations. Remember that regulations around liquidity coverage, regulations around project financing, regulators around expected credit loss framework for the banks, all of these are pending finality at this stage, and all lenders in the system are awaiting the RBI's green signal on when these rules will come into play and what is the final form that they will take when they do come into play. So those are all key issues that the RBI governor has covered in his maiden speech. Over on to 12 o'clock when the RBI governor will address the press, we'll probably get to ask some questions to him then.
Right, so I think that was just a recorded toss coming in from Vishy just ahead of the press conference, and hence he's alluding to the press conference in this one as well, but to be noted. But moving from there on, another important announcement that did come in from the RBI today is with regards to the launch of the exclusive bank.in domain to tackle financial frauds. Now, what would this do is that the banks will have to change their internet domain name to bank.in. The reason for this is mainly to strengthen the security further. They will extend the additional factor of authentication for digital payments to online international transactions involving offshore merchants. In fact, what they've said is that the Reserve Bank shall implement the bank.in exclusive internet domain for Indian banks, adding that the initiative will take effect from April 2025 and it will aim to help customers differentiate between legitimate banking websites and fraudulent ones. Additionally, a fin.in domain will be introduced as well for the broader financial sector. So that's the overall landscape in terms of the additional announcements. But now, the key is, how does this impact the markets and which participants get impacted with regards to the RBI rate cut? I have my colleague Harsh who's joining us to tell us about the specific stocks that could get impacted in the wake of the rate cut. Harsh, over to you.
Well, thanks so much for that, Hiral. Three pillars in which I'm going to break this down into. One, lower loan rates and EMIs. So that's the first part of it. Lower loan rates, what is the impact of that on lenders? That's the first part of it. The second part of it is the rupee might see some bit of weakening, if at all, and therefore export facing sectors may well benefit. And the third part of this is to spur consumption, because EMIs will likely come down as a result of the rate cut and therefore bringing a bit of a smile to consumers as well. I want to first start off with the lenders. NBFCs in particular, they will see the repo linked borrowings that they take from the market, the cost of that will fall and therefore will aid margins to the tune of loan rates not getting adjusted and basically those rates not getting passed on to borrowers. So to that extent, margins will get better and a straight flow through to ROA. So cheer with regard to where lenders is concerned, it's a positive impact for them. Just pulling out some names, M&M Financial, the PBT impact of this is roughly 2.8% as per Morgan Stanley estimates. Stock is already moved 5% plus in the last week or thereabouts. SBI Cards, again 5% move on the stock over the last week, 2.6% PBT impact as a result of this. Manappuram, 2.5% again in PBT impact, and the stock has moved up 4% as a result of this. Those are three big impact names. On the negative side though, because there is more floating rate borrowing and less and more fixed rate lending which has happened, you might see some bit of reduction when it comes to margins, and therefore you have an LIC Housing 7% negative impact on PBT, PNB Housing 2.5% negative impact on PBT as a result of this 25 basis point rate cut, and Canfin Homes 2.3% again PBT impact, and you might see those start to flow through as early as Q4 partly and Q1 FY26. They will get, these are some of the stocks which will get impacted. For banks, marginally negative in the near term because margins will come off, but positive in the medium term. So you'll see banks ROAs getting slightly impacted, anything between 5 to 10 basis point impact, because margins will get hit, and therefore you might see around a 5 basis point impact on ROA for most banks. Now in terms of currency, export facing names, you might want to keep that on your radar. IT stocks, pharma stocks, and some auto stocks, something like a Sona BLW gets 40% of its revenue from North America, Samvardhana from US, China 29%, and JK Tyre 16% of its revenues come from export. Outside of that, even Balkrishna Industries and Polycab may well see some bit of positive impact as a result of this. Last off, consumption theme may well benefit a little bit more as a result of the rate cut that has come through.
Right, thanks Harsh for getting us the details. So that's the kind of impact that we could see in terms of stocks. But we just have a Kotak which has come out with their report as well on the RBI MPC. What they've said is that the focus is now back on growth as inflation will gradually move towards the target. That is what they're indicating. And they're expecting the rate cut cycle to remain absolutely shallow. Another 25 to 50 basis point rate cut is likely. And they've reiterated that, they've said that the RBI has actually reiterated its commitment to provide sufficient system liquidity. That's what is coming out from Kotak as well. So overall, if you see in terms of the markets, there is that slight bit of pressure that has continued to build in as well. But let's quickly hear out a score of experts and analysts what they had to say on the back of the rate cut. All of the guests who we spoke to as well during the policy.
So our expectation is that we will see growth actually not pick up as optimistically as what the RBI is expecting. We're looking at about a 6.4% GDP growth rate. I think it's going to be like quite a difficult operating environment. We know the challenges about exports, but of course, exports aren't that key economic driver for India. It's more about what's happening domestically. And I think 125 basis point cut doesn't materially change the game at this point. Sure, we do have a bit more fiscal support coming on board, particularly from April, around those adjustments for middle-income households, but I think it's still going to be a challenging environment as well. And I think one thing and one area that, we don't pay enough attention to as we should is that, labor supply overseas and that flow through to remittances and then that impact on private consumption. If we do see a material pullback in labor supply of overseas workers in the US, then that could actually flow through to a weaker consumption picture as well in India. And of course, consumption is such a critical driver of the economy. So I think that's a risk that is quite frankly, flying under the radar at this point that we need to pay really close attention to. And I think in terms of how much more the RBI is going to move, I don't think we're going to see as much movement as what we've seen from other central banks like the ECB, the Fed, the Bank of England. I think they're going to tread a lot more carefully because the one complicating factor for the RBI when it comes to easing policy that these other central banks don't have as much is around the currency. And because we do have such a weak rupee, that potential flow through to imported inflation is a concern. And I think one thing as well that we need to keep a close watch on is, energy prices are low at the moment, but if we do get a resurgence at the same time that the rupee is extremely weak, then that's going to be particularly troublesome for an economy like India. So I think we're not going to see much more cuts. I think it's going to be a shallow easing cycle this year, which really does limit the revival in domestic demand that we will see as a consequence of that.
We're penciling in one more rate cut. That's what we were penciling in before today as well. Quite frankly, if we were to be looking at two more rate cuts, then I think they would have changed the stance to accommodative. I'm not sure they would have continued with the neutral stance if they were going to be considering two rate cuts going forward. And that's why I think sticking with a neutral stance makes sense in this situation where if you're only going to cut rates one more time, why would you have moved to accommodative? And I know I said it before, I'm going to say it again, the focus on the upside risk to inflation, I think that's another hint that they're not looking at too many rate cuts going ahead.
If you really look at the MPC policy, when we said flexible inflation targeting policy, that was supposed to be flexible. That doesn't mean that we have to go to 4. If your real rate is too high, even at 5%, if the real rate is too high and the growth is struggling, you have room to cut rate, and which is what they have done this time around. And that's why I actually look at it, there is more scope, because if you look at their, and one more thing he also said is forward looking, right? So if you look at their inflation projection for the next year, and if nothing changes in April policies, we can actually see, further rate cut because even at 6th quarter, and if you look at the projection of around 4.2, we are at 2%, almost 2% real rate, right? And therefore, there is enough room to cut that rate and no need to wait for 4% to come through.
I still believe that going forward, the rates cut are embedded. They will come. But looking at US scenario, how the rate scenario is panning out, where it's believed that they will hold for some more time. And similarly, even the Bank of England spoke yesterday. So we will have to look at a global perspective as well. And looking at that, keeping the neutral stance, and then probably taking a better call in April would be more prudent. And I believe that at least two rate cuts are more there in the policy stance in next 1 year.
Right, so that's the key commentary and the reactions that are coming up. But very quickly, let me just pull up three stocks: Federal Bank, IndusInd Bank, and an Axis Bank. And these are the ones which are reacting positively on the back of the draft LCR guidelines that are unlikely to be implemented before the 31st of March 2026. Positive for all these three names. So watch out for these counters. And very lastly, if you talk about the ECL and draft project financing norms, they are also unlikely to be implemented soon, at least a year away. It is still only a discussion paper and not even a draft, on the back of which you have PSU banks which are in focus, REC, PFC and IRDA. Let's pull up PFC, REC and IRDA as well. These are the three stocks. IRDA, to the extent, almost all of them are trading near the day's highest level. So these are few of the other reactions that we should be watching out for as well. But let's quickly slip into a short break. On the other side, we'll be joined by the management of Thermax to talk about their third quarter performance. Please stay tuned.
also is telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal onwards.
Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects.
Do you really know the company you invested? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit's research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invested? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit's research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invested? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit's research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Hello and welcome. You're watching India Market Close here on NDTV Profit. Let's pull up where the Nifty is. We're seeing a bit of a toughness in the day, especially after a 25 basis point rate cut. Just goes on to show how much of that has already been built in, and a lot of that was already penciled in to the way the Nifty moved during the week. But let's look at it intraday as well. And we're just about 23,500. We're very close to the day's low, in fact, or just off the day's low, and that's what will likely be interesting. I'll also want to take views from guests as to where we go from here, because from the day's high we've come a long way to the day's low, 200 odd point fall from the high, and therefore will be interesting to see what happens next. Also, I'd want to understand how the Nifty Bank and the Nifty IT index are moving, because some bit of divergence on both of those. The Nifty Bank down 0.7 odd %. The Nifty IT index though was trading in the mild green. We're currently sitting 0.5% lower where the Nifty IT is concerned. So both of those trading in the negative. Let's pull up the heat map of the Nifty. Some earnings were in focus as well. Hero Moto, for example, up 0.7. Steel stocks doing very, very well today, and Tata Steel is up 4%. We'll get more insights as to why that is so. Trent is up nearly 4% as well after the kind of day it had yesterday. Some brokerages positive, despite the kind of numbers that came through. Lots of target prices cut, but they're still positive with regard to trend, and that's the pocket they believe will do best in terms of how to play consumption in India. Bharti, extremely strong numbers, and that's why stock sitting pretty. 3% higher on a day like this, not bad at all. What's not doing well? Well, it's TCS within the IT pack, SBI on the back of numbers, plus some brokerage commentary coming through, 2% lower. No sign of recovery on that count. Reliance Industries is down 1%. And then you have some NBFCs also seeing some pressure. Shriram Finance, for example, seems to be seeing some bit of profit booking after that 50 basis point rate cut. So 1.4% lower on a Shriram Finance as well. Let's look at the advanced decline. Let's assess the breadth very quickly. Well, firmly in favor of the declines, and 2:1 in fact. And let's look at the mid cap as well as small cap indices. Let's see how they've shaped up for the day, in fact. And flat on the Nifty mid cap, absolutely flat. And the Nifty small cap is down around 0.5% thereabouts. So pressure across the board, across all three indices, but we're off the lows when it comes to the small cap index. But the fall from the high, both on the Nifty mid cap as well as the Nifty small cap, is over 200 points. So Nifty 50, mid cap, small cap, all have fallen over 200 points from the day's highs. We have with us Ruchit Jain as well as Amrish Baliga to talk to us, of course, about how the market is really shaping up. Ruchit, let me come to you first on the technical side. What's the sense like at this point? We've, again, I want to reiterate, fallen over 200 points from the highs. Where to from here?
Yeah, hi, very good afternoon.
Good afternoon.
Well, we have seen a recovery in last few trading sessions ahead of the event itself, and we can clearly see some unwinding of positions happening in today's trading session post the event. But we believe that in the near term, our markets will now go through some sort of time-wise correction or consolidation phase, wherein 23,400 to 23,300 will act as a support, while on the higher side, 23,800 would continue to remain a resistance. So we are not expecting any big trended phase coming in on the index in the near term, but rather a time-wise correction or a consolidation could be seen.
Okay. Amrish, what's your sense with regard to where the market goes from here? A 25 basis point clearly was penciled in. At least that's the reaction we are seeing today.
Right.
But do you expect now markets to start inching higher as the unwind or the impact of that 25 basis point rate cut starts to happen through the economy?
No, I think that will take a while, and also had been announced in the budget, which should in fact, I mean, at least increase consumption going ahead, but that's going to take time. That's not going to happen immediately. I mean, based on the macro numbers, based on the earnings which we have seen, I still believe that we should see the markets going down further. It will not crash, but I think it will be lackluster. It will slowly go down. And the levels I'm looking at is Nifty 22,000, 22,500, which is okay, a decent close to 5% fall from here. So I think I mean, it can go to those levels, stay at those levels for a while, and possibly we could see better days, maybe in the third quarter or possibly the fourth quarter of the new financial year.
Okay. Ruchit, your picks for this afternoon?
A couple of recommendations that we like in this consolidation phase. First is a buy recommendation in JK Cement. Well, the stock has been showing a good relative outperformance within the entire cement basket since last few months. It's still trading around its 50-day high, and the price volume action also is quite bullish, where the price up moves have been supported by good volumes, and on any minor dips, we are not witnessing any volume-based selling in this stock. So JK Cement, I think, relatively should do well. At current levels, one can go long with stock below 47.50 for potential near-term targets around 5100. And a pullback move is anticipated in Crompton Greaves Consumer, where we have seen a decent correction along with the broader market since the month of October. But now on the weekly charts, the stock has formed a bullish engulfing pattern that to around its 200 weeks exponential moving average support. Generally, whenever we see such bullish patterns getting formed on the weekly charts, the stock tends to show at least a pullback move. So one can expect a pullback move and go long on Crompton Consumer from here on with stock below 350 for potential targets around 390.
Okay. So those are some views coming through for you. Amrish, if I can ask you, what's the one sector or stock or pick given the rate cut, you believe is poised for a turnaround?
In fact, I mean, I've recently got slightly bullish on IndusInd Bank because we've seen a decent cut in this stock because of the microfinance book which they had. I mean, there were asset qualities in the last 2 quarters, and because of which we saw a very decent correction. But being the 5th largest private sector bank, I mean, they have more than 7,000 points of connect, one of the largest distribution networks. And if you look at the loan book, it is very well diversified between consumer and corporate products. I mean, the mix is about 54-46. And in each of these products, they have a leadership position. For example, in the vehicle finance, they are among the top 3. In microfinance, they are among the top 2. About 91,000 Bharat Money stores, and they have a reach, I mean, extremely good reach at about 1.61 lakh villages. And if you look at the Q3 numbers, they were weak, no doubt. But again, they were in line with market expectations. And if you look at the retail deposits, they went up about 14%. Vehicle disbursements went up 25%. Corporate loan book grew 16%. So based on all this, we have seen some sort of a bounce back post the earnings. But I see that this is a new trend. I think we have seen the bottom as far as IndusInd is concerned. So I believe the downside is limited from here. And in fact, my long-term target I've revised to about 1,375, which is just about 1 time adjusted book value for FY27.
Okay. So IndusInd is the pick. IndusInd's had a good run, in fact, Ruchit, over the last maybe 2 weeks, if I can call it. We can pull up maybe the 1-month chart of IndusInd. It's had a fabulous run from those 940 levels, sub 1 time price to book. It's up maybe 13%, which is extremely strong for this kind of market. Ruchit, sense with regard to charts on IndusInd?
Short-term perspective, it will be very crucial for the stock to give a breakout above 1100 because the 100-day exponential moving average is placed around this 1090 kind of range. So if the stock manages to surpass this 1090-1100 hurdle, then we could see a move towards 1200, 1220 in the near term. But since the stock has already seen a pullback move, rather than going long here, I would either recommend to go long on dip towards 1000 or on a breakout above 1100.
Okay. All right. So that's views coming in with regard to technicals on IndusInd Bank. But let's get more perspective with regard to some of the steel counters. Let's quickly actually pull some of those up. Let's pull up a Tata Steel. Let's pull up a JSW Steel. And there you go, 4% higher. Tata Steel up 3.5%. Impressive on both of those counts. Ruchit, how are some of these looking on charts?
Seems probably a pullback move because metals was one of the spaces which has not yet participated in the recent markets pullback. And we have seen that the dollar index has now corrected from its swing high of 110 to 107. So there is an inverse correlation we usually see between the metals and the dollar index, and hence we are witnessing a pullback move in this. So Tata Steel, I think in the near term has potential to rally towards 140, 142, but not expecting any big trended phase in the market in the stock. But yes, a pullback towards 142 can be seen.
Okay, let's pull up the Nifty Metal as well. Thanks for those views, Ruchit. But the Nifty Metal also doing well for itself. The top sectoral gainer today. And on a day where otherwise it's been a tough day overall across sectors for the market. Now, this is clearly sector of the day, therefore. And Mika is here to give us more perspective as to why these counters are buzzing. What's happening, Mika?
Yeah, except 2 counters, we have most of the counters on the Nifty Metal in the green. When you talk about the stocks, we have steel stocks especially, buzzing in trade. We have JSPL, intraday high of 4.8%. Tata Steel, it's hit an intraday high at 4.2%. JSW Steel at 3.3% and SAIL at 3.1%. Now, in terms of why are the steel stocks buzzing, we have 4 factors that we've brought down. One is positive cues from China. Now, the Shenzhen government has vowed to bring, real estate investment back to growth, and a better Chinese steel market, better Chinese real estate market stands positive for steel demand, and this in the end has a positive impact on global prices of steel. The second one is better demand in 2024. Now, as per the multinational steel manufacturer ArcelorMittal, the S.A, headwinds are expected to ease in 2025 for the sector. The steel demand is expected to grow in 2025 when you compare to 2024, and the average steel consumption ex-China is expected to grow 2.5% to 3.5% as per the company in 2025. We also have a potential relief from steel imports in India. Now, higher steel imports have been hurting the industry and domestic players for months now, and players do expect the government to impose a 25% safeguard duty on steel imports. And as per JSW's steel management, who told NDTV Profit, the duty is expected in the first half of 2025. And lastly is a potential price hike on the cards. Now, last week itself, we had some channel checks that indicated that the industry is getting ready for a price hike, and this will be on flat products in the month of February itself, and the potential price hike is by 1,000 rupees per ton.
Okay, thanks so much for that perspective, Mihika. Of course, steel stocks flying on the back of that, and it's always great perspective. Ambrish, lots of levers that Mihika just spoke about. If you had a chance to listen in, what's the sense?
No, I mean, the clear sense is that we will see the steel prices going up because of all these, because of the real estate demand again increasing in China. Clearly, you'll have the steel prices going up there. Domestically, I think we would have a safeguard tariff, and that should also, at least be good for the Indian companies to improve their margins. And the managements also have been talking of about 10 to 11% sort of a volume growth going ahead. So, which again is very positive. So, overall, again, as far as steel is concerned, don't see much of a downside from here.
Okay, so those are views coming in with regard to steel, of course, on the fundamental side to constructive, Ambrish. But let's bring in Abhizar Jain, Head and Fund Manager at Monarch AIF, I beg your pardon. Now, Abhizar, your fund has outperformed, of course, and congratulations on that. You're closing in on 1,000 crores, if I'm not wrong, in terms of AUM. What I'd want to understand from you, and correct me if I've made any of those statements which are incorrect, but give us perspective on what the rate cut means, because that's what currently is news of the hour. What does the rate cut mean for the economy, and what are those sectors in terms of which will get positive traction as a result of this, because there will be some amount of influence, some amount of rub-off.
Thank you, Harsh, for inviting me to this show of yours.
Pleasure having you.
Yes, all your statements are correct. Of course, the rate cut has been, pending for quite some time. It's a rate cut first time in the last 2 years now for us as an economy. And of course, it was correctly timed as per our assessment, because RBI had its own set of things to balance. The growth has slowed down, as we all know, a little bit in the last 6 months to 9 months. And there are a confluence of global factors which are playing out in terms of the dynamics for the inflation. But having said that, Harsh, I think the rate cut is a step in the right direction. And from whatever I could make out from the commentary of the new governor, it seems that they will be more data driven and they will be growth supportive in terms of their rate cut measures going ahead. So in that sense, if inflation were to move in the right direction, which is downward direction, which they also expect, then there could be more measures around this front, to support the growth. Having said that, of course, the global factors will have their own play, and if inflation picks up, then the situation changes. In terms of your question on which sectors could benefit and how do we see that playing out, it's little early days, but what we have even seen from the budget is that there is a fillip for consumption to grow, and that to the discretionary consumption, because now you have extra in-hand income as as an individual, and that is at the whole country level, because obviously at the lower income levels there is more money in hand for those guys, but even for the higher income levels, then the the income tax cuts which has come in the budget is putting more money in the hands of the people. And now with this interest rate cuts, your EMIs come down, so you make that bit of extra saving. So I think that increases the potential for the people to take on a little bit more debt at the household level, and hence the discretionary consumption sectors, in our view, should get positively impacted. The lenders which support this should also get positively impacted, in my view, whether it would be the NBFCs or the banks, because the credit cycle can get supported. So that's how we kind of see it. But as I said, Harsh, it's little early days. This is just the first cut after 2 years. So
Sure.
we'll have to watch out for the data in the coming months.
Sure. Abhisar, very quickly, 30-second answer. Could you talk to us about how you've positioned yourself in the last 6 months?
Yeah, so see, Harsh, what we have been seeing that in the market as such is that while the macros have always been improving for India in the last 3-4 years, but the valuations have been a problem, and valuations have remained a little bit stretched because of the huge flows that have been coming in the mid cap, small cap thematic themes. So how we have positioned ourselves is basically a barbell strategy. On one side of the barbell, we have the value large caps, which sit out of places like banks, telecom, and life insurance. And whereas the other side of the barbell is the carefully selected small cap stocks, which are beyond the 400 market cap company and all the way to 1400, 1500 kind of market cap. These are from various sectors. We have done deep research and bottoms up, work on these companies, and then selected them from various sectors like hospitals, EMS, auto banks, and the like.
And therefore, does that strategy continue into 2025 as well?
Yes, very much so, because though we have had some dislocation and around 3 to 4 months of correction, with which we have also talked about in our latest investor newsletter, more than 81% of the stocks are down 20% or more, but we believe that the valuation correction in some of the very stretched pockets could be long drawn. Okay. And it won't just get, all the froth might not get cleared with just 3 to 4 months of fall. At the index level, in fact, the falls are lower. The stock level, some of the falls are more. So we continue to maintain the same strategy where we are able to get good opportunities more in the stocks which are beyond the 400 market cap, where the popular indices kind of end, because the flows are going into the popular indices stock and stretching the valuation. And with the Indian economy's dynamism and the opportunities that are opening up across sectors, we are able to find opportunities more in that bigger basket of that 1,000-1,100 stocks starting from the 400 stock. On the large caps, of course, we do find a lot of opportunities in some of the sectors that I talked about, and hence that also continues, and hence the barbell strategy continues here.
And Abhisar, so therefore, give us two pockets where you feel valuations are stretched, and I won't ask for names, but two pockets where valuations are stretched, and two pockets in the current market which look extremely interesting, because we've seen a bit of a correction as well in the last 3 odd months, and therefore, what is it that you're positioning towards?
Sure, Harsh. So see, the two pockets where the valuations look extremely stretched, though the fundamentals there have improved in terms of the growth outlook, but still the valuations look very stretched. One is on the capital goods side, where we have seen an very tremendous kind of uptake and rally in the last 2 to 3 years as the outlook started improving. So some stocks on that side, on the industrial cap goods, we still see extremely stretched in terms of the valuation. We also see the valuations little bit stretched on some of the consumer companies and some of the EMS companies which are proxy to those consumer on the large cap side, on the higher range of the mid cap and the large cap side. So those are the places we still see the valuation stretch. Of course, the current fall is making some of those valuations correct themselves, but it is still on a higher side. On the places where we see valuations a little bit more reasonable, is on the BFSI side, which is largely to do with banks and some of the NBFCs. We feel that the lending practices and the overall balance sheets are in much better shape. Even in the recent results, we have seen that the incremental asset quality stress has not come in much bigger way except the MFI space, but most of the NBFCs and the banks have done really well. So that space is good. On the auto Ank side also, while the auto OEMs are a little bit stretched on valuation, but on the auto Anks, it's a much bigger basket, a much broader universe to choose from. So there, I think for their growth profile and the quality, there are certain stocks and picks that we kind of, continue to get Harsh. So that's how I would put it in terms of the two spaces to look at and two spaces to avoid.
Abhi sir, in some pockets where valuations are stretched, for example, cap goods, there's plenty of argument to say that the tailwind is strong. The order books are long drawn, and therefore the correct way to look at this is that execution will come. And therefore numbers will also come and stocks will therefore re-rate fairly quickly, and growth is extremely strong. This year has been a tough year for some of those counters because Capex on the government side has been delayed, but likely Q4 will see a push with regard to that Capex, and Q1 will be even stronger likely. Are you also somewhere off that count that may actually play out in some of the smaller pockets, maybe not the larger pocket of government Capex, but any smaller themes that you'd want to pick up to take advantage of that over the next 6 to 8 months?
Yeah, sure. So see, we are not negative on the prospects of these companies, given how India's Capex cycle and the energy transition cycle, and even the demand growth which we are seeing in some of the sectors that they support, like the power sector. So we are looking at those smaller pockets for sure, Harsh. We have recently even in fact taken a small bet in one company which supports the power transmission cycle, and it is providing a very key equipment to the transformer sector, for example. So per se, you will always find opportunities. What we are kind of seeing is that the bigger, larger industrial companies and the capital good companies have seen a massive re-rating ahead of time, where even a small disappointments in the earnings could make their multiples, come down, and hence there when we would want to bet, we would need to be a little bit more cautious and more reasonable in terms of what we can assume, because obviously in these things, also the incoming data of how really the execution on ground for all these projects and the government Capex plays out will also have to be seen. But yes, the smaller segments of industrial process related equipment, power equipment, or even heat exchangers to that extent, those are the places where we are betting and trying to find a few winners.
Okay, so some views coming through, and of course an interesting conversation. Thanks so much, Abhizar, for taking out time and speaking with us this afternoon. With that, let's slip into a very short break, because on the other side we have a packed show, so stay tuned to NDTV Profit.
And the reason for the success of the restaurant this magnitude, because people felt भाई का जिगर है, business नहीं है इसमें. This is our time to not bend down to their accents and their foods and glorify it. It is our time to lift our own cuisine, our own culture.
1, 2, 3, 4.
Toughest person to cater for, to cook for, President Trump, Prime Minister Modi, या शाहरुख खान?
मेरा दिल जिसके पास है, शाहरुख खान.
You tweeted recently after President Trump won the election that can I make something for you?
So एक तरह की खिचड़ी है जिसमें आप मिक्स्ड मिलेट्स डालते हैं.
आपको ट्रम्प साहब को खिचड़ी खिलानी है?
हाँ, तो खिचड़ी खाना नहीं है.
What is the one vegetable you will never eat?
मैंने मेथी खानी बंद कर दिया है.
Like आप करेला, बैंगन ऐसा?
I love करेलास.
Government is considering to increase the custom duty on the imported finished goods ranging from consumer electronics to medical devices.
And to rectify inverted duty structure, I propose to increase the BCD on interactive flat panel display from 10% to 20%.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday.
Welcome back. You're watching India Market Close here on NDTV Profit. Thanks for staying with us. It's that time of the show where we speak to Somit, who's been speaking and hearing from everything that's happening on the street. He obviously chats with dealers and tries to understand as to what all is happening. Somit, what have you been hearing?
Well, the first stock that is on the list is ABB. Now, we are understanding from our dealer check is that there has been selling pressure when it comes to ABB on the FI desk. Every rise is getting sold and what dealers are indicating is that there could be some weakness when it comes to the order inflow and the order book of ABB, and hence we are seeing this kind of a selling pressure when it comes to ABB. Second stock on the list is Apollo Tyres. Large HNIs have been accumulating this counter after the company came out with its Q3 numbers. Now, the conference call for Apollo Tyres is today at 3:30 and dealers are expecting some positive commentary to come in from the management in the earnings call, and hence they are indicating that large HNIs have been accumulating this counter. And lastly, it's Max Financials. There are strong buy flows on the DI desk for Max Financial. What we understand is that post the rebranding exercise that they had done with with Axis, there is indications of possible higher growth rate going forward for Max Financials, and hence this buying interest has been renewed when it comes to Max Financial. Also, in past, Max Financials valuations were a bit lower compared to other private players, and that was because of a non-banking partner. But with Axis tie-up, now that we see a higher growth rate coming in for Max Financials. And do remember yesterday we spoke about Hyundai, and today the stock is up 5%.
Yes, absolutely. So stay tuned to this segment. But Somit, actually, I'm going to cut you there because we need to cut across to the M&M press conference. Good set of numbers. Management talking about their earnings fine print. Listen in.
Also up significantly. So very, very strong story on both auto and farm. But beyond that, our turnaround businesses are on track, and we're not going to call them turnaround businesses from next quarter onwards. We're going to talk about them achieving full potential, because TechM's on a good track. EBIT has improved significantly. There's a continued focus on margin expansion to the plan of 15% that has been laid out by the CEO. Mahindra Finance profit after tax is up 47%, assets under management up 19%, and GS3 continues to stay below 4%, despite some of the challenges that we've seen in the economy. So overall, all our businesses are operating on a very strong path, resulting in a consolidated profit after tax up 20% over the previous year. A quick snapshot here. Revenue up 17% year over year. On a year-to-date basis, it's up 13%. And profit after tax has achieved the 2020, up 20% for the quarter, and up 20% year-to-date as well. As you look at the key drivers, auto and farm have increased 16% year over year. TechM and Mahindra Finance are up 1.9 times and 47% respectively. And our growth gems are up 33%. Well, Rajesh will cover auto and farm in more detail. The key messages here are not just the SUV revenue market share, but also the LCV, less than 3.5 ton market share, which is now 51.9%. We've crossed the 50% threshold on this, so up to 30 basis points. And for farm, while market share has increased, farm machinery revenue is up 12% as well. As I mentioned, we shall talk about achieving full potential now for Mahindra Finance and Tech Mahindra. You see the GS3 and asset under management numbers for Mahindra Finance, and for TechM, some green shoots in telecom, or green shoots in BFSI and healthcare, some new deal wins in telecom, and getting back to a margin recovery path. So overall, as we have promised in the past, a consistent delivery on commitments. ROE continues to stay around 18%, which we have promised. And EPS, we had promised a 15 to 20% growth from F21 onwards. At this point, it's significantly higher than that and continues on a good trajectory. With that, I'd like to invite Rajesh to talk about auto and farm.
Hi, good afternoon, everyone. I'll start with farm, and you can see here we've had a very healthy volume growth in Q3, 20%. Our exports have been up 14%. Anish just spoke about the market share, so 2.4 percentage points gain in the market share, which is our highest ever Q3 tractor market share. This gives you the trend line of where we are on the market share. You can see that we've gained through the year 1.7 share points as well. Farm machinery again continues to grow at a reasonably healthy rate. On a YTD basis, that's at 20%. The revenue is up 11% and the PBIT is up 29% for consolidated. So that includes our global subs. And the margins on the right, what you see is the core tractor margin, which is now at a very healthy level of 19.5%. Just to recap, core tractors is domestic tractor business, plus the exports that we do from India, plus farm machine. Sorry, it excludes power all and farm machines. We always show you this chart to show you the steady rate or the band in which we operate our margins, irrespective of what's happening to the industry. And the gray line shows you the volatility in the industry, but the ability to maintain margins. And of course, now you can see it going up to 19.5% as Q3 demand has got stronger. We expect the industry to grow at 15% plus in Q4, which will take us to a annual expected industry growth of around 7% plus. And there's several positive factors that we are seeing which are enabling that, one of which is the reservoir levels, which are at a very good level, 16% over the long period average. The Rabi sowing has been pretty smooth. It's at 103% of the Rabi area has been sown. So good progress on Rabi. And a strong Kharif production, growth of about 5%. And we've also seen hikes in MSPs, which is overall raising the inflation price at an output level, and that's helping the terms of trade as well, which remain favorable, where output inflation is right now more than input inflation. So that was on the tractor side. On the auto side, again, it's been a very strong growth period. Anish has covered some of these numbers, so I'm not going to dwell too much on that. Both the growth in the LCV and the SUV market share. This gives you a trend line of how our volumes have grown. In spite of having a very significantly higher per unit average realization compared to anyone else, we continue to be number 2 on volume market share as well, apart from being number 1 on the revenue market share in SUVs. We got several Car of the Year awards, the Autocar Car of the Year, the ICOTY, which is called the Indian Car of the Year, and some others as well for the launch of the Thar Rocks. We've grown our LCV, this is the LCV less than 3.5 tons. While the industry growth has been very muted, there was small single-digit growth in Q3. The overall growth has come out of market share increase, which continues to be strong. Last mile mobility, we maintain our leadership. The important thing I want to flag off on this slide is the pace at which electric three-wheelers is penetrating. A couple of quarters back, we spoke about getting close to 20% penetration. Right now in Q3, it's close to 25% penetration.
Okay, so that's of course management of M&M talking at their press conference, but from one press briefing to another, Bharti Airtel stock has done very well since the morning, and impressive show with regard to ARPUs as well, from 230 or sub 235 to reach above 240 in a matter of a quarter. Just kind of shows and signals the kind of strength that's there. Let's hear Gopal Vittal speaking about their Q3 numbers.
Pass expansion continues with 1.9 million quarterly addition, with total home passed at 35 million. The second area is really to constantly improve the value that we deliver. Here we are focused on a combination of convergence by improving the content slate we offer. We recently signed on Z5 and Glance on digital TV. Xstream now has over 22 apps, OTT apps as a part of its platform. We've also commenced the testing of IPTV. We believe that when this is launched, it will dramatically improve the ease of onboarding for our customers. The third area of focus is to really fire up all our channels. We currently sell broadband largely through our stores and online channels. We're now using our digital capabilities to bring in the power of our entire mass retail channel and plan to open up around 100,000 points of presence. In addition, our 30,000 strong fleet of home delivery engineers will also be activated. With these three areas ramping up, we expect to see continued momentum of homes, leading to strong competitive growth. Let me now turn to mobile. On postpaid, our focus continues to be on the 80 million potential customers who we believe can upgrade to postpaid. Use of digital tools along with simple customer journeys across channels is powering our family offerings to further accelerate this. Rural markets account for over 65% of industry growth. Over the last 2 years, we made substantial investments in seizing this opportunity. This has delivered results. Going forward, we expect to fill gaps in a couple of circles while we continue to sweat the sites deployed till date to give us gains into this year. Let me now turn to B2B. There are 3 key areas we're addressing: portfolio, go-to-market, and customer experience. Let me comment briefly on the portfolio. There are 3 parts to our portfolio. There's data centers, there's global, and there's domestic. Our data center business is growing steadily. Within the global segment, we have 2 parts: commodity voice and messaging, as well as monetization of cable investments. On the latter, which is cable investments, as you know, there was a slowdown to the extent of interest from OTT players, but we are beginning to see some change in this in the current quarter in terms of the order book. By the way, this is a very profitable part of the portfolio, and so is now seeing signs of growth, which bodes well into the coming year. The second segment within global is wholesale commodity voice and messaging. A very significant part of this is very low margin business. And in fact, what it does is it clutters management focus. It has a lot of people running around trying to strike deals, and the margins we make here are insignificant. We have made a decision to exit this low margin business, which will have an impact on the top line in the coming quarters. It will take about 6 months to have for this to play out. But let me underscore that the exit in this business will have really no impact on EBITDA, because this is a very negligible margin business. Within the domestic segment, we are seeing strong growth on digital as well as sustained growth on connectivity. In fact, these digital adjacencies comprising of cloud, security, IoT, and CPaaS account for almost 90% of incremental industry growth. We're now stepping up our investments as well as our go-to-market muscle to drive faster growth here. We will be launching a comprehensive cloud solution in the next few months. At an aggregate level, given the growth of digital, I believe we need to move at a much faster pace, and we'll do what it takes. This is one of the main reasons we have decided to shed the low margin portfolio of commodity, voice, and messaging. You will recall that a few years back, we did the same in our mobile business by shedding 49 million customers who were using our network only for incoming calls. This changed the experience for our existing customers. It declogged our networks. And more importantly, it galvanized the organization internally on how we chose to win with quality customers. We believe this will do the same in our B2B portfolio. The second area of focus is the need to build muscle in our account management teams to shape this agenda. We're doing a combination of things here. We're injecting capabilities into the team in the form of fresh talent. We're training all our existing people. We're injecting state-of-the-art tools backed by AI to help our frontline. And finally, we're setting up virtual teams to raise the bar on lessons learned at an industry vertical on key wins and losses.
Okay, so that's of course Airtel. Very strong numbers overall from Airtel. We have with us Kunal Shah, Senior Technical and Derivative Analyst at Midday Asset Sharekhan, and we have Avinash Gorekshekhar, Director Research at Profitmart Securities, also joining us. Welcome. Good afternoon, gentlemen. Avinash, I'll come to you first on the fundamental side with regard to Airtel. Such strong numbers. I mean, the street was largely penciling in very good numbers, and I'm not talking about this quarter in particular, but even a year back, the kind of numbers that the street was projecting on and Airtel was very strong. Do you believe that the numbers have largely beaten estimates, especially given that we've gone from 200 in terms of ARPU to 245?
Yeah, I think, first of all, good afternoon.
Good afternoon.
Yes, the numbers are much ahead of expectations. And I think, you rightly mentioned that ARPU growth has been very promising. And that is why the markets have also liked this performance quite well. Overall, I think my sense is that pricing power has again come back to the industry after a lot of consolidation. And I think that is the key reason ARPUs have gone up. I don't think that now, most of the players, the larger players, are in a mood to, cut prices. In fact, we could see ARPUs getting better in the coming quarters also. So I think, once ARPUs start moving up further, the incremental gains on the operating EBITDA on the bottom line would be significantly large. Plus, a lot of investments have already gone. I was hearing to Mr. Gopal Vittal, and he was clearly mentioning that a lot of investments have already been added. So, probably those investments are also going to yield revenue benefits for the company in the next, say, 12 to 18 months. So I think, in terms of the broadband opportunity, in the voice opportunity, I would perceive that the markets are now looking at much stronger growth from the company, and looking at the kind of positioning Bharti enjoys. After a very significant amount of fierce competition, I think better times are now awaiting the telecom sector, provided, of course, the government does not put any regulatory issues ahead of the telecom sector. But I think net one could expect the FY26, the next financial year, also to be a solid year for the company, with subscriber growth also increasing rapidly, and with ARPU growth also expected to be pretty strong.
Returns have been strong, right, Avinash? We've seen a 47% 12-month return on the stock. Where to from here?
No, I think, clearly one needs to get into the stock only on some mild correction. The stock has moved up quite, sharply, as you rightly mentioned. But I think in this market, the markets are always willing to pay a premium for growth. And I think if the growth is sustainable, Harsh, I don't think, market participants would have a problem. This is an institutional favorite and an FI favorite stock. And I think looking at the kind of concentration which is seen in the telecom sector in India, I would not be surprised that one could expect only a mild correction. And I think investors would pay a decent premium to the company, considering the fact that it has over-delivered on the numbers.
Okay. Kunal, let me come to you with regard to a technical view on this one. Airtel.
I think if you look at Bharti Airtel, I think the correction what we got in the markets, and you look at the correction what Bharti Airtel has got, I think relative strength was clearly visible. That was visible on a technical chart. The stock was consolidating, and now finally it has given us a breakout. I expect the stock to surpass its all-time high level as well, which is placed at around 1780. So for me, my targets will be somewhere around 1820, 1830 on the upside. So whatever dips you get, utilize that to buy. The strong support on the downside is at 1600. So the risk reward is very favorable. 1600 is a very strong support on the downside. On the higher end, I look for targets of 1820 to 1870 on the upside.
Kunal, your call on the index, if I can ask, Nifty Bank.
So I think firstly, if we start with Nifty over here, the breakout what we had got for 3 days back, that is that 23,400, 500 range, it was taken out. We have not got any follow-up move since then. So clearly there is some resistance on the higher end. So if Nifty has to move on the higher end, 23,800 has to be taken out, then we will see further momentum building up. So the short-term bias remains on the negative side. The 20-day moving average for the Nifty is placed at 23,289. So I expect the index to go and test those marks on the lower end. And if 23,300 is also not held, then we can see Nifty going in fact, can even go to new lows as well. For the Bank Nifty index, here also post the RBI policy, thus there has been no strength. 50,000 was the support. We are hovering around that support zone. If on Monday's trading session we break 50,000 and sustain below it, we can easily go towards 49,400, 49,300. So even Bank Nifty is looking weaker. I think overall the larger term trend for both the indices has been on the bearish side. This was the pullback of what we had on both the indices. It feels like that the pullback is over, and now we can see further downside in both the indices.
Okay. So point taken. More bearish than bullish, Neeraj. First off, thanks for joining us. But more bearish than bullish. I mean, and seems like a sell-on rise at this point.
Yeah, well, that is interesting. By the way, Europe is starting off okay, Harsh.
Yes.
So it's not too bad.
On the global front.
On the global front. Looks okay. The only question is that what does the US markets do today and what kind of overnight handover we get. It's a flattish start, not too negative. So that is the interesting one. But yeah, maybe the market did a bit of a rally ahead and then kind of cooling off. But I was wondering, actually, just wanted to take a repeat question if you don't mind. Kunal, with the presumption that you are not too bullish right now, but almost everybody who's been on the channel in the last few days has suggested that at 23,250, 23,300 or 23,200, whatever that zone is a support from which longs can be initiated for a target of 24,000. Do you think today's setup disrupts that call? If you also had that call, by the way.
No, so for me that once we got a breakout of about 23,400, 500, I was looking out for a follow-up move post that. I didn't get that. Second is that yes, 23,300, 400 is what the support zone is there on the downside, which I mentioned, 23,289, which is the 20-day moving average. And once that is breached, then we can confirm that Nifty would be making a new low, breaching that mark of 22,800. So still the confirmation for a new low is not there, but I can at least expect that correction to go towards 23,289, 300. And once we close below that mark on a closing basis, that will give me a confirmation that the uptrend which I just started has been negated, and then Nifty will be making a new low somewhere around 22,600, 22,500 mark.
Okay. Wow. So more lows for sure. And if I just wonder, from the pockets that have looked weak today, Harsh, I mean, Bank Nifty is clearly sulking, right? We spoke about this earlier as well.
Yes.
A lot of moves that have been announced are actually constructive for select NBFCs, right?
Yes, it is. It is, Neeraj, but limitedly, to be very frank. And some of them have already run up significantly. And we highlighted this a couple of times, even in the morning, viewers, for perspective. So while maybe a PBT impact of 3% at the very best for an M&M Financial is what Morgan Stanley is penciling in, but the stock has run up 6-7% over the last maybe 5 days. And therefore, the question being that how much of that is already priced in. Avinash, at this point, if I can ask you, what's the top sector space which in your view will benefit from this rate cut of sorts? Will it be realty? Will it be some of the lenders? How do you play this?
No, I think clearly, Harsh, some of the lenders would benefit, but I think, the bigger benefit of this 12 lakh exemption limit is going to come for smaller ticket items. Typically, I think if you could talk about within the auto pack, two-wheelers, something on the consumer durable side, on the consumption side. So, these could be possible pockets where money could be spent. I would believe that, two-wheelers definitely look interesting because both, TVS as well as, Hero Motor has, given a decent kind of commentary. With the rate cut, I mean, obviously, that is going to aid two-wheeler purchasing in a much bigger way. And I think initially it will be the mass ticket items which will actually benefit. I won't be surprised that real estate, or for that reason, any luxury products will be purchased by consumers because, the overall tax benefit is not very significant. Although in the absolute size, it's small, but, this kind of amount largely would go for buying mass ticket items. So two-wheelers, I think, are interesting. I would not be surprised that probably from the April quarter, you could see better numbers for the two-wheeler pack. Something better coming from Hero Motor Corp or typically from a Bajaj Auto. I would say that the domestic market, which was sulking previously, is now again getting geared up. A lot of new launches are also planned. So I think that would add to the fuel and, definitely give a positive impact on the volume growth of two-wheeler companies.
Got it. Okay. Now, before we go to Mihika, Kunal, your top ideas for the morning or for the afternoon?
Yeah, I think I have two ideas over here. First thing, I would like to highlight about the sector, and that is Nifty Metals. So I think Nifty Metal has bottomed out is what we see on the technical charts. On the rising trend line, we have taken a support and a double bottom formation on technical charts. That's on the weekly front. So I think metal as a sector could see a good rally on the upside. So I'm bullish on the sector, trading somewhere around 8,500, 600 at the current level. The double bottom formation has happened around the 7,900, 8,000 zone. So that's a strong support on the downside. And I'm expecting this rally to continue towards 9,500 and eventually 10,100 on the upside. So metal is something that is looking very good on the chart. Early signs of bottoming out has happened. So out here, my first pick would be from the metal space on the buy side, and that is Vedanta. Vedanta looks strong on the technical charts. The entire base formation has happened in the stock, and now it is ready for the next up move. The stock has an immediate resistance at 468, 469. But once that is taken out, the next level directly comes at 520 on the upside. So Vedanta is a buy for me at the current levels. 440 is the stop loss, and 468 and eventually 510 is what I'm expecting on the higher end for Vedanta. The second is on the sell side, and that is CESC. Again, the structure has been very weak. The pullback what we got into the stock, CESC is one stock where the pullback was very weak, and again the stock is breaking the rising trend line. So here the momentum could be on the sell side. So that's a sell for me. Utilize bounces to sell. 139 keep as a stop loss. I'm looking for downside targets of 129 to 124 on the lower end.
Well, those are some ideas, and well, Mihika spoke about metals earlier. Kunal is saying that Vedanta is amongst his top ideas and metals is looking good. But Mihika is back to talk about some of the other key stocks which should be on or which are on our radar today. Mihika, thanks for waiting by patiently. What else?
Yeah. So we'll talk about the top 3 stocks, all of them buzzing on a good set of Q3 earnings. Up first we have ZF Commercial Vehicle Control Systems, an intraday high of over 10%, volumes at 6 times its 30-day average. Now in the Q3 numbers, revenue is up 7%, EBITDA saw a 32% uptick, margins have expanded almost 400 basis points, and net profit was up 24.4%. Then we have Bharti Hexacom, intraday high of around 8.7%, and volumes at 10.8 times its 30-day average. The the Q3 earnings were a good set of numbers. Revenue was up 24%, EBITDA up almost 40%, margins have also expanded to 51%, and the net profit was up 22.5%. Something that helped the earnings for Bharti Hexacom this quarter was the mobile services segment, where revenues did rise 25.5% on a year-on-year basis. Factors like tariff repair, smartphone customer additions helped the improvement. The mobile average revenue per user was at 241 rupees this quarter versus 200 a year ago. Even the mobile data consumption metric is up 25%. And the companies also agreed to sell 3,400 telecom towers for a total of 1,134 crore rupees. And lastly, we have Gulf Lubricants, an intraday high of 9%, volumes at 5.8 times its 30-day average. Now, in terms of their Q3 earnings, revenue and EBITDA was up 10 to 12%. We had margins remain stable, and net profit was up 22% on a year-on-year basis.
Okay, well, some interesting names out there, so watch out for all of these, and I'll ask Harsh to add one more, Harsh, because you just spotted a stock which is cracked on numbers.
Yeah, Garware High Tech. Let's pull up the stock, and on the back of numbers, of course, stock is 16%. Look at the fall there. I want to quickly, pull out and highlight a couple of numbers on this one. Margins were at 16%. They got a tad bit better. But mind you, it's a far cry from the number last quarter that it clocked of around 25 to 22%. Seems like a seasonally weak time as well. But growth not there is the other reason why likely the stock is cracking. Avinash, absolutely any views on this one? Do you track it?
No, I think clearly my sense is, I think margins have come off, but if you look at the absolute bottom line number, please correct me if I'm wrong. I thought the number was around 65, which was a tad better compared to the quarter number for the third quarter. So actually has been the major reason for this sharp drop. I won't be surprised that, this is a steady business. One quarter number is not going to spoil the story. They are market leaders in, specialty make, and exports have also been pretty solid. So I would say that it's better to wait for the management clarity to come in for to understand what exactly has gone wrong. We have a positive view on the stock, but would wait for the management clarity to come.
Kunal, your view, quick one, technical.
So I think Garware, if I look on the technical charts, it looks weak to me. We can see some further 4 to 5% downside. This was the pullback what we got into the stock, and again we can see some correction. So the lower end support what I see for the stock that is there on the downside is somewhere around the zone of 530. So 530 is possible on the stock in the very short term. Pullback should be utilized to again initiate fresh short position or exit your long.
Okay, PSP projects also numbers coming in. It's a weak set overall, even on PSP projects. But you know what I'm going to do? I'm going to take a slip. We are going to slip into a very, very short break. On the other side, we're going to go and give you BTST ideas as well as picks for tomorrow. And we'll talk about a few stocks, plenty movers in trade today, and earnings coming quick and fast. Stay tuned.
entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead.
Right now, part of policy announcements, plenty of stocks will be in focus. One set of stocks, of course, is there's the NBFC pack, especially the likes of an REC, PFC, IREDA, and we'll have those stocks on your screen in just a bit. Reason for the spike in the counters from the lows is largely because project financing provisioning and ECL provisioning has been pushed at least till the 31st of March 2026, and therefore for fresh projects that they finance, they won't have to make provisions as of now, and there is at least clarity that at least till FY26 the numbers won't get dented as a result of that. So positive for all of those three counters. Decentish, we saw a bit of a spike and now we've seen a bit of a cool off, and that's why some of these stocks are in focus on the back of that. Also, you have LCR norms which also have been pushed, which is liquidity coverage ratio norms, which were expected to impact banks like a Federal Bank, and you can see the spike on the stock on the back of that. You also had IndusInd, which has been doing fairly well in trade today, and Axis Bank. Those are the three key beneficiaries among others of the LCR norms being pushed at least till 31st of March 2026. So some of these stocks moving. Avinash, quick view with regard to any of these which would be on your radar, and just the manner in which the policy was structured in your view. Does it leave room open for even entering some of the PSU banks, given that LCR over there also is slowly becoming stretched?
No, I think I've been earlier also telling your channel that PSU banks have become quite attractive looking at the valuations. There might be a little lull in maybe the next quarter, but I think hopefully once the rate cut benefit starts coming in, I think you could see growth coming back for these banks. I think the bigger issue is that most of these banks are now sitting on much healthier balance sheets. Their asset quality and their loan book growth is also quite strong. So I think, banks like Canara Bank, Bank of Baroda, which have posted decent numbers, I think could definitely be looked upon, from a slightly longer term horizon. Banks cannot be ignored because, if the economy is going to grow, despite the fact that, GDP growth in the near term could be a little bit cloudy. But if you're looking at the medium to long term horizon, I think something like a Canara Bank or Bank of Baroda can definitely be considered, since the risk reward could be quite significant once the upturn starts. So yes, PSU banks could definitely benefit. And as I said, the rate cut is actually going to benefit certain pockets like consumer durables, two-wheeler companies, where I think definitely the interest cut is going to help buying more of these kind of items by the participants. And most importantly, the 12 lakh exemption is also going to come in play, but you will have to give in a couple of months before actually we see that getting reflected in the numbers of all these companies.
Well, on the charts, of course, some of these stocks, PFC, REC in particular, have not looked all that bad today. And from a valuation perspective too, not terrible if you will, actually pretty well placed, I would reckon, both of them, relative to a lot of other financiers as well, despite the fact that a lot of NBFCs have corrected. Kunal, resilience today at least for PFC, REC. Any thoughts here, or are maybe metals a better bet from a trading perspective? So why bother with maybe a PFC, REC?
Yeah, I think definitely metal looks strong comparatively. But I think even for REC, PFC, I think the kind of selling pressure what we got from higher levels, now I can see some base formation happening at the lower levels. However, we need a confirmation for both. So for me, PFC, I'll be looking out for levels of 420. That is a strong resistance. If that is taken out, we can confirm the bottom formation, and then at least we can see a rally towards 480, 490 levels on the upside. And even for REC, the same, the structure where the higher end resistance is placed at 460. And once that is taken out, we can see that at least it is going towards that level of 520, 530 on the higher end. So watch out for these two levels for both REC, PFC. Once they are taken out, you can at least expect a 6 to 7% rally on the higher end.
Okay. The other one that's in focus is FMCG major Britannia. Of course, stock has been under pressure. We can pull that one up as well. And there you go, 2% down as we speak. And they've announced a 2.5% price hike during their post-earnings call. They've also spoken about some bit of pressure with regard to inflation on their raw material. Mahima here with the highlights from the con call.
So in terms of con call takeaways, there were different pockets which were addressed by Varun Berry. I'll start with inflation. He said that it's been an extraordinary high inflation environment. Inflation for commodities that they were buying was at 11%, and they're closely monitoring these commodity prices and assessing its impact. In terms of volume versus value growth, they've said that they were at par this quarter. Price hikes, the total price hikes increase taken were 2% overall in 9 months FY20, was around 2% this quarter, and overall in 9 months FY24, the price hikes taken so far around 4.5. They've said that Q4 FY25 they'll take further 2.5% price hikes, and Q1 FY26 another 1.5% price hike will be taken. In terms of competition, the management said that they remain vigilant of the competitive pricing actions, and they're focused on driving market share while sustaining profits, and no challenge is seen in terms of competition. Lastly, in terms of cost and margin, they've said that the employee cost this quarter, which was seen significantly down, the sharp decline was due to ESOP correction, and EBITDA margins will come back to normative levels after Q1 FY26. So this is the overall view as to how Q3 panned out for Britannia, and these are the key takeaways of the con call that was held today.
Yeah, well, so Britannia is interesting. There is also a few others, like for example, the consumption names, Bikaji, etc., which have had not the best of quarters. I would reckon Bikaji as a stock too should be lower, 9% lower. Clearly, there are some issues there. Avinash, if we haven't spoken about these, Britannia, Bikaji, a few others which have sulked in the quarter. Do you like any of these at current or lower levels, or would you bet on some of the winners really in Q3?
No, I think, Neeraj, I would prefer to wait for some time because, prices had actually gone up on expectations that the rate cut was going to come, and I think volume growth would kick off in a much stronger way in the coming quarters. The budget has also given a kind of a little boost, in terms of the consumption kind of, kind of theme. So typically a Britannia or maybe a Marico or typically even a Dabur, I think, these are bets which are fairly defensive, but I think valuations are not cheap. They are fair to expensive. And I would prefer to buy into these, probably after waiting for another quarter. The real benefit of the rate cut and the budgetary kind of, exemption cut of 12 lakh rupees is going to be felt, from the beginning of next financial year. That is from April onwards. I would not be surprised that margins and volume growth would still be a struggle, at least for the next couple of months. So I think it's better to wait and buy these stocks at slightly lower prices because, your entry point becomes slightly better. But definitely, I think next year is going to be better. Hopefully, rural consumption picks off and consumption takes off in a reasonably big way. Then I think volume growth will kick off, and that would definitely mean a good bounce back for all these companies. So we continue to be positive on Marico, Dabur as well as Britannia, but only at lower levels.
Okay. What about a few movers, Kunal? And if I can quickly point those out. Actually, you know what, Kunal, I'm going to ask you straight up on Trent. What's the sense? Because we're sticking to the consumption theme. What's the sense with regard to Trent on charts? 3.5% higher after an 8% cut yesterday. What's the sense from here?
Yeah, I think overall the chart structure still remains on the negative side where the downtrend is still intact. You can get a pullback in the stock that could go towards 5,750, 6,000 mark, but I think that would be a negative point again. So I see that going forward, trend can again breach this support zone of 5,300, 5,200 on the downside. So I think utilize pullback either to exit or could initiate fresh short positions around the mark of 5,800 zone.
Okay. Fresh short positions 5,800. Avinash, what's your view with regard to Trent?
No, I think Harsh, I think you will have to wait for maybe the couple of quarters because the last 2 quarters for Trent have been quite disappointing in terms of margins, in terms of growth, and I think new competition, from new companies, typically what Reliance has announced, their tie-up with the Chinese firm. I would not be surprised that the markets are now looking at how Trent actually faces the onslaught of fresh competition and how it impacts their business. Specifically, if you talk about their Zudio brand. That has been one of the key factors which was responsible for the significant amount of re-rating in the stock. So I think we'll have to wait for another couple of quarters to see how the company bounces back and faces the fresh onslaught of competition. I think that's the biggest worry the market pursues for Trent. And if the numbers don't improve for next couple of quarters, then I think whatever premium valuations we are seeing in the stock, they would definitely get derated. So I think it's better to wait and watch rather than make a fresh position as of now.
And, with major FMCG earnings now out of the way, one major theme that's been in focus is how input cost inflation is actually continuing to persist. We caught up with Abneesh Roy, Executive Director, Research at Nuvama Institutional Equities, and spoke about 3 pockets where he predicts earnings to be strong. Listen in.
So it's a tough question because there are too many moving parts there. I'll take first where the earnings growth in the near term, medium term is strong. Those will be the liquor stocks. So United Spirits, United Breweries, we are positive on both. One key reason is Andhra was almost zero for them. It will become 4 to 5% of the overall India business. And we have also seen that now there is a talk of the FTA, for example, raw material again, the glass cost is indirectly linked to crude oil prices. So if crude is soft, we don't see any problem in terms of the glass cost also. So that's on the high visibility in terms of numbers, next quarter, next 2 quarters. The marriage demand is also going to help in terms of the liquor demand. But valuation comfort is missing there. So that's an important thing that you have to buy those on a bad day. But the earnings momentum will be with strong double digits in terms of revenue growth, EBITDA growth for both the companies. Now coming to stocks which have corrected a lot, worse themes behind, but the recovery will be gradual. I think HUL, Britannia, etc. look very good there. So I will name liquor stocks, HUL and Britannia as 3 names. But frankly speaking, because of the rural recovery and the union budget, I think all consumption stocks will see benefits. Some will see first, some will see later. But it's a large number, 1 lakh crore kind of a benefit government is giving. I think it will benefit all companies with some lag. Rural demand clearly is recovering. So these 3 names I like to shortlist.
Okay. Now, it's spoken about telecom. But, I'm curious to know, and I'm curious to quickly have views as well. Avinash, your view, Bharti Hexacom versus Bharti Airtel, which is that company that you'd pick within the telecom space?
Is this question for me, Harsh?
Please.
No, I would still believe that Bharti Airtel is definitely a much better bet, Harsh. I think Bharti Hexacom is also definitely directly linked to what Bharti Airtel does. So I think if Bharti Airtel does better, then I think Bharti Hexacom also will deliver better numbers. But I think within the the telecom infrastructure kind of business, I think Indus Towers seems to be a much better bet. So, if one were to look at the infrastructure business for telecom, then I think Indus Towers looks pretty promising. Very solid cash flow business, very solid numbers in Q3 also. And I think looking at the kind of 5G rollout, I think definitely the management is quite optimistic that they would be benefiting. And plus, they are looking at entering a new electric vehicle business, which is going to help them grow, considering their rapid geographical kind of presence. So I think Indus Towers suits the bet if one were to look at Bharti Hexacom and Indus Towers. But Bharti Airtel definitely, as I said, the propensity to increase ARPU and the propensity to increase volume growth over the next couple of quarters looks quite promising, because after a very long time, the industry has now come to a level where pricing power has come back. And it is unlikely that there could be any discounts or price cuts announced by any of the telecom majors in the near term.
Yesterday, a stock that went up quite. By the way, Indus Tower had some. That transaction has been viewed favorably by a lot of brokerages as well, so keep in mind. But anyways, yesterday a stock which did very well, Diffusion Engineers, has given up some of the gains. It's down about 4% from an intraday high. So I don't know if it's the results or something else, but certainly come off. But TTK Healthcare is the one that has come off as well. All Cargo Logistics is down as well. So these are a few stocks that have certainly come off quite a bit from the levels that they were trading at. So bear that in mind for sure. ITC Hotels, for a lot of people who would have been investors in that naturally or otherwise, keep an eye out for the next 2-3 days. Important developments there. And Thermax is the other one, which on a weak quarter, which the management actually said was forgetful, but the commentary was strong that Q4 will be very, very strong, is up about 1.7%. Now, before we ask our guests about that, here are what the management had to say on the numbers and the outlook ahead.
Forgetful quarter for sure. And we finished below my expectations, some surprises, you could say. Some things that we could have done better. I think if there was any good news, to me it was that there wasn't a structural miss, so to say, and I expect a very good Q4. And I've got 3 reasons for that. Yeah, first, on the revenue side, we missed more than 500 crores of revenue, which was relatively profitable, had more than 10% profitability, more than 60 crores sitting out there that we could not ship in the last 2 weeks of the quarter. Variety of different reasons, but bottom line, we did miss. We recovered that in January pretty quickly, which showed it wasn't a structural shift. And then this quarter, we're just monitoring it week to week to make sure that there are no slips on what happens on the revenue side. Second, on the projects bit, which is where we have had fair bit of pain through the year. 2 of our worst projects, or 2 portions of our worst projects, went through their worst portions in this last quarter. One was FGD, where one particular FGD project, which was the earliest one we had taken, finally went through its final bit. So it had a load of losses that got reconciled at the end. And Bio-CNG, which is a growth sector for us, but with a lot of learning, where a lot of that learning is over. There may still be some pain, but that pain won't be as bad as what we went through last quarter. And finally, on the orders side, there are 2 parts to the orders side. Yeah, one, you will see industrial products, which is the relatively profitable part of Thermax. There we grew our orders by 40%. And overall, the backlog there has grown quite well. The portion which is less profitable, which is the government projects, which are typically large, we didn't get anything in the last quarter. Yeah, and we were okay to not bid on less profitable projects and work the business towards a better margin profile long term. So some of that impact we saw. But I think even there, I expect better times ahead because our pipeline of big projects now has also grown quite substantially.
Okay, so that's the view on Thermax. Of course, suggesting that the rest of the quarter will likely be strong and thereafter very, very good traction is what they're expecting. Well, we'll have to wait and watch whether that plays out. But shifting focus to an NDTV Profit exclusive, Infosys has been handing out pink slips in bulk. That's what my colleague Tushar is picking up from his sources. NDTV Profit has in fact accessed one of the letters as well. Mass terminations is what the letter seems to indicate at Infosys. The IT Employees Union says that Infosys has been laying off nearly 700 freshers at the Mysuru campus this time around. And IT Employees Union alleges that Infosys terminating freshers onboarded just a few months ago. The terminated freshers are being made to sign confidentiality agreements, alleges the Employees Union. Infosys says that any fresher who fails internal tests after onboarding are fired as per contractual agreement. So that seems to be the argument which is coming through, but doesn't seem very healthy in that sense with all that's happening. And it also means 700 less employees for Infosys. Could this in substance also suggest that there could be a delay with regard to recovery? I'm not so sure. Avinash, any early feelers of what this might mean?
No, I think it's difficult to give a call, Harsh, but I think definitely these are not good signs. I think if the big IT players in the industry do this definitely clearly means that there is something wrong and some issue which is troubling these companies. So I think, whenever a company decides to terminate the, services of employees, it obviously has to take the medium and the long-term objective. So I think clearly, we'll need to wait and watch for better clarity from the management. But I think definitely a negative surprise, which I think is yet not reflected in the numbers. But I think probably the numbers would follow soon.
Okay. BTST, STBT, Kunal?
I think I'll again go from the metal space only. That is the space which is looking very strong. So Tata Steel would be a buy over here. The stock has been forming high top, high bottom formation. Plus today we have got a breakout from that parallel uptrend. So I think here the upside is still there. So one can go long into, keep a stop loss of 134 on the downside. Look for targets of 143 to 147 on the upside.
Okay. Right. So those are some BTST trades for you. Tata Steel on Kunal's radar. We're just about 5 minutes from close. Let's take some top picks even from Avinash. Avinash, quickly, what is it that you would buy at this point? Would it be within the large cap, mid cap, small cap? Is there a name in mind?
No, I think, Harsh, some companies which we have been telling our clients include, companies like KEC International. We believe, the company came out with a decent set of Q3 numbers. And I think they are sitting on a very large order book of almost 137 billion. So I think, order book visibility provides a strong revenue visibility for the next 12 to 18 months. And with power distribution also being a focus area, I would not be surprised that we could see levels of 950, 960 over the next, say, 12 to 15 months. And another auto component company, which looks interesting and which has posted decent numbers is Subros. It makes air conditioners for largely for Maruti, but now has started making air conditioners for even commercial vehicle trucks. The company posted a very decent number in profit terms in the December quarter of 33 crores. And this year we could see earnings of at least 22 to 23 rupees. So here also the stock is corrected, from levels of 675, 680. At around 650, I think it definitely can be a good, kind of a deep value kind of buy. We look at a price of around 750, 775 if one were to hold for the next 12 to 15 months.
Okay, thanks for that. Kunal, if I can come to you, infra, it's been one theme which has been in focus because of a lack of Capex growth seen in the budget. Any stocks on the technicals that are looking attractive at this point? Because we've seen a decentish correction in some of the counters.
I think overall, if you look at the infra space, the chart definitely it looks weaker to me. On the lower end, where I can say I'll be interested, still some further downside is left towards the support of 3,200, but LNT would be on my radar. So out here, 3,340 is where it is currently trading. So if you get around the levels of 3,200, that could be an ideal buy because that is where the stock short-term moving averages are placed. And from there onwards, you can expect a rally back towards 3,500 on the upside.
Quick 20-second maybe, if you can give us, Kunal, insight with regard to Eicher Motors, because earnings expected.
The Eicher Motor, I think definitely there the chart is already very strong. I think the last 3 to 4 days, what dip we have got, that is an opportunity to buy. I'm looking for targets of 5,600 on the other hand.
Okay, thanks so much, Kunal, as well as Avinash, for joining us this afternoon and giving us all of those views. But quickly on to the last minute or so of close, couple of minutes. Let's look at what to watch out for. US unemployment, China inflation data, that'll be a big one. And Japan current account deficit, that's the other one. Let's also look at some of the earnings. Hindustan Copper, Apollo Hospitals, Eicher Motors, Grasim. Some big names in there. National Aluminium and Nykaa, both of them also expected to declare numbers on the 10th of February. So keep your eye out on that. That's on the other side of the weekend, of course. Aster DM, record date for interim dividend. So that's the other one which you look out for. A slew of shares where lock-in is set to expire, and we'll give you a lowdown of this on Monday as well. But just keep some of those names in mind. 44% on Unique Commerce, Swiggy 3%. That's the other one you want to keep your eye out on. Ola 44% again, 62% on Seagull, and 69% on a Brainbees. If we can have the next slide, those are some names which will be in focus along with Acme Solar. But you know what we're going to do is quick check on markets, because we are set to close for the week, and it's been a long week because we had a 6-day week, the previous one, and now we've had another 5 days. So quickly on where we are, where the Nifty is concerned, can we have the intraday chart? We've seen a bit of a recovery for sure from those lows of the day. So that's the one positive that I would take away, around 120 points higher from the day's lows, and not too bad from the day's highs either as we speak. Let's look at the Nifty Bank as well as the Nifty IT. How is that shaping up? The Nifty Bank is down around 1/3%, so recovery there as well. The Nifty IT, much stronger recovery, so around again 1/3% lower on the Nifty IT. So some of those recovering from the lows. Let's look at the Nifty 50 heat map, whether the texture of that has changed at all from the start of this show. 4% now on Tata Steel. Bharti steady and strong, nearly 4% higher. Trend recovering after yesterday's fall. A Kotak Bank is doing fairly well for itself as well, 2% higher on a Kotak Bank. And M&M on the back of numbers, 1.7%. We've closed for the day as well as for the week. ONGC down roughly 3%. ITC taking a knock as well in trade. SBI after numbers and brokerage notes, 2.1% lower. And then you have a Britannia as well. On the back of those numbers, slightly weaker on the operational side, with inflation hurting the numbers, 1.7% lower. So those are some stocks on the back of earnings as well as news which are in focus. Let's look at the heat map with regard to sectors. Switch focus a little bit, and thereafter we look at the breadth. 2.6 on the metal index. We spoke about that at the start of this show. Nifty Auto also doing healthy, doing quite well for itself on the back of M&M's numbers. The VIX coming off 3%, so that's one big positive. FMCG not doing as well after Britannia's numbers, one of those that really stood out. And broadly otherwise, it was fairly range bound in that sense. Let's look at the advanced decline as well. It was 3:1 at the start. It's improved marginally, now, so slightly better on that count. Let's also look at how the mid-cap and small-cap indices are faring, at least at close, have fared rather. So the mid-cap index holds up in the green, so that's quite a positive. The recovery is solid, and the small-cap index also Okay, so that one's in the red, 1/3% lower on the small cap index. The recovery not really coming through fully on that one. Let's look at the BSE 500 top gainers, top losers to close this one off. And those are some names which have really moved in trade. NCC down 13%, NOSIL also down 6%, and Jubilant Pharmova also down another 5.5% odd. Tata Steel though holding up well, and all steel stocks did well. In fact, metals was the top gainer with regard to sectors, but Godfrey Phillips 20% higher on that counter. Of course, on the back of ITC's numbers as well. But with that, completely out of time on this edition of India Market Close. From myself, Neeraj, everyone who puts the show together, thanks so much for watching.
process tells NDTV Profit that budget is expected to propose the draft of the new income tax bill. In fact, the draft bill is expected to find a mention in the FM speech on February 1st.
I also propose to introduce the new income tax bill next week.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers.
The RBI cuts rates by 25 basis points. This is the first rate cut in 5 years. Governor Sanjay Malhotra says inflation is moderating, but economic growth remains challenging as global factors weigh. Markets slipped despite rate cuts as the RBI governor flags slowing economic growth and global uncertainties as key risks. Ola Electric's loss widens in the third quarter. Revenue also dips nearly 20% from the previous year. Mahindra & Mahindra reports a strong quarter with profit up 19%, meeting estimates. Exit polls predict that the BJP could win the national capital 27 years after being out of power. 9 out of 10 exit polls predict a clear BJP victory. Search is underway for a small Bering Air flight that went missing over western Alaska. The plane had 1 pilot and 9 passengers on board when it suddenly went off the radar. Hello and welcome. This is Profit 360 on NDTV Profit and I'm your host Himakshi Bahugna. Along the next half an hour, we'll bring you the latest on the markets as well as national and international news. So viewers, the Reserve Bank of India has reduced its key repo rate for the first time in nearly 5 years to boost the economy. The RBI Monetary Policy Committee unanimously decided to cut the key rate by 25 basis points from 6.5% to 6.25%. The MPC, which comprises 3 RBI members and 3 external members, had last reduced the repo rate in May 2020 and had kept it unchanged in the last 11 policy meetings. The move comes barely a week after the centre cut personal income tax to boost the consumption. Now, this was also the first time the RBI has acknowledged a slowdown in growth. Governor Sanjay Malhotra spoke about the demand slowdown in urban and rural areas.
On the demand side, rural demand continues to be on an uptrend, while urban consumption remains subdued, with high-frequency indicators providing mixed signals. And we are aware we got the Nielsen survey report also just yesterday. Going forward, improving employment conditions, tax relief in the union budget, moderating inflation, together with healthy agricultural activity bode well for household consumption.
The RBI's Monetary Policy Committee noted a decline in inflation driven by a positive food outlook and expects it to moderate in FY26, providing relief to Indian households. Under Governor Sanjay Malhotra, the RBI projects inflation at 4.2% for FY26.
Core inflation is expected to rise but remain moderate. Rising uncertainty in global financial markets, coupled with continuing volatility in energy prices and adverse weather events, presents upside risks to the inflation trajectory. Taking all these factors into consideration, CPI inflation for the current financial year is projected at 4.8%, with Q4, the current quarter, at 4.4%. Assuming a normal monsoon, CPI inflation for the financial year 2025-26 next year is projected at 4.2%, with Q1 at 4.5%, Q2 at 4%, Q3 at 3.8%, and Q4 at 4.2%. The risks are evenly balanced.
Viewers, let's bring in our banking editor Vishwanath Nair to give us more perspective on the rate cuts and what it could mean for India.
All right, so policy as expected, but still resulted in a lot of smiles. Of course, the RBI governor, in his maiden monetary policy speech, Sanjay Malhotra has delivered a 25 basis point rate cut. This was widely expected by most economists who were polled across the country. 25 basis point rate cut, while this is an initial sort of a move towards an easing cycle, what stood out was more important, the statement that he made towards the end of his speech, where he said that the MPC felt that there was a need for a less restrictive monetary policy because that is what the economy needed. As far as the growth and inflation outlook are concerned, largely the same, but says some minor changes. You know, your GDP growth for FY26 is pegged at 6.7%. This is on the upper end of the government's own sort of estimate of 6.3 to 6.8% GDP growth for the next financial year. Similarly, on inflation, yes, it is coming within the 4% band. It's not still below 4%, but that's those are all healthy signs. According to the RBI governor, food inflation is showing signs of moderation, and unless there is some kind of major sort of supply side issue, food inflation will likely continue to moderate. It is important, of course, to also look at how the RBI governor is playing up the issue issues with respect to global uncertainty. So yes, there is a global macroeconomic uncertainty. Secondly, trade policies are uncertain at this point in time, and material weather changes. These are all key risks which could affect future monetary policy, growth and inflation outlook. So that's something that the RBI governor is keen to point out to the rest of the system. Overall, while he maintained what was widely expected in the monetary policy, one statement that he made apart from this also caught my eye, which was when he said that regulations are not devoid of costs. So that was an important sort of message that is coming in. That the RBI governor is recognizing that yes, for financial stability and for orderly functioning of the financial system, good regulations are essential, but regulations are not devoid of cost, and therefore the RBI will keep that factor in mind for future drafting of regulations. Remember that regulations around liquidity coverage, regulations around project financing, regulators around expected credit loss framework for the banks, all of these are pending finality at this stage, and all lenders in the system are awaiting the RBI's green signal on when these rules will come into play.
Right. Thanks, Vishy, for that. Now, the Reserve Bank of India will be implementing an exclusive domain to tackle financial frauds. Bank websites have been mandated to end domain names with bank.in or fin.in. The RBI's decision comes on the back of its concerns over increasing cyber threats and digital risk. Governor Malhotra further highlighted that the central bank has been taking various measures to enhance digital security in the banking and payment systems, such as the additional factor of authentication for domestic and international digital payments. Now, here are some reactions from a variety of experts to the Monetary Policy Committee outcome. Take a look.
So our expectation is that we will see growth actually not pick up as optimistically as what the RBI is expecting. We're looking at about a 6.4% GDP growth rate. I think it's going to be like quite a difficult operating environment. We know the challenges about exports, but of course, exports aren't that key economic driver for India. It's more about what's happening domestically. And I think 125 basis point cut doesn't materially change the game at this point. I mean, sure, we do have a bit more fiscal support coming on board, particularly from April around those adjustments for middle-income households, but I think it's still going to be a challenging environment as well. And I think one thing and one area that, we don't pay enough attention to as we should is that, labor supply overseas and that flow through to remittances and then that impact on private consumption. I mean, if we do see a material pullback in labor supply of overseas workers in the US, then that could actually flow through to a weaker consumption picture as well in India. And of course, consumption is such a critical driver of the economy. So I think that's a risk that is quite frankly, flying under the radar at this point that we need to pay really close attention to. And I think in terms of how much more the RBI is going to move, I don't think we're going to see as much movement as what we've seen from other central banks like the ECB, the Fed, the Bank of England. I think they're going to tread a lot more carefully because the one complicating factor for the RBI when it comes to easing policy that these other central banks don't have as much is around the currency. And because we do have such a weak rupee, that potential flow through to imported inflation is a concern. And I think one thing as well that we need to keep a close watch on is, energy prices are low at the moment, but if we do get a resurgence at the same time that the rupee is extremely weak, then that's going to be particularly troublesome for an economy like India. So I think we're not going to see much more cuts. I think it's going to be a shallow easing cycle this year, which really does limit the revival in domestic demand that we will see as a consequence of that.
So I definitely won't call it dovish. He did mention upside risks to inflation. I think there was a very hopeful note which was struck in a sense, talking about resilience amidst global uncertainties, etc. But it was a very pragmatic policy, and I think overall very much in line with what we were expecting, that we'll get a rate cut without any change in stance. And even towards the end, the mention that we're going to look at the outlook every single time to decide what we're going to do. I think that's absolutely the right approach. In any case, this rate cut cycle is expected to be very shallow. We're not expecting more than one more rate cut. So there's very little point actually to change the stance to accommodative. So I think it's much better that we've retained it at neutral. And this gives all the flexibility to the MPC to decide policy after policy what looks best for the Indian economy. And a couple of more points, 4.2% CPI inflation for next year, that's in line with our own estimate. And what's that's basically suggesting is that neither are the tax cuts expected to be very inflationary. And while, of course, the upside risks to inflation were mentioned, but again, similar to our own view, that the exchange rate depreciation will have a much bigger impact on the WPI and a smaller and more lagged and delayed impact on the CPI. So while upside risks were mentioned, the CPI inflation projection actually for FY26 has been mentioned at 4.2%, which is in line with our own extant projection as well. We're penciling in one more rate cut. That's what we were penciling in before today as well. Quite frankly, if we were to be looking at two more rate cuts, then I think they would have changed the stance to accommodative. I'm not sure they would have continued with a neutral stance if they were going to be considering 2 rate cuts going forward. And that's why I think sticking with a neutral stance makes sense in this situation where if you're only going to cut rates one more time, why would you have moved to accommodative? And I know I said it before, I'm going to say it again, the focus on the upside risk to inflation, I think that's another hint that they're not looking at too many rate cuts going ahead.
Viewers, now let's shift our focus to the markets. So benchmarks end in red for the third consecutive session with FMCG, PSU banks dragging the markets lower. Metal and auto were seen in green with gains of nearly 2%. My colleague Harsh joins in with a complete market roundup.
Well, the policy didn't really impact markets because kind of muted reaction on at least the benchmark as well as on the bank Nifty as well as the Nifty IT index. Muted sort of reaction. And, the question therefore is whether a lot was already built in. The 25 basis point rate hike was largely in line with what the street was penciling in. Let's talk about broader markets because that's where some bit of action actually was. No material movers though on the back of policy, but there was plenty of action. The Nifty mid-cap index was up and doing fairly well for itself. The Nifty small cap index though was down, and therefore that divergence with regard to both mid cap versus small cap. The breadth of the market was in favor of the declines, and but it kind of improved a little bit towards the end, so that was something to look at. In terms of the Nifty, the breadth was fairly stable. Metal stocks really stood out. Possible recovery in China, increase in pricing, possible duty with regard to imports, steel imports, keeping the sector buoyant. And you had some commentary as well from ArcelorMittal talking about how possible price hikes in 2025 could well mean that steel stocks will do well this year. And that kind of aided some of the counters. You had maybe a Tata Steel up 4% and top Nifty gainer in trade today. Britannia, on the other hand, slightly muted set of numbers, and therefore you saw FMCG stocks sulk along with a Britannia. Britannia was down around 1.5% plus in trade today, and therefore some of those counters also in focus. But outside of that, no real major movers in trade. On the back of the policy, not at all. On the back of earnings, there were plenty. And the BSE 500 top gainers, top losers on your screen now. So those are some big movers in trade on this Friday, last trading day of the week.
Thanks, Harsh, for that market check. Now, Mahindra & Mahindra has reported its Q3 earnings, with revenue up 20% and net profit up 19% compared to the last quarter. Tushar joins us to give us a breakdown on these numbers. Tushar, over to you.
So essentially, Himakshi, what we are looking at is a 20% growth year on year for Mahindra. And there are 5 key takeaways. We have those numbers with us about how the margin expansion has happened. But there are 5 key takeaways from the Mahindra & Mahindra press conference. The first is that Mahindra is reworking how it calculates its calculates its margins going forward in Q4 to include for the EV business. Remember, Mahindra will be the contract manufacturer for Mahindra Electric to manufacture the BE6 as well as the XEV9E electric vehicles. Mahindra also expects the income tax relief as well as the RBI rate cut that happened a few hours ago to impact the volumes of its entry-level offering, that's the 3XO. That should come as a boost for the 3XO volumes going ahead. Number 3, the cost picture is evolving for the company in the backdrop of commodity prices, that is raw material inflation, as well as an adverse exchange rate, that is the rupee weakening in the face of a stronger dollar. Yeah. So the key takeaways that we are seeing from there, as well the rural and urban demand that the company has is actually still on a par. Something which is actually unique to that company, because others are showing that the rural performance is much better. Mahindra is actually expecting Tech Mahindra as well as Mahindra Finance. The turnaround is already done. Now growth should come in.
Yeah. Right. And Tushar, stay with us. Let's focus on an NDTV Profit exclusive on that note. Infosys has been handing out pink slips in bulk. So NDTV Profit has, in fact, accessed one of the letters. So Tushar, tell us what you have gathered from your sources.
So what we have learned is that Infosys has let go of 700 freshly hired graduates from its Mysuru campus. They've actually been forced to sign letters to exit the company. So what our sources tell us is that an IT employees union has actually alleged that the Infosys has terminated the freshers which were onboarded just a few months ago after a 2-year delay from when they first received those offer letters. The terminated freshers are being made to sign confidentiality agreements, as well as these are the freshers who, but actually Infosys actually says that freshers who have failed the internal tests after onboarding are being fired and not at any whim or any fancy of the company. This is as per what the sources and what the companies are telling us. It's an evolving situation, and that's what Infosys is accused of. Infosys says it's because these particular freshers failed the internal tests.
Right. Thanks, Tushar, for getting us those exclusive details there. Now, viewers, the Cabinet is likely to approve the new income tax bill today. The Cabinet meeting will be held at 6 p.m. under the chairmanship of Prime Minister Narendra Modi, and it is expected to be introduced in the Lok Sabha on Monday, the 10th of February. So, to give us more details on the same, I'm being joined by my colleague Rishabh Bhatnagar. Rishabh, tell us more on the new income tax bill.
Right, Himanshu, what we're hearing is that in a few hours from now, the Cabinet will meet. They will be tabled. The new income tax bill will be tabled in front of them. Post that, it will be sent to the Parliamentary Standing Committee because their approval is also required on these bills. Post that, it will be introduced on Monday in the Lok Sabha during the budget session that is ongoing. Now, this is the same income tax bill that was announced during the budget on February 1st by FM Sitaraman. This is the bill that is set to simplify and sort of absolutely just redefine how sort of the tax structure works. The bill will be cut in sort of half its current length, from about 6 lakh words to about 3 lakh words. It will be made very simple so as to a common taxpayer can now access the tax bill and understand the implications of how much tax they pay and where it goes. So that is the intention of this current one. We will be tracking this soon as it evolves into the evening.
Right, Rishabh. Now stay with us. The time for incremental progress is over, and the next decade will define global artificial intelligence leadership. This is what Niti Aayog revealed in a discussion paper on changing AI landscape. So Rishabh, tell us more about it.
Right, so this is a discussion paper that is out on Friday, and it's penned by a distinguished fellow of the Niti Aayog, Debjani Ghosh. She was the former head of NASSCOM, which is a leading IT lobby right here. She basically writes that it is the time is absolutely perfect right now for India and the government to build a talent repatriation program. What this means is essentially that there is a lot of AI talent across the world that is Indian in origin. A lot of Indians settled abroad that are working on the latest groundbreaking innovations in artificial intelligence. Sadly, they are abroad and they are working for agencies and organizations that are based abroad and not contributing to India's progress. So this is the time to build a repatriation program, call them back to India, sort of incentivize them to build models here, right? India is focused on its AI program as well through the India AI mission. We've seen that the India AI mission is focusing on various pillars like foundational models, it's focusing on infrastructure as well as data sets. So the time is right to get all this global talent that is Indian in origin back to India and sort of build on this AI journey that is currently very rapidly progressing with the evolution of DeepSeek and other such models.
Absolutely, Rishabh. Thanks for getting us those details there. Now, moving on, in a setback to the Berman family, the Supreme Court today refused to allow closing of the public open offer given by them to acquire an additional 26% stake in the Delhi-based Religare Enterprises Limited. My colleague Varun Gakar joins us with more details. Varun, over to you.
Yeah, that's right. So the Supreme Court has extended the Berman family's open offer for an additional stake in Religare Enterprises till the February 12th. Now, a little background before we delve into the details of the case. The Berman family is actually seeking to increase its stake in Religare Enterprises, and the family has made an open offer to buy the additional shares at rupees 235 per share. Following through certain entities, following this open offer, the Berman family's stake in Religare is set to cross the 50% mark. Now, crucially, Danny Gaikwad, a US-based investor, has made a competing offer at rupees 275 per share for a 26% stake, which is essentially 17% higher than Berman family's share in this offer. Now, Gaikwad's offer has been currently rejected for want of regulatory approval and requirements. However, Gaikwad has made another application to the market regulator SEBI seeking an approval on this offer. Now, the top court has directed Danny Gaikwad to deposit rupees 600 crores in terms of its competing offer against the Berman family's open offer on or before February the 12th, which is the date to which the extension has been granted by the top court. And the court has also said that the public offer, which was set to close today, is set to continue till 12th of February. And in case the 600 crore is not deposited by Gaikwad, then this order of the top court will stand vacated. The top court has also stated that this February 12th, the deposit, if it doesn't come in by February 12th, the order of the top court stands vacated.
Right, Varun, thanks for getting us those details there. Now, viewers, on this week's episode of The Disruptor, celebrity chief, author, and perhaps India's most iconic culinary icon, Vikas Khanna opens up about his journey from Amritsar to New York and what it has taken to achieve the magnitude of success that he has had. Listen in to a snippet of that and tune in for the whole episode at 6 p.m. today evening.
Let's start from the beginning. और ये इसके बारे में आपने बहुत बार बताया भी है अलग अलग इंटरव्यूज़ में, लेकिन हमारे ऑडियंस के लिए एक अमृतसर का लड़का खाना बनाना सीखता है, न्यूयॉर्क कैसे पहुंचता है?
मैं न्यूयॉर्क पहुंचा नहीं, मेरे पास चॉइस नहीं थी उस टाइम पे कोई लाइफ में. मेरा बैंक्वेट था बहुत सक्सेसफुल अमृतसर में, तो एक लोकल ऑफिशियल्स के साथ कोई झगड़ा हो गया छोटी सी बात पे, तो उन्होंने मेरा सारा बैंक्वेट तोड़ दिया. I was 29 and I was heartbroken. जो चीज़ मेरी दादी ने, मेरी मम्मा ने हाथ से बनाई थी और उसको बिल्कुल उन्होंने क्रश कर दिया. There was no empathy, there was no reasoning, they didn't give us a moment to even think what they're doing. They just came and they bulldozed everything. उसके बाद मुझे लगा कि रीस्टार्ट कैसे करूँगा मैं लाइफ को. You know, I was a graduate from Manipal. I had trained under Taj, Welcome Group.
मणिपाल में आपने
होटल मैनेजमेंट.
होटल मैनेजमेंट.
So I had already worked under Taj in Delhi. I worked for Mughal Sheraton in Agra. I had worked for Siroc in Bombay. I had worked with Kathmandu में Soltio Broys in. So मेरी बहुत ट्रेनिंग थी. And suddenly everything is just means it adds up to nothing. तभी मेरे भाई ने मुझे किताब दी थी, जॉनस्टन लिविंग थर्स्ट सीगल. सो दैट बुक रियली मूव्ड मी एंड मेरी बहन ने कहा कि न्यूयॉर्क इज़ द प्लेस. अगर जंप मारना ही है ना तो न्यूयॉर्क में मार. अगर लैंड हो गया तो क्यूजीन चेंज कर देगा. This we are talking about 2000. I go to American embassy and I tell them everything what's happened to me. I got a visa. I went to America and that's how everything changed.
और अमेरिकन एम्बेसी में आपको वीज़ा मिल गया?
हाँ जी, मैंने सब कुछ बताया कि मेरा बैंक्वेट था और वो मेरे सामने तोड़ दिया. And I don't do business for the heck of making money. I start turning my business into a temple form, at least in my mind. मुझे लगा मेरा मंदिर तोड़ दिया, मेरा विश्वास टूट गया बिल्कुल इस टाइम पे. और मुझे लगता है कि मैं देसी खाना जितना मुझे आता है, I can make it. And I'm telling him dishes I feel I've mastered. And I hope somewhere he is watching it and he say that he made the right decision, that somebody was so passionate of bringing their cuisine and culture to the world stage. And it's been almost 25 years I'm keeping my promise.
Viewers, don't forget to catch this exciting chat at 6 p.m. today. Now, that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
And the reason for the success of the restaurant this magnitude, because people felt भाई का जिगर है, business नहीं है इसमें. This is our time to not bend down to their accents and their foods and glorify it. It is our time to lift our own cuisine, our own culture.
1, 2, 3, 4.
Toughest person to cater for, to cook for, President Trump, Prime Minister Modi, या शाहरुख खान?
मेरा दिल जिसके पास है, शाहरुख खान.
You tweeted recently after President Trump won the election that can I make something for you?
So एक तरह की खिचड़ी है जिसमें आप मिक्स्ड मिलेट्स डालते हैं.
आपको ट्रम्प साहब को खिचड़ी खिलानी है?
हाँ, तो खिचड़ी खाना नहीं है.
What is the one vegetable you will never eat?
मैंने मेथी खानी बंद कर दिया है.
मतलब करेला, बैंगन ऐसा.
I love करेला.
They're looking at, how to sort of reduce the number of slabs which is there in custom, which is like 12 or 13 slab, and how to bring it down to 5 or 6.
As a part of comprehensive review of customs rate structure announced in July 2024 budget, I propose to 1. Remove 7 tariff rates. This is over and above the 7 tariff rates removed in 23-24 budget. After this, there will be only 8 remaining tariff rates, including 0 rate.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome to KYC, a show designed to give regular investors powerful, actionable insights into the fundamentals of a single NSE-listed company every day. Well, today we're talking about Ixigo, also known as Late Revenue, and what we're tracking today is, well, largely the company which is into travel and tourism. But now we do know that this particular company has also listed just last year. So there is a lot of interesting data that we can potentially put out for you. We start off with talking about what the company is all about. We have it was incorporated in 2007, and the company runs an online platform, and many of you may be familiar with it as well, as it provides information as well as booking services for the travel industry. It also provides software development and maintenance services to its customers, and this bookings will involve bookings for trains, flights, buses, hotels, what have you. Now, in terms of the latest metrics, what we are seeing is that the monthly average user stands at around 87 million. That's around 8.7 crores, and users from about 2,400 towns uses the Ixigo website. We also have deep penetration as far as the tier 2 and tier 3 towns are concerned. For the company, it stands at a little less than 94%. And the lifetime transacted users stand at around 41 million. So that's as far as what the company does and what it's all about. But I'm going to get in my colleague Mahima to tell us about how things can pan out for this particular company and how things have come through. So what we usually do is we talk about the various fundamentals of the company. This would include the income statement, the balance sheet, cash flows, return ratios, moving beyond the financial statements. We also look at the shareholding, what the stock has done, as well as what the street makes of it along with the valuations. So Mahima, good morning and thanks for joining in. Why don't you take us through the revenues first, and as well as the profitability for this particular company, and the several revenue streams in this case.
Right. So in terms of revenue, if we see the 9 months FY25 performance, they're already standing at 629 crores of revenue, which in FY24 they've done 655 crores. So they're nearing their FY24 mark, and there's still one more quarter to go. So they certainly outperform in FY25 as compared to the FY24 metrics. The 3-year CAGR for revenue has been 69% for the company. EBITDA has grown to 55 crores as compared to 43 crores in FY24. So EBITDA is already much higher than what they did in FY24. In terms of margins have significantly improved from 6.7% to 8.9% when it comes to the 9 months FY25 figure. And net profit, however, has come down, and this is because their advertisement expense overall has gone up. In terms of multiple revenue streams, since it does bookings from different aspects, flights, trains, hotels, etc. They have agent services charges, they have payment gateway charges, value-added services, advertisement income, airline commissions, and convenience fees are some multiple sources of revenues, which kind of augur growth for the company. In terms of key operational metrics, the gross transaction value was up 48% YOY this particular quarter, and monthly transacting user was also up 38% for the company this quarter. So both of these combined, the gross transaction value as well as the monthly transacting users is what has kind of aided the revenue for the company, Agam.
Right. So that's, talking about the income statement. Let's also talk about how things have panned out when it comes to the balance sheet. And it's on a strong footing. To be honest, I wasn't expecting a company which is relatively new to the scene and, of course, very, very new to the stock market, certainly, to have such a good balance sheet. So it's debt-free. It does have about nearly 600 crores as shareholders' net worth. This is, of course, accumulated, profits as well. And cash at bank stands at around 143 crores, even as it sees a negligible gross debt currently. So it does seem like it's on a very strong footing if coming down to the balance sheet. And I'd reckon it is largely the same for cash flows as well, Mahima.
Absolutely. So in terms of cash flows, the cash flows have improved, when we compare the first half of FY25 versus the first half of FY24. In terms of cash flow from operations, it stood at around 19.4 crores in first half of 24, which is more than, more than tripled in first half of FY25 to 70 odd crores. And in terms of net cash flows, which was negative in first half of FY24, has turned positive to 28 crores in the first half of FY25. So, this financial year has turned out to be a good year in terms of cash flow as well. So, we give a thumbs up in terms of cash flow as well.
Fair enough. So, actually, if you consider all the three financial statements, they look very, very good. And based on that, I'm going to come down to return ratios. So, return ratios are improving. There's no doubt about that. But they are not to the tune of, 20%, 25% is what we might expect from an ideal situation. But we're not going to give that a thumbs down just because those ratios are down, or rather not up to the mark, because we have seen these ratios move from the negative well into on their way to hitting that 20% mark around there. So as far as the return on capital employed is concerned, at the end of 2024, that stood at nearly 17%. Return on assets stood at around 12.5%. This is coming from the negatives. So, which is why, they've seen an improvement. But once we see the company hit 20% mark, well, we'd probably give that a thumbs up as well. For now, we're going to go with a neutral. But Mahima, let's talk about the shareholding as well. This one is a very interesting one for this particular company.
Absolutely, because there's no promoter shareholding in this particular counter. And which is why, we'll probably give this particular metric a neutral rating, because there's no skin in the game when it comes to the promoters, right? But we've seen that FIIs have been increasing their stake. Their stake has been increased from 59.8 to 61.1 in December 2024. DIs have seen a slight downtick in terms of their stake, but public holding has, kind of remained strong. Slight downtick seen with respect to, September 24 and, when you compare that to December 24 quarter. But in terms of an interesting thing to watch out for here is that both the CEO as well as the co-CEO and the director of the company are holding quite a significant stake in the company. Alok Bajpai, who's the CEO of the company, not the promoter of the company, holds 4.86% stake, so almost a 5% stake in the company. And Rajneesh Kumar, who's the director and group co-CEO, is who's again not the promoter of the company but holds around 5.21% stake in the company. So both of them combined are holding around 10% stake of the company, Agam.
Right, and this is an important one. And while the founders, the co-founders do have stake in the company, a lot of the decisions will come down to the influence of all the institutions who hold, significant amount of ownership in the company as well. Of course, one might find it heartening to know that the co-founders still have a significant stake, but again, it's going to be something of, middling in terms of our ratings as far as the shareholding is concerned, which is why it's a neutral. But we move on and talk about street credentials. And, well, the stock has done well. I would say that, again, we don't have too much data to move around with, considering it was listed back in June of 2024. So from its issue price, if you was subscribed for the IPO at that point in time, and if you were issued the share price, the shares, which was at around 93 rupees per share, you're looking at a 69% return. But even if you consider and would have bought the company on the listing day, it's given you 17% returns from the closing on listing day all the way until now, and which is not bad. So it has, to a certain extent, also outperformed the benchmarks, the mid cap and the small cap indices. So it's going to be a thumbs up there as well. That said, Again, Mahima, let's talk about the valuations here. They do look very, very expensive.
Right. Before I go to valuations, the 17% mark is despite the kind of correction that the market has seen in the past, 1 month or so. So that's why we've given thumbs up when it comes to the street kit. But yes, valuations does not paint a very rosy picture. If you compare it to the peers, Ixigo is right now trailing at a P of 131 times. So despite of the kind of growth that we've seen in the company when it comes to the revenues, which have grown at a CAGR of around 69%, the stock has seen a lot more traction as compared to the growth of the company, which is why we're seeing the trailing PE at 131 times. Now that compared to its peers, TBO Tech trades at around 81 times, EaseMyTrip trades at 26 times, and Yatra Online trades at 81 times. So right now the only cheap option, well, comparatively cheap option available in the market is Easy Trip Planners. But yes, valuation is definitely a concern, which is why we've given a thumbs down for this particular metric.
And of course, we must remember that these are trailing 12-month valuations. Now, no matter what kind of growth we can see the company, even if they do double their bottom line over the course of the next 12 months, even based on that, you're looking at a price to earnings ratio of around 65 times.
Right.
So it is slightly on the higher end. But finally coming down to the analyst recommendations now. Well, given the fact that it's a relatively newer stock on the stock exchanges, we don't have a lot of coverage on the stock. Also, in terms of absolute size, it's not a very large one in terms of market capitalization, which is why we just have two analysts on the street at the moment, at least as far as our consensus is concerned, who have a buy rating with an upside potential of around 11%. And because of the fact that there is a relatively lower number of analysts covering it, we'll give it a neutral rating, and that brings us to an overall rating of around 5.5 out of 8. So there you have it. That's the rating coming through. But do remember that so far the company has done very well in terms of its key financial statements. That includes income statement, the balance sheet, as well as the cash flow statement. Of course, we'll continue to keep an eye on all the several other factors. But Mahima, on that note, thanking you for joining me and taking us through these ratings for the company. And we'll move this conversation forward. We are now in conversation with Alok Bajpai. He's the chairman, managing director, and group CEO of Ixigo. Alok, good morning, and thank you so much for joining in. Alok, we've seen what you all have done over the past few years, over the last 9 months as well. The question now comes down to, how are we looking at growth over the next 2 years?
So if you look at the Ixigo story, right, it's a bit unique in some aspects because we did not start out as an OTA when we launched back in 2007, and the journey over a decade that we've had by serving the next billion users and building out utility use cases on trains, buses, and then becoming transactional just before COVID. I think that was a transformational moment for us because we already had a lot of traffic, and we started serving our customers better by helping them complete transactions on our own platform and built value-added services on top. So, our trajectory on revenue is reflective of the fact that, we've been working very hard on converting ourselves from, pure play utility app that we used to be many years ago to a transactional one. And therefore, our monthly active users were growing, but our MTUs also started to grow, and we started seeing transactions ramp up across train, bus, flight. And we did a couple of smart acquisitions during COVID as well, which and one more recently, which have also sort of aided this kind of growth. But if you look at the overall trend line on that growth, right, and you zoom out a bit, you see that last quarter, our revenue run rate, if you look at the annualized number on that, is almost 10 times of what our revenue used to be back in 2019 pre-COVID, right? And the only thing that has earned us that is the fact that we've been extremely focused on customer experience with a specific focus on the next billion users.
Right, Alok. So, moving in towards a transactional app from a utility app right now, keeping all these factors into consideration with the kind of trends that you all have seen over the past few quarters and years, how does this product mix change over the next few quarters and years as well. What can you tell us about the latest changes that are taking place as far as your company goes?
Yeah, so I think the shift you're referring to is more on the product mix, right? Like how people are increasingly buying flights and buses through ixigo. I mean, trains, we were already the market leading OTA with the dominant share, and I think that share has also moved up. We were close to 58% of the online travel agent train booking market as of December, right? And I think bus and flight is where we've really doubled down. And if you look at our flight growth, 73% GDP growth year on year. I mean, just for perspective, the overall domestic flyers grew by about 11% during that quarter, right? So we've actually grown almost 6.5, 7 times faster than how fast the overall sort of passenger market is growing there. On buses also, we've grown at 63% YOY last quarter. And if you understand why this is happening, it's kind of natural in my mind that this is something that, we have a right to grow faster on, because we are starting from, people in tier 2, 3, 4 towns who maybe earlier were only taking trains or buses, and now today, are coming and actually booking flights. And even though we don't disclose these numbers, but there's a large chunk of these who might even be flying the first time of their life, right? And I think the interesting thing is if you're adding that many new flyers, right, and you're seeing them come from places like Gorakhpur or Varanasi or Ayodhya or Nagpur, Jaipur, right, and also doing international trips, some of them, right? So I think that's where the ixigo journey has been, really doubling down on. And if you again think about the macro trend, right, the per capita incomes in our country are going to continue improving. The aspiration levels of the middle class will keep growing, right? And if you just think of where will the next 100 million flyers in our country come from, I mean, the clear answer is they're going to come from people who today are not flying yet. And therefore, not that they're not traveling yet, they'll be traveling on buses and trains already, right? So in that sense, the nature of the audience we've built out over the last decade fits beautifully with where the apex velocity of growth will come from in the flight segment. And we are natural beneficiaries of that, right? And of course, I'll give a lot of credit to the execution of the team that has built a super product. We have market leading features out there, right, in terms of being able to track flights in real time and get updated about your boarding gate or your, that your flight is running delayed or that, your baggage has arrived at a certain belt number. So we really handhold the customer end to end. Our customer service is fantastic. And we are probably the only OTA in the world disclosing things like how fast we refund customers, how fast we pick up calls, right? 92% of our calls, actually close to 94% of our calls last quarter were picked up within 2 minutes. That number improved from 92% the quarter prior. And if you look at the average refund time that we have, 3.5 hours, right? I mean, when we were becoming an OTA, the biggest grouse we heard was people would not get refund and they would have to call up someone, email someone to get their money back, right? Their hard-earned money back. And we said, this is something we got to change, right? And that's why we started disclosing these metrics to put that pressure on ourselves to continue improving them. So we've been very fanatic about customer experience, and we will continue to use that strategy to grow faster.
Right, so Alok, the travel and tourism sector is ever evolving, also changing very, very quickly. Want to ask you now about the areas of businesses that you aren't at the moment, but will look to move into or are already planning strategically investments into.
See, hotels, we've been talking recently about that it's a area of priority for us. We recognize that for most OTAs out there, hotels is a sizable chunk of their revenue, GTV, etc. And, globally, in fact, the established template globally was you launch for flights and you build hotels out, and that's how people used to build OTAs. It's just that in India, only 4% of people fly. So our strategy was to go after train and bus with equal fervor and sort of build those out because you want to tap into the middle class. You want to start with train, and as that person graduates up into flights, the hotels then becomes an important leg because naturally when you know that somebody is going at from A to B and then staying in B for like 3 days, they would need some kind of accommodation, right? So that's why we've been kind of doubling down on building the right product, on getting the right supply, all those things in the last few quarters. And I think over the next few quarters, you will hear more from us around that. It's too early to talk about more details there. And, again, ancillary like value-added services that we have, whether it is Ixigo Assured, Price Lock. Recently, we launched Travel Guarantee, which basically gives you up to a 3x refund if your waitlisted ticket on train doesn't confirm, so that you can buy a flight or a bus instead, or even another Tatkal train. I think those kind of products, we'll continue sort of innovating and coming out with. If you look at our track record in the last 4 years, we've come out with a bunch of these, 5 to 6 of these, right? And I think each product solve customer problems as well as improve, our ability to monetize.
Right, Alok, we've run out of time on the show, so I'm going to take a moment to thank you for joining us and taking us through the outlook for the company. Well, on that note, that is all that we have for this edition of KYC, but lots more lined up on the other side. You're watching NDTV Profit.
कि चूंकि सरकार का फोकस बिल्कुल सबसे ज़्यादा गरीब, पिछड़े, दलित लोगों पर ज़्यादा रहा, गरीबों पर ज़्यादा रहा, रूरल एरिया पे ज़्यादा रहा, मिडिल क्लास कहीं ना कहीं नेग्लेक्ट हो गया, जो कि बिल्कुल आपका एक कोर है भारत के लिए, आबादी भले ही छोटी हो, तो उस नेग्लेक्ट को एड्रेस करने का कोशिश किया गया है।
इसमें एक मैं स्पष्ट करना चाहती हूँ, पहले से ही प्रधानमंत्री मोदी जी 2020 उस समय से ही ऑनेस्ट टैक्स पेयर का रिकग्निशन के नाते फेसलेस ले आए, इनकम टैक्स चार्टर, टैक्स पेयर्स चार्टर हमने घोषित करवाए और टैक्स पेयर्स को सर्टिफिकेट भी भेज देते कि समय पर टैक्स भरने वाले टैक्स पेयर हो या रेगुलरली टैक्स पेयर, उनका रिकग्निशन हो, ये सब करते आ रहे। टैक्स पेयर का रिकग्निशन और सम्मान कभी भी माननीय प्रधानमंत्री जी के मन में है और इस समय जब दुनिया के तुलना में हम फास्टेस्ट ग्रोइंग इकोनॉमी रह रहे हैं, पिछली बार भी रहे, पिछले 2-3 साल में रह रहे, और IMF और वर्ल्ड बैंक के नज़रिया में हम अगले साल भी फास्टेस्ट ग्रोइंग रहेंगे। और इस संदर्भ में क्या हम टैक्स पेयर्स को सम्मान करने जैसे ये काम कर सकते हैं? इस गाइडेंस के नाते हम काम किए, इसीलिए इस बार इनकम टैक्स का ये प्रपोजल हम ले आए।
एक और क्यूरियोसिटी है लोगों में, दैट इज हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
मिडिल क्लास के चर्चा बहुत होता है और आज रियलिटी हम देखें तो कम से कम 1 लाख तक पर मंथ सैलरी कमाने वाले के लाइफस्टाइल कैसे हैं और अगर वो शहर, मेट्रोपॉलिटन शहर में रहते हैं, उनका एक्सपेंसेस क्या है और उनके लाइफ में स्टार्टिंग स्टेज में रहने वाले का खर्च क्या क्या हो सकता है, ये सब असेस करने के बाद हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं, इसीलिए अराइव किए कि एटलीस्ट 1 लाख पर मंथ राहत ज़रूर दें।
जी, एक क्या अप्रोच में कोई चेंज है, शिफ्ट है? अभी तक इंफ्रास्ट्रक्चर डेवलपमेंट लेड ग्रोथ की तरफ सरकार का कोर फोकस था, जहाँ तक बिल्डिंग ब्लॉक्स का सवाल है। अब आप क्या कंजम्पशन लेड ग्रोथ देख रहे हैं? इसी वजह से इस बार केपेक्स पे मामूली इंक्रीमेंट है।
पहले मैं उस बात को मैं पकड़ना चाह रही हूँ, केपेक्स में मामूली, जब कोविड के समय से हर साल 15%, 20% इंक्रीमेंटल नंबर ऐड करते हुए ग्रोथ इन पब्लिक एक्सपेंडिचर ऑन कैपिटल एसेट्स इतनी दूर तक ले आए। हम पिछले साल 11.11 लाख करोड़ का अनाउंसमेंट की। उसके ऊपर अभी जब 10% के ज़्यादा 10.23% इंक्रीज हो रही है और आरई से कंपेयर करते हुए, इट रीचेस अ हायर नंबर 11.2124 ऐसे, वो मामूली सा हो गए। 11 लाख से अधिक भारत देश में लगातार पिछले 2 साल और उससे पहले 10 लाख ऐसे एम्फेसिस ऑन पब्लिक एक्सपेंडिचर जब हो रही है, 10% ओवर आरई इज ऑल्सो मामूली। आप एक बार इसको रिकग्नाइज करना चाहिए कि रिपीटेडली पब्लिक एक्सपेंडिचर ऑन कैपिटल एसेट बिल्डिंग इतने लेवल तक पहुंच गए। आज 10.23 ग्रोथ ऑल्सो इज लुकिंग लाइक मामूली।
Sources telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal onwards.
Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims?
If I were to give you 30,000 rupees, what would you do with it? And if I were to give you even more, say 50,000 rupees. Okay, but wait, what if, no strings attached, I doubled that 50,000? Now that would be something, wouldn't it? But I would if I could. I certainly don't have that kind of money. You know who does though? The government of India. And the finance minister announced that you'll be getting a major tax break next year. Depending on how much you're earning, you'll be paying anywhere between 30,000 and 1,10,000 rupees less in tax. And money saved is money earned, as they say. The finance minister and the government are hoping that you'll go out and spend on goods and services. And that will grease the wheels of the economy. After all, consumption is a major driver of economic growth. But where will the money be spent? And which companies will benefit? That's what fund managers and investors as a whole are trying to figure out. This is Money Wise on NDTV Profit, and my guest today has a few theories that should hold you in good stead if you're trying to figure it out as well. Trideep Bhattacharya, the CIO Equity at Edelweiss AMC, is joining me today. Trideep,
hello.
Hi, Trideep.
How are you?
So, one, were you expecting such a big bang change in the tax laws?
I must admit, Alex, when we were putting the calculations together, we didn't have this in mind. We actually didn't have the extent to which the tax cuts were announced in mind. We thought there could be some general fillip to the consumption, but not in so many specific terms and not in that quantity as well.
So the question a lot of people have been asking since that, and I must confess that in this newsroom as well, and I was listening very closely to the budget speech, as soon as that announcement was made, there was this big cheer, and there's a large number of young people out there in the newsroom as well. So the idea that they'll suddenly have more money to spend is something that excited a lot of people. So
I'm sure
the question a lot of people are asking is, will people go out and spend? Will they hoard it? Will they save it? I guess it's not an easy answer.
True. So I think first, let's get the context right. So the urban middle class, so to speak, if you look at the people who will benefit from it, would have their average income go up by anywhere between 4 to 8%, which is a meaningful amount. For many of the people, this is the annual salary hike that they get. So their take-home salary, in many ways, if you call it that way, has been given a yearly hike of that much amount by the government of India, which is amazing. Which is why I'm not surprised at the reaction which your colleagues did overall. Now, if you superimpose on top of it that the savings rate of India is roughly about 35-36%, then roughly, at least 60 rupees out of every 100 that's given will probably kind of, get spent. Okay. And there are multiple areas that they will spend, and I'm sure we will kind of get into the ins and outs of it. But yes, roughly about, if you think about 30-70 mix or 40-60 mix, 40 saving and 60 spending, you will not be way off the mark.
Okay, so that's interesting. So irrespective of whether there will be spending in certain pockets or the other, there is going to be more spending. There's rather saving. And so what is the implication of that, Trideep? Do you think, because we're speaking at a time when over the course of the last few months, there has been correction, and it's accurate to call it that in the equity market in India, primarily because of the kind of selling that foreign institutions have done. But some might say it's healthy. And it happened because, again, some might say that the valuations were a little stretched. And they were stretched because there was a lot of domestic money getting pumped into certain pockets of the market. Does that continue to happen?
So two bits to that. One is that, before this, we were in a situation where stock markets were attracting a whole bunch of investments, but banks were struggling to get FDs.
Yes.
Now, with some more money in the pockets, first, some bit of liquidity problem, some bit of deposit problem will get addressed. The second part, of course, is that the markets are somewhere between 10 to 15%, and if in pockets even more, cheaper than when they were, about 3 to 6 months ago. So clearly opportunities are far bigger than what they were earlier. And hence I'm sure it will attract a certain set of the population to kind of put money to work in the form of savings in these areas. So yes, I'm hopeful. It would lead to more money into kind of different asset classes over time. The first bit comes the saving, though. Then comes the and that's where the investment kind of part comes in, and then comes the spending. So there's a time series between the two as well.
And we must remember that while we're talking about absolutes in terms of the yearly number, it's not something that will come at once.
Exactly.
It's going to be paid out over the course of every month, right?
Correct.
So okay, so that's one aspect. I will refer back to this at some point in the conversation, but I want to talk about how the spending will change, right? Or will it change? Because the assumption is that if you have more money, you don't necessarily buy the same things. You will move up the value chain and you will consume things that you didn't yesterday. Does that take place, and what are the implications of that?
This, if you ask me, is the nub of the issue. This is what's, for viewers and listeners who are listening to this is the crux of the matter. And it is that, if you look at the average age of India today, it's basically 28 years. At 28 years, what did we do? We probably finished education and just got into work. And that was the time when maximum amount of aspirational spending kind of, started to happen. So to put this in context, to put this in numbers, I would say that if I put all of these together, the spending in India will go anywhere from 2.4 trillion rupees or dollars to 4.2 trillion over a matter of 6 to 7 years.
$2.4 trillion to 4.2 trillion over what period?
Over 7 years, over the next 7 years.
From this point?
Yeah.
That's massive.
Correct. So then the question becomes that where will this spend get to?
Yes.
I would argue there is certain level of spending which gets into your eating habits, and the food, beverage and tobacco, which is what we call in traditional language, is kind of almost constant, increasing at the rate of inflation. So that's not going to go up significantly. But what will go up is basically kind of entertainment spend, which is kind of going to hotels maybe a little more than what it were earlier, eating outside in the form of quick service restaurants more than earlier, maybe upgrading the house where one lives in, and there could be multiple areas. These are just 3 examples.
But before we get to that and all of these possibilities, I'm curious about the number and the projection. What is that based on?
So this is a study done by one of the real estate agencies who studied the spending pattern of India and how that will evolve over a period of over the next decade or so, and found that as our per capita GDP goes up from $2,500 where it is currently to basically kind of double over the next 6-7 years, where is the spending is likely to happen, and what is the quantum? This is the number that came out
over
of that.
Over the next 7 years.
Over the next 7 years, indeed.
And we're talking about a considerable increase also in the what we call now the middle income group, because a lot of people are moving up the value chain there.
Absolutely.
As well. So let's get back to where people are spending, right?
Yeah.
So, and I'm fascinated by the concept that you just described, which is when people are early on in their career, they suddenly get access to capital, and so therefore they're going out and spending certain things, and
Absolutely.
they think about saving later. It was always that I didn't have enough money for me personally. So I don't know about other people, but what are the implications for each group? I guess it depends on what people are doing and what stage of life they are at. And what the implications are. Is that the way you've looked at it?
Yes, and of course, the implications would be different for different age group. But if your starting point is the average age of India, so think about an average individual who is 28 years of age, and how would they spend? You won't be significantly off the mark. So the themes that they would kind of go about and kind of spend on would be clearly things like premiumization. Instead of maybe I don't want to name the model of the car, but maybe a basic model of the car to an SUV.
Sure.
So that's clearly an upgrade.
A hatchback to an SUV.
A hatchback to an SUV would be one clear example of the same. Maybe from 1 BHK to 2 BHK or 2 BHK to 3 BHK, or basically larger houses, so to speak. In the meantime, a lot of people would be migrating from villages to tier 2 cities, tier 2 to tier 1, done, and likewise. So the real estate could be one of the beneficiaries of the same as well. And finally, the Gen Zs, which everybody is so proud of, quick commerce as an emerging theme, the new way of consumption might expand massively and benefit significantly, and will actually be a catalyst towards higher spending, because here it has kind of brought down the barriers to consumption by significantly at your fingertips.
Okay. Of course, there are detractors and people that criticize things. Maybe you can call them cynical. Maybe it is for good reason. I won't judge. But there is one theory that says that a large group of these people that are going to get more money will utilize it maybe on foreign trips. And so therefore, the objective, which is to give more money to people and have them spend, is defeated if they're going to go outside and spend it. Do you think that that's likely?
It's one of the possibilities. So with such a large population, with such a big segment of population, different people will do different things. That's why I named out at least 6 or 7 of them. Some of them might go on foreign trips, but trust me, the tourist destinations in India are also getting attractive, as you can see in Mahakumbh, which is a religious as well as a tourist destination from various different perspectives. So I'm sure, people do various things, but net-net, if you look at historical examples, the spend in India has significantly gone up in day-to-day life activities. And hence, from that perspective, while some might migrate to other countries, but a lot, I'm sure, would remain within India and will get spent in different types of activities.
Because the number of people we're talking about is quite significant.
Exactly.
Right? And not all of them are going to go to Indonesia, maybe.
Exactly.
Right? So, but let's talk about a couple of these aspects. Let's first talk about housing, because you're talking about at the far end of the spectrum, at the higher income levels, if you have 2 incomes in the household, if they're earning above 24 lakhs each, which is necessarily a minority and people are moving towards that, but you're talking about 2.2 lakh rupees saved over the course of the year, which is a considerable amount of money. Do you think that that would push the needle and get people to spend on a house, or do you think that it may not, but then it'll increase the propensity to spend on something like a house?
So 2 bits. One, I think that level of that salary income that you're talking about will probably first migrate from rented accommodation to owned accommodation. That itself would be a kicker with regards to from a real estate perspective, and then kind of maybe a slightly higher income bracket would probably move from a smaller to a larger accommodation overall. Certainly, what we see is that real estate is one of the or second or third most important areas people want to save for. So I'm sure certain part of the population would kind of go into this, but I see this more as an upgrade opportunity, where people kind of from rental to move to kind of owned house, or from maybe a smaller house to a larger house. Something that we have been seeing anyway will probably get accelerated by this.
So the reason I asked you this question is because you've seen premiumization even in the housing space, and at least in the urban clusters, right? You're seeing that your ultra luxury, there's tremendous demand, but there's not so much in the way of affordable housing that is taking place. Does that change? Do people suddenly go out and say, okay, you know what, I have more money, I'm going to go out and buy a house, even if it takes me about 15, 20, 25 years to repay it?
Yeah. So I think this will take a bit of time to kind of come through. I think there are 2 aspects that we talked about. Eventually what will happen and what will happen at what period of time. My sense is first would be kind of, low ticket spending.
Sure.
To kind of, maybe taking a few holiday destinations or eating outside. And then over a period of time, this would lead to, particularly in the segment of the population which is at the moment witnessing a slowdown, which is urban consumption. It'll ultimately kind of lead to a better housing standard for them, maybe reduce the distance to work, and those kind of things will actually start to come in. The point I'm trying to highlight is in the time series of when things will happen, first will probably come the low ticket or the mainstream consumption, then will come the housing kicker, which will happen over a period of a year or 2.
Okay, so therefore I'm trying to gauge the way that you're responding to this and how you are building your own portfolios, because as a fund manager, obviously you have to be ahead of the curve and you have to see these things coming. Based on the assumptions that you've made, and the expectation that people are going to go out and spend on the smaller ticket items, and that's going to get a fillip. Which pockets are you focused on to take advantage of that?
Sure. So I think two parts to this. One is what we call as core. If you sort of think about consumption and put them into three buckets. One is the core consumption, which is basically the staples, what we eat day in, day out. That ain't changing too much of a lot, right? There's probably grow at the rate of inflation or maybe slightly lesser than that. What's interesting is the emerging consumption or the new discretionary areas, which is where we would see a lot of demand coming through. Low ticket to high ticket, from maybe eating out to maybe TV, fridge, consumer electronics. That's the range that I'm looking at. Would probably see somewhere in FY26 as more income kind of comes through them, benefit from them immediately from this. And then thereon would be the real estate benefit that will kind of start to come in. So first, maybe consumer discretionary, and then real estate in that order. Might I want to add on top of that something which has not yet happened, but should there be interest rate cuts, which we certainly expect through the course of the year, then that'll add a bit of a fillip on top of this, particularly when it comes to real estate.
Okay. So let's talk about how you're determining which company stands to benefit, right? Because ultimately you're talking about a space that traditionally has attracted higher valuation multiples in the consumption space, because these companies are so front-facing, they're known by so many people, and as a result of which this growth story in India has been talked about for quite a bit. The expectation that there's a growing number of people that will consume these things. It's a discovered opportunity. So how do you go out and choose the companies that will give you the most bang for your buck over the course of the next 5-7 years?
Sure. So I think, first of all, consumption has not really been the area where most people have gone gaga over in the last 3-4 years.
Yeah.
It's been more manufacturing.
Been soft.
Yeah, it's been manufacturing. So in that context, if you look at some pockets of consumption, not everyone, but some pockets of consumption, I would argue the valuations there are lower than what you've seen in the last 5 years. So that's a good starting point. Second, if you think about the earnings drivers for the companies in here, all that we talked about in the last 15 odd minutes go on to show that at some point, it may not be immediate, but maybe in this 6, 9, 12 months time basket, we will see some sort of earnings improve for these companies, for consumer discretionary companies over a period of time. As that stands to happen, we gradually see earnings improving in the sector. So usually, valuations being less than median, earnings improving is a good place to start, and that's probably the reason why we called out consumption to be the dark horse of 25 when we started the year. Of course, the budget put a bit of a fillip on top of that. So just to close this out in terms of how do we go about selecting companies, following the same framework, wherever valuations are lower than what they have been in the past 5 years, and we see earnings improving over the next 1 to 2 year time bucket, we don't mind the first 5-6 months, which will be weak anyway. But as that improves over a period of time, slowly but gently, we'll kind of go into those stocks or areas which will mostly be in consumer discretionary as part of our portfolios.
Okay, we've seen disappointing earnings, Joe.
Yeah.
Though, Trideep, and I take the point, 5 months is what you're comfortable with, but you must have some estimation or some idea of what you think earnings will look like, which is why you're basing these assumptions and you're making these decisions. What would you be comfortable with? What's your base case assumption, and what would you be very happy with? What would you be disappointed with?
Right. So I think, first of all, to set expectations right, nothing is going to change immediately.
Yes.
And when I say this, we are obviously seeing the December quarter numbers come through, which shows a weak festive demand from a consumption standpoint. March quarter will not be significantly off.
Sure.
Starting June quarter is the first time when we will start to see some signs of it. So for me to count on it, the first chance that I would see would be festive season this year. And the spend that happens that time, and hence maybe Q3 this year is when we would look to see some
calendar year.
When we would look to see the fillip with regards to consumption demand starting to or showing signs of coming back. That's from the urban consumption side. But also mind you that starting with monsoon last year, the rural part of the economy is gradually on the mend as well, which will also start to show up in the numbers sometime in back half of FY26. These put together, my sense is you would start to see double-digit earnings growth come through towards starting the back half of fiscal year 26. A low double-digit is something that I would kind of look to see happens. If it turns out to be on the higher side, we'll happily take it.
That would be a bonanza.
That would be a bonanza, exactly. But at the moment, from a point of view of growth rates which are sulking, this is factual, so Hindustan Unilever reported a volume growth of 0%. And as we go towards the back half of next year, we would certainly see even that growth rate improving from where we are. And that means
also because of the low base.
Yeah.
Also because of the low base.
Correct.
But you mentioned interest rates. Looking at this, one would assume that if we're talking about an increase in consumption, you would automatically have an increase in inflation, or at least certain aspects that will be inflationary. And so from that perspective, for a central bank that is targeting inflation, it becomes hard to justify a dramatic reduction in interest rates. Do you think that that will be a bit of a dampener, or do you think that the base case assumption as it stands of a 50 basis point rate cut in this current cycle will still take place?
So I think all that you said will be true, yet 50 basis points might actually just about happen. Okay. So I think, and simply because we are sitting on a base of high inflation, on that base inflation will look incrementally coming down, even though at the base level the incremental inflation would be on the higher side. But still, Y on Y, it will start looking a little lower, and that will probably set the tone for up to 50 basis points rate cut this year, this calendar year, I mean. Also, given what happened in the budget, where I think the Honorable Finance Minister showed that we are fiscally responsible with fiscal deficit target at about 4.4% of GDP, it leaves the room for monetarists, for monetary policy to be a little loose because you are fiscally tight. And hence, I think a combination of dropping inflation and fiscal tightness makes me feel that up to 50 basis points rate cut is certainly on the cards this calendar year as well.
Okay. Rate the opportunities as you see it right now, with the budget now in our rearview mirror, heading into the next financial year and possibly the next 2 or 3. First, consumption. 2, infrastructure. 3, defense. 4, manufacturing. How would you rate them? How would you rank them, and why?
So I would answer this question slightly differently. Before we got into the budget, consumption was nowhere in the picture. It was all about the second 3 that you talk about. Now, these 2 are the 2 balances of the scale. So now all of these are on even keel. In fact, that is the hallmark of Modi 3.0 is what I wanted to bring out. That Modi 2.0 and Modi 1.0 was all about Capex and hence manufacturing-led growth. Modi 3.0, it's a balance between manufacturing and consumption. That's the difference. And hence, now consumption clearly gets up the scale. That doesn't take the sheen away from manufacturing. We are still talking about a 10% growth. I think the valuation excesses needed to correct on that, which is in the process of getting corrected. And over time, it's a more stock pickers market where opportunities are there in manufacturing as well as consumption. Now we have to do the hard work to figure out where the valuations and growth are more in sync. So not an easy market anymore, but a wider market for sure.
As somebody that is, and this is my last question to you, since we're talking just about a week after the budget, or less than, as somebody that has seen so many budgets, is this the budget that you went to sleep after with the biggest smile?
I think probably from a consumption standpoint, yes. This is I think to me, if you really ask me, this budget kind of nails the nub of the issue, which was basically a slowdown in urban consumption. And hence, it's a fairly balanced budget if you look at it. Only Capex budget would have probably pleased some part of the market, but left a whole lot of other part unhappy. And I'm happy that it has left a more equitable sort of opportunity for different sets of investors as well as people on the market. So yes, happier than what I was before.
It's been an absolute pleasure having you in the studio. Thank you so much for speaking to me.
Pleasure.
And that brings us to the end of this edition of MoneyWise. Tell us what you think on any one of our social media platforms, and do stay tuned. There's lots more coming up over the course of the day. This is NDTV Profit.
And the reason for the success of the restaurant this magnitude, because people felt भाई का जिगर है, business नहीं है इसमें. This is our time to not bend down to their accents and their foods and glorify it. It is our time to lift our own cuisine, our own culture.
1, 2, 3, 4.
Toughest person to cater for, to cook for, President Trump, Prime Minister Modi, या शाहरुख खान?
मेरा दिल जिसके पास है, शाहरुख खान.
You tweeted recently after President Trump won the election that can I make something for you?
So एक तरह की खिचड़ी है जिसमें आप मिक्स्ड मिलेट्स डालते हैं.
आपको ट्रम्प साहब को खिचड़ी खिलानी है?
हाँ, तो खिचड़ी खाना नहीं है.
What is the one vegetable you will never eat?
मैंने मेथी खानी बंद कर दिया है.
आप करेला, बैंगन ऐसा?
I love करेला.
Is considering to increase the custom duty on the imported finished goods ranging from consumer electronics to medical devices.
And to rectify inverted duty structure, I propose to increase the BCD on interactive flat panel display from 10% to 20%.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide?
Welcome, you're watching The Big Question. I'm Tamanna Inamdar. We're talking about Delhi elections today. The political battle has never been more intense. After a high-octane campaign filled with barbs, blame games and AI spoofs, the first big election of the year is upon us and the stakes couldn't be higher. While a resurgent BJP is trying to make a comeback after a 27-year hiatus in the national capital, so is the Congress, which is eager to reclaim its lost ground. But it is the Aam Aadmi Party and Arvind Kejriwal for whom the Delhi dangal is a do-or-die battle. The question on everyone's mind is that can Aam Aadmi Party script victory for a fourth consecutive election? With Kejriwal's arrest in the Delhi excise policy scam, along with other top leaders of his party like Manish Sisodia, Aam Aadmi Party's image of a corruption-free alternative has been dealt with a severe blow. These elections will also be a litmus test for Kejriwal as he battles corruption charges, faces anti-incumbency after being in power for 2 straight terms, and I would go as far as to say it's an existential battle for Aam Aadmi Party, as Delhi is now a stronghold and any defeat would dent the party's national ambitions. On the other hand, the BJP is looking to break a 27-year hiatus. It's a prestige battle for the BJP and Prime Minister Modi, as the party hopes to win the national capital, having won it only once in 1993, despite consecutive wins in the Lok Sabha elections, all 7 seats, in fact, in the last election. In an effort to counter the Aam Aadmi Party, the BJP has pulled out all stops to woo voters and has announced a host of freebies ranging from cash sops for women, free scooters for the youth, among other things. It's also promised to continue all schemes started by the Aam Aadmi Party, including that of free water and electricity. For the Congress, the elections is an attempt to regain their past glory. The party has almost been wiped out from the capital's political scene. Its vote share slipped to 4.3% in the 2020 assembly results. So the big question that we're asking today, which way will the Delhi voters swing, and can Modi trump Kejriwal in Delhi? To speak on this, I'm joined today by Aarti Jairath, political analyst. I'm speaking today with Amitabh Tiwari, political strategist, and Sanjay Kumar, professor of CSDS. Welcome to all of you, and thank you so much for joining us on The Big Question. So a couple of things that we're doing here, and to tell our viewers as well, we are not taking into consideration exit polls while having this conversation, simply because we don't know what these polls will say. We don't know whether these polls are going to be right or not. We're looking at the question of Delhi in the context of the national picture and how crucial it is for the key participants. It's also a mood of the nation in a sense, isn't it? Let me start with Aarti Jairath on this point. Why Delhi is what so crucially, despite it not being a big contributor to seats in the Lok Sabha, it's not going to make or break things for the government at the center, but it's important because it's giving you a sense of what India is feeling, isn't it?
In a way, yes. Delhi is a kind of microcosm of India because it attracts migrants from all over, north, south, east, and west. So from being a traditionally a Bania, city, which then got overrun by refugees from Pakistan and became a predominantly Punjabi city, Today, it's full of people from UP, Bihar, all over South India and other parts of the country. So therefore, it is a microcosm of India. And yes, it does reflect, I think, in some sense, the mood of the nation. But remember that if, I don't think you can extrapolate from the Delhi results. You can extrapolate into national politics from the Delhi results. Because as we've seen in the last two elections, while Delhi voted overwhelmingly for Aam Aadmi Party in the assembly elections, the people of Delhi voted overwhelmingly for the BJP in the national polls. So, I think it would be wrong to really extrapolate this and make and draw conclusions for national politics. Whereas, I mean, yes, it is a crucial battle. I think you summed it up very well at the beginning. What are the stakes for all the political players here? And so now let's see what Delhi decides.
Let's see what Delhi decides, and it's crucial battle for all players, more crucial for one side than the other. Amitabh Tiwari, I opened by saying that, of course, prestige for the BJP, and the Prime Minister has been front and center of the campaign this time. I mean, many people, when they saw the budget announcements, looked at it in the context of Delhi, even though everyone in those tax brackets is rejoicing. But on the other hand, for Mr. Kejriwal, it's a question of political survival.
Yeah, essentially, of course, it's a battle for survival for AAP, prestige for the BJP and relevance for the Congress party. See, the Aam Aadmi Party has become a national party by starting a base in Delhi. So Delhi is the place which has provided it a base, and it has given it a face also. In terms of it has been able to implement or showcase its famed Delhi model of governance from the state. And riding on the Delhi model of governance, it was able to spread its wings and win Punjab as well. So Aam Aadmi Party is one of the only, I mean, it is a national party today, but it is only one of the only parties other than BJP and Congress party, which is not tied to any regionalism. So its existence or its creation was not bound by any regional sort of a movement. It was created out of an anti-corruption movement. So what it does is that theoretically, it has the capacity and capability to spread its wings across the country. The leader, which is Arvind Kejriwal, speaks in Hindi, and Hindi is understood by more than 50% of the population. So in a way, and he has good oratory skills also. So in a way, the party has the ability to spread its wings nationally, whereas other regional parties and leaders like Mamata Banerjee or a Stalin or a Revant Reddy or a Naveen Patnaik were tied to their perimeter of the states because of regional considerations and the language barrier. So that is why it is Aam Aadmi Party is also a party which is seen as a threat by the BJP, because after Congress party, if any party can give it a national level competition, it is the Aam Aadmi Party. So
can I counter that and I ask, is it really, if this theory was abounding, was it not proven time and again with what we've been seeing in the Lok Sabha, the attempts of the Aam Aadmi Party to go beyond Delhi and then get stuck at Punjab? Is it really the next big counter as a possible national level opposition to the BJP?
It is, because there is no other party which has or which is in power in two states except for Aam Aadmi Party, Congress and the BJP. And its ability to spread its wings outside is high because of the language quotient which I am referring to, and because it is not tied to any regional dynamics. It's not born out of a regional movement. It's born out of an anti-corruption movement. Of course, it is just a 10-year-old party in that sense, a 12-year-old party, correct? So from a long-term perspective, with the decline of the Congress party, there is a vacuum in the opposition space, and Aam Aadmi Party is well positioned to occupy that space. However, if it loses, as you are saying, then the core of the Aam Aadmi Party, the core philosophy of the Aam Aadmi Party, out of which it was born, which is the anti-corruption plank, then comes into question. And then people will start questioning whether Aam Aadmi Party is like any other arm party. Correct? And that is what the BJP is trying to establish or give a message through this election that Aam Aadmi Party is like any other party, and then what happens is that the Aam Aadmi Party would have to go back to the drawing board.
Right.
And
No, so I'm not saying that any side will lose. Just to clarify there to what you said, Amitabh, I don't know who will lose or who will win. We'll have to wait
I'm
and
also
see.
not saying, I'm saying if that happens.
No, if it
then-
does. As the stakes are high, and who are they higher for was the question. Sanjay Kumar, let me come to you with that point. This is, and obviously as a prestige issue, obviously BJP wants to win Delhi, a huge upside, but the downside for the BJP is not as much as for the Aam Aadmi Party if there is a loss.
Tamanna, I agree. Suppose BJP loses this election, yes, it will be another loss for BJP. It will be a kind of a setback for BJP because they have put in a lot of effort. They want to, defeat Aam Aadmi Party in the city of Delhi. But from Aam Aadmi Party's perspective, I think it's far more crucial for Aam Aadmi Party because a defeat in Delhi would mean a huge challenge for the existence of the party. Yes, party will still be in power in Punjab, but I think if Aam Aadmi Party gets defeated, we might see some defections. We have already seen some of the MLAs who were not given ticket, who were denied ticket. They shifted to BJP just before election. But if Aam Aadmi Party loses this election, not in a position to retain power in Delhi, we will see more defection. We might see more defections in the party. So it is about the existence of Aam Aadmi Party, the basic survival of Aam Aadmi Party, and that is why it is more crucial for Aam Aadmi Party than BJP.
Let's look at the other point of it. What really are the BJP's chances? And I'm not referring to polls, pre, post, anything, just basis on what we've heard and seen. And I'm coming to Sanjay Kumar first with this question. The IT relief that was announced recently in the budget, a large middle class section in Delhi. Is the free electricity, free bijli, free pani, free healthcare, free education pitch still working in Aam Aadmi Party's favor? Does BJP have a real chance, an upper hand this time?
Does BJP has a real chance? Yes, BJP has a real chance. I'm now doubting that the BJP doesn't have a chance. But when you are referring to, on one side, raising the slab of the IT, income tax in order to woo the middle class, and the free bijli and pani, I think Delhi's politics is slightly different from state politics of other states. Delhi politics is sharply divided in terms of class character. If we look at the Delhi voters in terms of four classes, the poor class, lower class, middle class, and the upper class. The poor class and the lower class have voted for Aam Aadmi Party in a huge way in 2020 and 2015. I think my own sense is that they're still standing behind Aam Aadmi Party in a very solid manner. There is a disenchantment among Aam Aadmi Party among the middle class voters, and that was even before the announcement was made in the budget. So I don't see budget announcement as a big game changer because Aam Aadmi Party was already not very popular among the middle classes. Middle classes were getting disenchanted, especially after the corruptions of allegations, the charges of corruption. So I think it will make an impact, but it is not going to be the sole game changer if at all BJP wins this election.
Okay, so not the sole game changer. Perhaps that's why from end to end you've had the schemes focused on women. You've had the schemes and the BJP saying we'll continue the schemes that the Aam Aadmi Party has put out, and then this middle class sweetener as well. But I'm wondering, and Aarti Jairat, this question to you, does the woman voter hold the key once again? Competing promises for the women voters in the form of direct benefit transfers from all parties in the fray.
Well, Tamanna, I think Delhi is one of the few places where actually the male-female ratio is in favor of the males. So the number of women voters is actually less in Delhi than in some other parts of the country. Having said that, women have voted largely in favor